Studio here. We're streaming live on YouTube as well. Looking at the markets here, got a little bit of a lift here. S&P 500 up a quarter of 1%, so that's a good stuff. NASDAQ up about 0.4%. Yields come in slightly. 10-year Treasury in about 2.5 basis points. Now 4.09% on the 10-year. WTI crude oil, it's up 1.6%, just under $83 per barrel. We're going to be paying more at the pumps, I guess. Gold, a little bit off today, just slightly, $1,941 an ounce. And Bitcoin also off just slightly, just above $27,000 per token. Let's head down to Washington, D.C. right now. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Supreme Court Justice Clarence Thomas said in a new financial disclosure report that Republican mega donor Harlan Crow paid for his travel expenses for 3 trips last year, including private plane rides and a stay at Crow's Resort in the Adirondacks. The disclosure covers the justice's finances last year and marks the first time in at least 2 decades that Thomas has listed travel funded by the Dallas real estate developer. Thomas says he also sold 3 properties to Crow in 2014, the first time he's included that sale in his financial disclosure reports. The response to what is now Tropical Storm Idalia has forced President Biden and Florida Governor Ron DeSantis to set aside their political differences. Bloomberg Government's Zach Goen.
Any federal government and state officials, Democrats and Republicans, during natural disasters, it tends to be a moment where you see bipartisan cooperation. But the real question, I think, becomes whether Congress signs off on additional disaster supplemental spending for storms like this, as well as the recent wildfires in Maui.
Bloomberg Government Zach Cohen reporting from the nation's capital. The White House calling on Congress to pass a short-term spending bill to prevent a government shutdown. The government will run out of money by the end of September unless Congress does something. Researchers at Stanford University have found genetic links between Alzheimer's and Parkinson's. Dr. Emmanuel Mignot is one of the senior authors of the study. He says with the genetic link and some time, they may find a way to prevent both Alzheimer's and Parkinson's.
Maybe we can garner the strength of the immune system to kind of clean our brains and maybe prevent the development of these diseases through vaccination.
The research includes 100,000 Alzheimer's patients and 40,000 Parkinson's patients. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Paul and Simone.
All right, Amy Morris, thank you so much. We appreciate it. Simone Foxman, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio. Coming up in the next hour, we're going to check in with one of the smarter folks I know in the media space, and that is Mark Douglas. He's the CEO at Mountain. We're going to talk streaming, streaming wars, all that kind of stuff. Advertising, how big is advertising in the streaming business? Because you're seeing stocks like Disney just can't get out of its own way as they, spend so much money on their streaming businesses. It's a big, big challenge for the media space, and we'll check in with Mark Douglas on that. But kind of in the same vein here, Simone, Taylor Swift just continues to mint money. She's finishing up her, I guess, the first leg of the North America tour. Then, I guess, next year she goes to South America and Asia to bring the show there. But in the interim...
But first,
you can see her in theaters.
Yes, as of October 13th, AMC is going to show the movie of her Eras tour. They announced that this morning.
Have you been to the Eras tour show?
I have not,
okay.
And I've desperately wanted to go. Apparently, my husband was trying to buy me tickets, but they were hundreds or thousands of dollars, and much without travel.
Yes.
And we remember the widespread ticketing issues. These tickets, though, $19.89 plus tax.
Oh, okay.
So
for the
theaters,
a little play on her album 1989. Okay, cool. My daughter went, but she goes to everything. She always gets tickets. I don't know how she does it.
Lucky.
A big show opens on Broadway, boom, she's there. So I don't know how it happens, but that'll be good. Shares of AMC, which is kind of a meme stock. It's all over the place. It doesn't really trade on fundamentals, but it is up about 5.5% today. But the stock is down 67% year to date. Again, kind of a meme stock, and there's a little bit of an arbitrage there between the stock and then the preferreds, the apes, as it were.
But I think the message: Taylor Swift continuing to power the U.S. economy.
Exactly. I mean, God, you got Anna Wong from Bloomberg Economics calling out Taylor Swift and Beyonce. You know it's big. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Joel Levington. He's the Director of Credit Research at Bloomberg Intelligence. He's got a really smart research note out talking about Tesla. Now, Tesla may benefit from potential labor troubles at Ford and GM and Stellantis, so we'll check in with him. And as I said, Mark Douglas, he's the CEO at Mountain. We're going to talk streaming wars with him. He's one of the smarter folks out there. And Barry Ritholtz, we talked to him because it's Thursday. We talk to Barry Ritholtz every Thursday. We have no idea what we're going to talk to him about, but I can guarantee it'll be very good 7 minutes of radio. But first, let's kick things off with John Tucker. More good radio for you right here with the Bloomberg Business Flash.
All right, thanks, Paul and Simone. In the final trading session of August, we have stocks. They are higher. Treasury yields slightly lower. We had that key inflation data released today. Services inflation, when you strip out housing and energy, jumping about 0.5% in July. So that's the biggest advance in that measure since the start of the year. Meantime, Jay Pulaski, the Chief Investment Officer at TPW Investment Management in New York, says money will continue to flow into stocks.
The market is focusing on an economy that's not going to go into recession. The Fed is effectively done, and earnings are going to grow, and therefore people feel comfortable putting some money to work.
Right now, the S&P 500, 11 points higher. That's up 0.3%, 45.26. Dow Jones Industrial Average is up 80 points. That's a rise of 0.2%. 34,967 there. The NASDAQ 100 is up 77 points. That's up 0.5%. The 2-year yield at 4.87 right now. So that's kind of steady. Among some of the individual shares on the move, 1-800-Flowers gaining as much as 14% better than expected. Free cash flow for 2024 is their projections there. So I have used the service on a number of occasions.
Sure. I like the fact that they keep the name 1-800-Flowers, even though all their business, I would think the majority of their business comes in with over the internet. But they keep the name.
Yeah.
Isn't that cool?
That is.
Yep.
Can you actually, well, let's try 1-800-Flowers.
All right, give it a shot.
Yeah, I think it comes up.
Send something to
John's still got a rotary phone. You know, you can use
Jess, maybe.
Exactly. John Tucker, thank you so much. Appreciate that as always. Jess Metten joins us here. She's going to talk a little stocks, but it's Simone Foxman here with me, Paul Sweeney. We're here live in the Bloomberg Interactive Broker Studio. We're streaming live on that internet thing. Go over to youtube.com. I think there's a www. Somewhere in that thing as well, and search Bloomberg Radio, and you can find us there. It's good stuff. Jess Metten joins us. She darkens the door. Talk about the stock market. Got a little bit of green here on the screen, and Jess, what are you looking at here?
Well, you and I were talking about Dollar General earlier today. We do know that stock still under pressure, down about 16% on pace for its worst day since June 1st. Obviously on the back of, we did see it cut its profit forecast, but I actually wanted to turn the attention because after the bell, we will be hearing from Lululemon. That's ticker symbol
Huge fan.
LULU. That stock year to date is up almost 20%.
It's athleisure, guys.
Yes, athleisure wear. It's up another 1% today heading into those results. So what's key here is we've seen a lot of sort of mixed spectrum when we've talked so much about the retail space, Paul, as you do know. But when it comes to Lululemon, they've really continued to deliver. And so the question is, how much are people going to still be willing to pay for, if you're thinking about some of these $100 sort of athleisure yoga type
What if John
pants?
Tucker has any Lululemon in his closet?
Yeah.
I was in a Lululemon. I purchased Lululemon pants for
There we
it was
go.
well over $100.
What did you
And,
like about them?
I didn't like anything about it. I didn't want to be there.
You didn't like it? Why'd you buy it?
My daughter dragged me in.
There we go.
And I was told by the salesperson when I had sticker shock that, these last forever.
They last forever.
I haven't seen them.
So
I don't know
Paul,
what
it sounds like
happened to
you also have some Lululemon
Nothing.
items.
I nothing.
You have nothing.
I'm looking at the stock here, though. I'm using the comp function, COMP, that Matt Miller likes so much.
Yes.
Over the last 5 years, Lululemon is up, almost 20% on a compounded basis. Well ahead of the S&P to like 11.
You're looking at William Blair analysts looking at their top and bottom lines. They are expected to still beat on that just because of especially growth in China. That has continued to be a big driver there. And so they're expecting that streak of double-digit sales growth will continue. And they do expect gross margin should improve to about almost 60% from about 57% last year. Wow. And a lot of that is really geared toward air freight costs too. So that's going to be a big name coming after the bell, so it doesn't stop with those retail earnings. And I know we've talked a lot about other names, like we did hear from Salesforce after the bell. Y'all talked a lot about AMC, right? And that stock being higher tied to Taylor Swift. But I'm also looking about what's happening with packaged foods companies. So particularly Campbell Soup and Hormel, because this is a big tell on the consumer and some warnings that Campbell actually had back in June. They were signaling they weren't quite sure how much further they could continue to pass on cost increases to consumers. You take a look at this stock, ticker symbol CPB. That stock's up about 0.2% this morning. So they did report earnings. They did actually, their profit did match those expectations. Sales also topped and the prices did jump about 10%. So when you do think of Campbell's, obviously their namesake soup brand, but also brands like Goldfish. I'm a big fan of Goldfish. That stock is actually down about 26% year to date. So CPB is the ticker there. And we do know Staples, obviously last year, when you think about the divergence between what was happening with discretionary versus the staple sector, the flip reverse of that has happened this year, where clearly you have seen discretionary really outperform, not just geared toward what was happening with certain retailers, but also home builders on a tear this year too, that it has been really helping that particular sector. But that has been something that analysts have been watching to see how much further those cost increases could be passed on to consumers. So you actually are continuing to see a stock like that continue to do it. And then we do know just a couple of weeks ago that company did announce that it would buy Sovos brand. So that is the maker of Rao's pasta sauce for over $2 billion. So that deal is actually set to close by the end of this year, this calendar year, and could add as much as 6% to the top line. And that's based on some numbers from your buddies at Bloomberg Intelligence, Paul.
Yeah, and I think what's really interesting when we look at the earnings out after the bell yesterday with Chewy, before the bell today with Campbell's Soup, Dollar General, and then we're looking ahead to pretty positive expectations for Lululemon. You just really see the divergence between that high income and that low income consumer. The low income
interesting too,
really under pressure.
Dollar General, when you're looking at that, kind of losing out to some of its rivals if you're thinking about what's happening with Dollar Tree, but then also Walmart playing a big part of that too. I mean, Walmart has the world's, when you're thinking about the grocery sales, such a huge, massive component in that. So that's something that has been kind of taking away from a company like that. And also I wanted to lastly add just Hormel Foods. So maker of Spam, ticker symbol HRL, that stock is down about 15% year to date. Today it's down another 2% here, on pace for its worst day since June 28th. So it said it is still sticking with its strategy to expand in China despite some of this poor demand from some of its food products there. But this is another company that is getting pressured this morning.
Based in Austin, Minnesota. They employ 20,000 people.
I almost had to do a double take when you said Austin.
Yeah, me too. Austin, Minnesota, and they employ 20,000 people. It's got a market cap of $21 billion. Hormel does, and the stock has been under pressure. It's off about 25% year to date. So a little bit of a challenge there for the stock of Hormel. And,
particularly those international sales too.
But what interestingly,
I take it back. Just correction. Stock's off 14% year to date.
Interestingly, though, like Hormel, Campbell's Soup, Brown-Forman, the maker of Jack Daniels, and Tyson, among the very few consumer staples companies that actually missed their earnings estimates. Yeah. For the most part, consumer staple products companies have
kind of make their numbers.
Yeah,
that's why they're staples. So anyway, Jess Metton, thanks so much for joining us. Jess Metton, she covers all the stocks for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. All right, we get some smart research coming out of the folks at Bloomberg Intelligence. Joel Levington, one of the smarter folks we like at BI. He's a director of credit research, so he better be good. But he's got a nice note out here on Tesla. And it's a little bit different twist here, and Joel covers the credit side of some of these industrial companies. He joins us live here in our Bloomberg Interactive Broker Studio. Joel, what do you think about Tesla here? Because our friends in Detroit, Ford, GM, Stellantis, I think they've got some labor problem, don't they?
They have a massive labor problem coming up. There's a strike with the UAW that's going to be set for September 14th as they work through their contracts. Expectations are that pricing could go up 30 to 40% on their labor costs, which creates an opportunity for a low-cost player like Tesla to come in and continue to price down. Paul, the average Tesla price is down about 37% this year already. And if you
really,
even if you look at consensus estimates just on their cars at the beginning of the year, it would have the market was expecting about $54,000 a car. It's down to $46,000. So they're really applying the pressure on these other old line ICE engine manufacturers to really step up or step out, and you're starting to see some of the stepping out already occurring. That might be exacerbated by a potential strike.
What's interesting with the strikes, though, is if the auto workers are pretty successful, then doesn't it create pressure on Tesla's own workforce to say, hey, they got a good deal. Maybe we'll get a good deal if we, resist the anti-union efforts of Tesla and go ahead and organize.
Yeah, 100%. And I would start with a base of if labor costs go up 30 to 40% at Ford. At a non-unionized plant like at Tesla, if it goes up 15%, you're still ahead of the game, at least on a relative basis. And you're already very far ahead of the game. You have double the margins that you do out of Ford or General Motors relative to Tesla. So it just kind of further expands that difference.
Has there been any move to unionize Tesla over the years?
No.
Is there any expectation that will happen? UAW is saying we're just not going to deal with it?
I don't know if they're saying that we're not going to deal with it, but maybe this isn't the right moment for that to occur.
My impression is that Elon Musk's been quite resistant to it.
Yeah, but so what? I mean,
UAW. And you look at kind of the labor agitation that's been happening across the country between UPS coming in with a fantastic deal, pilots getting good deals, all that sort of stuff. You do wonder if there will be an uptick. But Tesla's had as well some issues with its cyber truck. I wonder.
There is no truck. I mean, how can you be an EV? How can you be an auto manufacturer in the U.S. without a truck?
Well,
they've been trying. Truck gal.
I would love a truck. It's
Queens?
fun. It would be great, but I don't have a parking space, so
okay.
Trying to find a street parking truck. However, it would be cool looking. But we have a story out from yesterday. Tesla's Cybertruck is long on hype and short on specifications. And how meaningful is this to the company overall?
It's not. I mean, the Cybertruck is very, very niche. I know sometimes it gets compared to the F-150.
I drove the F-150 Lightning. Awesome.
It's a machine.
Yeah.
It is a very big machine, and Ford is dominant in that area and will stay dominant. The Cybertruck is a niche product, and if you look at consensus, that's exactly how they view it. It's not meant for the contractor. It's meant for probably a high net worth male that wants to be able to make a statement, I guess.
How are the bonds of the big automakers? How are they trading these days? How concerned are they about? I guess first, just this transition from internal combustion engines into electric. Like if I were a stockholder, I wouldn't want to get anywhere near these names. How about the bonds?
Yeah, you're totally right, Paul, as always. The stocks have really sold off over the last month or so if you look at Ford and General Motors, but the bonds have really held in relatively well. Maybe the CDS is at about 20 basis points.
CDS is credit default swaps.
Yes.
I learned that in the great financial crisis. I didn't know that before.
You're on point again. So they've held in pretty well relative to where the stocks are at. And I think that's largely because if you look at what the raters have said, they've said, if you go back to 2019 when the last agreement came out and there was a 6-week strike over at General Motors, they've already said, like, hey, a situation like that would not lead us to change our ratings. And so that's a pretty fair and long kind of expectation to have. In that case, back in 2019, it cost GM a little over $4 billion, just to kind of put that in perspective.
Well, Elon Musk finds himself constantly sort of embroiled in these scandals, whether it's something he tweets or most recently a probe, a reported probe into a secret glass house that he may or may not have been building. How do you think of headlines like this when you're evaluating credit risk? Is this something the market can just kind of like look past and wait to see where things go?
Yeah, well, with Tesla, there's always event risk just in headlines that you get. At least what I've seen on the credit side is that when he is quiet and the company is just working, their stock or their CDS and their bonds tend to perform better. So a lot of cases, it would just be better if things were quiet and you can kind of just move on and focus on your operating acumen, which they have a lot of.
What's the magnitude of some of these like reactions to, I don't know if the glass house was truly like that big of a probe, but.
Yeah, for credit, I don't think that really means very much, but certainly it's just an unnecessary waste, use of time that could be spent better in terms of improving your products.
When's Tesla going to hit the bond market?
That's a great question, Paul, and I think really the answer is once they're done cutting prices. And the reason for that is one of the reasons that they can do as much as they've done this year. If you're talking about a 34% or 35% cut in your prices, you've never heard of that in autos before, right? You have to kind of go back to Henry Ford days to get that kind of level of price cutting. And the reason for that is because most of the auto companies have captive finance units, right? So when you're taking a loan out or a lease on one of these cars, those cars wind up coming back, or a high percentage of them come back to the auto company. So they've financed that residual value at a certain level. So you can't go out and cut down the pricing by 30 or 35%. Otherwise, you're going to get destroyed in your finance company. Tesla doesn't really have that issue. And so they're able to be much more aggressive with their pricing and not impact their overall performance, whereas the old line companies can't do that. Once they're done with that, I think it's really, if you think about their strategy of growing production 50% a year for several years, they're going to have loans and leases become a bigger part of their business. And so that'll be the impetus for seeing much more debt coming out of the Tesla company.
I'm sure the bankers are pitching it. Joel Levington, he's the director of credit research at Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. We appreciate getting your time there. Joel, some breaking news coming across the Bloomberg terminal. Former President Donald Trump pleads not guilty, and he waives his arraignment in Fulton County, Georgia. So we will bring you more coverage of that as it develops throughout the day. S&P 500 up about 0.25% here, up 10.5 points, 45.25 on your S&P. The Dow up 0.2%. NASDAQ up about 0.5%, 68 points, 14.087 on your NASDAQ. Yields coming in a little bit. 10-year Treasury yielding 4.09%. How about that? We'll keep an eye on those yields. More coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thank you, Paul. X, the social media company formerly known as Twitter, has updated its privacy policy. It will now include users' biometric data, jobs history, and education history. Bloomberg's Ed Ludlow has more.
This is for premium subscribers only, not those that do not pay for the X service. They're going to start giving you an option to upload your government ID and to take a selfie. The biometric data that we're talking about is going to be extracted from both your government ID, but also the selfie image for matching purposes.
Now, Ludlow says the company feels it will help tie a real human being to the account and also help them fight fake users. But that's not all the changes happening at X. Bloomberg's Erica Hershkowitz explains.
Elon Musk wants to make X an everything app. He announced another step toward that goal today. Soon, users of the app, formerly known as Twitter, will be able to make video and audio calls through the platform without having to share their phone number. X also has plans to include features for payments and banking.
Now, meanwhile, a judge says X will have to face a class action lawsuit from former Twitter employees. They claim layoffs following Musk's takeover of Twitter fell hardest on those older workers. And Amazon.com and Shopify will be doing some business together. The e-commerce companies, they struck a deal to let merchants that pay for Shopify's tools use the Amazon's logistics network. The companies say Amazon's Buy with Prime tools will be made available to all Shopify sellers by the end of September. Checking in right now, shares of Shopify, they are up about 9%. Shares of Amazon, they're up about 2%. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Green on the screen today. Stocks higher as we close out the trading month. Investors' attention, that'll turn to the jobs report tomorrow morning. And this morning, we got the preferred inflation measure used by Fed Chair Jerome Powell. The core services, when you strip out housing, that picked up to 0.5%. That's on a month-over-month basis. The highest reading, in fact, since the start of the year. Discount retailer Dollar General, that is the latest to sound the alarm bell around consumer health, plunging on a dour forecast. Comes on the heels of Macy's credit red flag and also warnings from other consumer-facing firms. Right now, the S&P 500, 8 points higher. That's up 0.2%. 45.22 on the index. The Dow Jones Industrial Average is up 39 points. That's a rise of 0.1%. The Nasdaq 100 up 73 points, 0.5% higher. Two-year yield relatively unchanged right now at 4.88. And I don't know if you saw this one crossing the Bloomberg terminal, guys. The U.S. government providing up to $12 billion to retrofit auto plants for electric vehicles.
Nice.
I guess that doesn't apply to Tesla because
they're already. Yeah.
They already have it. So
right.
There you go. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Simone and Paul.
You're darn right it is. John Tucker, we appreciate it. Thanks so much. Simone Foxman, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're doing that streaming thing as well on YouTube.com, so just go over there and search Bloomberg Radio. Let's talk the streaming biz. Netflix, clear winner. Everybody else, I have no idea. So, and I used to do this stuff for a living. Mark Douglas knows. He's the president and CEO of Mountain. He joins us live here in our Bloomberg Interactive Broker Studio. So, Mark, I mean, again, I think one of the questions people had at the beginning of this evolution to streaming was, okay, I get Netflix is going to win.
Yeah.
How about everybody else? We're now 2, 3, 4 years into this thing. We've got every media company is into the streaming business. What are we learning here?
Well, I think what we've seen, the reason Netflix continues to win is because they have all the content to watch when there's no other major show on to watch. And then they also have some of the major shows. So I think just about everyone, when you turn on the TV, the first thing you do is go see what's on Netflix, right? And then, so that puts them in the first spot no matter what. And then after that, the second spot is live television, which is like Hulu, YouTube TV. And then what Disney was pretty lined up to do was to really take that third slot, family programming, sports programming. But they seem to keep Star Wars programming, but they keep seeming to stumble. And so that's been a big challenge for that. And it leaves that third slot open. Max is trying to be there. Discovery's trying to be there. But I think most consumers are like, okay, I'm going to do Disney for 3 months, binge on that. Then I switch over to Showtime and watch the current season of Billions, but I'm going to binge that. Right. And I'm going to cancel that. And that's not really healthy if you're Showtime or Max or anyone like that.
So how are those folks trying to change their behavior and make their service a mainstay?
I think what you see is them trying to go back to sports programming, but then that costs billions of dollars in fees. So that's kind of like Amazon's strategy. And outside of that, I think they're like on a treadmill, and they really, quite frankly, don't know how to get off of that treadmill unless they're going to try to match the library of content that Netflix has. But Netflix is already occupying that spot. So what you're probably going to see is just a lot of consolidation. That's really where that number 3 player is going to come from.
Well, I mean, who can consolidate? Disney can't buy Warner Brothers Discovery or Fox, they consolidated. It seems like they already did consolidate as much as they possibly could in terms of the big traditional media companies. I'm not sure any more deals can get done.
Yeah, I mean, people say, of course, Apple can. I mean, they have like more money on hand than the U.S. government.
Well, Dan Ives from Wedbush Securities made a call a few weeks ago that he believes that Apple will buy ESPN, which kind of made some sense to me because, boy, that would be I think Disney, surprisingly, wouldn't mind getting rid of some or all of that, given the decline in, with the cord-cutting issues. Is that something you think is reasonable?
Well, so the thing I think that's misunderstood about Apple is that Apple really wants to get a bundle. So if you watch something, you listen to something, Apple Music, you play it, Apple Games, you read it, Apple News, they want $20 a month from every iPhone user on the planet. And they only do TV to finish out that bundle. And the other things like Apple Music, they have no production costs whatsoever. They don't make the music, they don't make the games, they don't make the news articles. And so the economics on that is they just give you enough TV content so you'll pay the $19.99 a month or whatever the current price point is. So I don't know that they have the incentive to expand their footprint on TV, given that the real money comes from the areas where they have no production costs whatsoever.
And I pitched them on every media company on the planet for 20 years and got nowhere with them. So.
Yeah, and notably, I mean, you point out this Dan Ives commentary, but our Dave Lee, an opinion columnist for Bloomberg, says Apple doesn't need to buy ESPN to win in sports. His argument is that they'd be better striking a partnership that would showcase the ESPN channel within the Apple TV Plus.
Yeah, I think that makes sense. Yeah. Also, Disney's this is the thing about Disney right now. Everyone if you have a restaurant, great restaurant, and people don't seem to be showing up as much, you don't call your accountant. You call the chef,
right,
and say, what are we doing wrong in the kitchen? And so you see Disney. And people like, well, the company's not doing well, and everyone wants to call the finance department, and it makes absolutely no sense. Get the dishes right. They're like, get the food right. Get consumers.
What do you think Disney needs to do then?
I think when you look at the numbers, Disney, their revenue has grown they doubled in size over the last 2 years. Their revenue has grown, but if you look at their profitability, that is tanked. I mean, they were doing like. Operating income, like in 2019, I think it was like 11 to 14 billion, and now it's like 3 billion. So I think it's a classic story of everyone needs to get 10% better at what they do, and while doing it for 10% less.
Is AI the future there? Like AI generated content?
I mean, I personally think that it literally goes back to Disney. That the Disney brands, that people, especially in the United States, where it got controversial the last couple of years, that people have to re-love the Disney brand. They have to re-love the Star Wars brands, the ESPN brand for sports, and that is not about deals on Wall Street. That is about who are leading these organizations under Bob Iger, and where is Bob Iger leading them. It's a very solvable problem. It's not going to be solved. I mean, doing deals to get more consumers watching your content, great. Do that deal with Apple. But like financial, I say in my company, the only type of engineering we're going to do at Mountain is software engineering. We're not doing financial engineering here. We're going to grow through products people love. And I think that is ultimately back to basics, what is needed at Disney.
Speaking of controversial products, CNN naming former New York Times head Mark Thompson as its next CEO. What's your take as we bring in a newcomer to try and turn the ship around?
Yeah, well, the folks at CNN there was a rebellion, right? And they literally, I mean, they tied the former guy, and they wrapped him in ropes and like pushed him off the ship. so metaphorically. And so I think the new person that we're talking about, he definitely, is someone that understands, this staff, and I think is going to fit more there. The bigger news, I think, is making it more part of Max, because I think people just consume their news while they're consuming other things. Like, people don't wake up as much and go, I want to watch the news. They more say, I want to be entertained, and wow, the news is very entertaining today. In terms of kind of the CNN and MSNBC style news, we're sitting down in front of a television. So making that part of Max, I think, is a big deal. It gives them an audience to promote to. It gets more people just knowing this is an option when you go looking for content to watch. And I think that's the biggest move there.
Hey, Mark, you're based down in Miami. Your company's based in Miami. How big is this Lionel Messi thing?
Yeah, so Miami loves sports. I mean, like it has become. I used to go to Miami a few years ago and be, what the hell do people do for a living here? And now it's like become so diverse, but in every way possible. And they love Formula One. They're loving, soccer or football, as the rest of the world calls it. And you see Messi posters all over the place. So I think it is a big deal. I think it was a perfect city for him. I'm not out that much, but apparently you can see him out a lot. And I think he's doing a lot for Major League Soccer. So I think it's a huge deal. And he was a perfect person. I mean, the World Cup, I think you can almost thank Salt Bay, because Salt Bay made the end of the World Cup about Messi. Right. Not just his play on the field, but
that was so weird.
That was it was like, why are you messing around with Messi? It kind of like, he became a martyr at the end of the, in a couple seconds at the end of the World Cup. I think it's been great for him and great for the sport. Obviously, he was a phenomenal player before that.
And great for Miami, and maybe good for Apple, who is kind of part of this whole deal there. So Apple putting some dipping their toe again into the sports business. So we'll see. All right, Mark. Thanks so much for stopping by. Mark Douglas, he's the president. He's the CEO of Mountain. Really knows what's happening in the confluence of the media and technology, the whole streaming business, all that good stuff. Right now, let's head down to Washington, D.C. We get world and national news with Amy Mars.
All right, thank you, Paul. The former president, Donald Trump, pleading not guilty, waiving arraignment in the case accusing him and others of illegally trying to overturn the results of the 2020 election in Georgia. He also waived his right to an arraignment, which means he will not be returning to Atlanta next week to formally hear the charges against him. Supreme Court Justice Clarence Thomas is acknowledging he took 3 trips last year aboard a private plane owned by Republican mega donor Harlan Crow. It's the first time in years Thomas has reported such gifts. Cleanup underway in Florida, Georgia, and the Carolinas after Hurricane Idalia tore through the southeast yesterday and last night. Now in Myrtle Beach, South Carolina, Mayor Brenda Bethune said they needed to temporarily keep people off the beaches.
The main thing for us is to encourage people to stay off of the beaches and out of the water. We still have a lot of
Johnson are asking for help from the federal government in dealing with the migrant crisis and labor shortage in that city by allowing work permits for asylum seekers in Chicago.
We have the jobs, we have the people. We just need authorization from Washington.
Currently, migrants can't apply for work permits until 5 months after they've applied for asylum in the U.S. The death toll from a fire in a Johannesburg building in South Africa is rising as emergency services continue their search and rescue operations. At least 73 people have died, including children, and at least 52 are hurt. Officials believe candles caused that fire. The incident also highlighted a housing shortage. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg.
Updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 rising for a fifth straight day, but still heading toward its worst month since February. Trading volume about 20% below the average for the past month. Traders are also bracing for tomorrow's jobs report, looking for clues on the outlook for Federal Reserve policy. The Fed is a ways from cutting rates, and higher Treasury yields will stick around. That's according to Deborah Cunningham at Federated Hermes.
Right now, I think Fed speak should be, focusing on trying to take people's expectations away from the next cuts. They're not coming soon, but that above 5 is there for a while.
Right now, the S&P 500 is 8 points higher. That's up 0.2%, 45.23 on the index. The Dow Jones Industrial Average 32 points higher. NASDAQ 100 up 68 points. That's up about 0.5%. Some of the individual shares on the move. Salesforce climbing. They delivered a revenue and profit forecast for the current period that topped estimates. AMC getting a pop after Taylor Swift announced a film version of her Eras tour. And then Dollar General falling after cutting its profit forecast for the second straight quarter. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Simone and Paul.
All right, John Tucker, thanks so much. We appreciate that. Simone Foxman, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So just head over there and search Bloomberg Radio. I want to bring on our good friend Barry Ritholtz. He's the host of Masters in Business for Bloomberg Radio. He's also got this investment management firm. He's a chairman and chief investment officer, Ritholtz Wealth Management. He joins us. Hey, Barry, I buy my securities. I hold them. I'm not trading, but a lot of folks do buy and sell, buy and sell, buy and sell. And oftentimes the timing there isn't ideal. And that, in fact, it really impacts their returns. Kind of, what have you experienced in your career?
So a lot of this just traces back to the emotionality of having capital at risk. The upside is, hey, everybody, we're all going to be wealthy. Isn't this fantastic? And everybody is always happy when the markets are trending up like they've been for the past week, in fact, back to, October 2022. But when you go through a full year like 2022, people get very uncomfortable. Your emotion gets in your way. And lots of studies have been done on this. There's the Dalbar study. There's countless academic studies. The one that intrigued me most recently came from Morningstar, sort of kind of snuck out in the middle of the summer, called Mind the Gap, and it's really fascinating.
And what does it kind of show us?
So when you look at the traditional studies of underperformance of investors, they tend to say, hey, your stock selection or your market timing or your use of leverage has led you to underperform the benchmark. And everybody kind of understands that. What's really shocking, and this is what the Morningstar study called Mind the Gap showed, is not only do investors underperform a benchmark, they actually underperform their own holdings. Meaning, if you own ETF 1 and mutual fund 2, you would expect that you should get as much returns as those products create. But the average investor underperforms those holdings by about 22%. And the reason is what you alluded to before, timing. They tend to chase products up or panic sell on the way down. And that always leads to not just bad performance against the benchmark, but you literally are doing worse than the products that you own. It's quite fascinating.
Interesting. Well, interpret for us the confounding mix of data that we're seeing right now. I believe UBS, Jason Draho termed it a Marketheimer effect. Incongruous data and differing opinions of where the Fed is going to go. How do you play this at this moment? What are the salient points that you've been following?
So first, all economists suffer physics envy. You can land, physicists can land a craft on an asteroid going 50,000 miles away, 50,000 miles an hour, 10 million miles away. So economists are jealous of that, mostly because they can't even tell you in real time if we're in a recession or not, right? So when you compare the two sciences, and I use that term loosely, one is a very precise science that does unbelievable things, and the other are a bunch of sociologists pretending to have a math background and pretending that they're physicists. So start with that bit of bias on my part. And then second, remember what the statistician George Bach said. All models are wrong, but some are useful. And all of us, investors, strategists, but especially economists, tend to forget that. When we have a model of inflation, when we have a model of GDP, we think somehow that these models are, the Delphi of Oracle, and they're telling us the truth. What they are is taking a super complicated world with a million moving parts and thousands of data points and saying 2.2%. The old joke is, and I don't want to just beat up on economists because investors and strategists, all of us engage in this foolishness, but the old joke is, why do economists show data to the second decimal point? And the answer is to demonstrate they have a sense of humor.
I love
Interesting. Hey, Barry, one of the drivers of the stock market performance this year has been AI. And a lot of skeptics are out there saying, boy, I'm not sure if this is real or if this should be really driving the markets here. The AI may be overplayed. Do you have an opinion on that?
Yeah, and I think it's when you go back and look at history, no matter what the new technology is, the cycle is kind of similar. Some people have called this the Gartner hype cycle, but think back to internet stocks or biotech stocks, or if you really want to dust off the history books, railroad and steel stocks. A new technology comes along, it changes everything. And while that's true, nobody knows who the winners of that are going to be. And so you have this land rush. Think about who's left standing in the world of personal computers. I mean, at this point, it's Apple and Dell and not a whole lot of other people. But at the time, there was a giant land rush. There were hundreds of companies. Most of them fall by the wayside. Radio, television, automobiles, pick it, fiber optic. Pick a technology and it's the same thing. So AI is probably going to be a big thing at some point in the future. Figuring out which company is going to be the winner, I don't know if it's Microsoft or NVIDIA. History has shown us that very often there's a surprise winner in it. The fact that we're talking about NVIDIA for a long time, hey, they were an also-ran in the chip world. Maybe they have this floating GPU thing that we could use for gaming. Think about how rapidly things change. But by the way, not too long ago, I love finding these old magazine articles. There was one about the BlackBerry versus iPhone, and this was about 20 plus years ago, and I'm sorry, about 15 years ago in the late 2000s, like 09, 2010. And here's why the BlackBerry, has a lot of fight in it. And this interloper from Apple, they're a computer company. What do they know about phones? So our ability to forecast the future, especially with technology, it's pretty mediocre. We don't do a great job. AI is great. Your guess is as good as mine as to which company ends up being the winner.
Hey, Barry, thanks so much for joining us. As always appreciate getting your unique perspective. Barry Ritholtz, he's the host of Masters in Business on Bloomberg Radio. Great podcast. I recommend checking that out. He's also the chairman and chief investment officer of Ritholtz Wealth Management. And when Matt Miller's in the studio, they tend to go off the rails and talk about cars nonstop. So
we could talk about BlackBerry, though. I had a pink BlackBerry.
Pink BlackBerry.
It was awesome. Nice. And I actually really did enjoy having buttons that you could type stuff. And I do miss that about my current iPhone, but.
Yep, I had the original BlackBerry back in the day, and the access to email for somebody that was on the road as much as I was just game changing. So you got to give the folks at BlackBerry credit for that. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Gotta love that BlackBerry. Thank you, guys. Shares of Chewy are lower, and this after Evercore downgraded the pet company's stock to inline from outperform. Bloomberg's Abigail Doolittle has more.
Evercore ISI in particular would prefer a more compelling valuation level, which is a way of saying that this stock is too expensive for the numbers that they're putting up. Morgan Stanley has kept their equal weight rating, saying that the negative net adds in the second quarter were offset by better than expected profitability, but the net adds have continued to disappoint.
Now, shares of Chewy right now down about 11%. Warner Music Group is in the spotlight thanks to Barbie. Barbie the album and its hits, including this one from Dua Lipa. It's dominating the music business. Mark Ronson was one of the producers of that soundtrack, which debuted at #2 on the Billboard 200 with multiple singles. A website for the album offers different versions for sale, including colored vinyl and also cassettes. Shares of Warner Music Group right now, though, they're down just a fraction. And some good news for Swifties. A film about Taylor Swift's Eras Tour is coming to the big screen this October. AMC plans to show the movie at least 4 times a day on Thursdays, Fridays, Saturdays, Sundays at every one of its locations in the U.S. Now, that is sending shares of the theater chain higher. Right now, they're up about 4% right now. AMC says it upgraded its website, its ticketing engines to handle more than 5 times its previous record demand. But long wait times and those site outages are still possible. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Simone Foxman, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio and streaming live on YouTube. Just go ahead, head over to youtube.com and just search Bloomberg Radio. Looking at the markets here, S&P 500 up 0.2%. The Dow Jones Industrial is kind of flattish. NASDAQ up 0.4%. Yields coming in slightly. 10-year Treasury off just about 3 basis points, 4.08% on your 10-year. A little bit move up higher again in WTI crude oil. Now trades about $82.20 per barrel. Bitcoin trading off here today, off about 1.2%, below 27,000, just below 26,900 there on Bitcoin. I quote that for Tom Keene, of course. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Amy Mars.
All right, thank you, Paul. Former President Trump has pleaded not guilty, waiving arraignment in the case accusing him and others of illegally trying to overturn the results of the 2020 election in Georgia. This means he will not have to show up for next week's hearing. Supreme Court Justice Clarence Thomas acknowledging he took 3 trips last year aboard a private plane owned by Republican mega donor Harlan Crow. Thomas said he was complying with new guidelines from the federal judiciary to report the travel. His report comes amid a heightened focus on ethics at the High Court. The response to what is now Tropical Storm Idalia has forced President Biden and Florida Governor Ron DeSantis to set aside their political differences. Bloomberg Government's Zach Cohen reports now from Washington.
Any federal government and state officials, Democrats and Republicans during natural disasters, it tends to be a moment where you see bipartisan cooperation. But the real question, I think, becomes whether Congress signs off on additional disaster supplemental spending for storms like this, as well as the recent wildfires in Maui.
Bloomberg Government's Zach Cohen reporting from the nation's capital. Researchers at Stanford University have found genetic links between Alzheimer's and Parkinson's. Dr. Emmanuel Mignot is one of the senior authors of this study and says with this genetic link and a little time, they may be able to find a way to prevent both Alzheimer's and Parkinson's.
Maybe we can garner the strength of the immune system to kind of clean our brains and maybe prevent the development of these diseases through vaccination.
So he's talking about a vaccination. The research includes 100,000 Alzheimer's patients and 40,000 Parkinson's patients. Ton of air travelers getting an early jump on Labor Day. Believe it or not, the TSA now expected to screen more than 14 million passengers nationwide in the next few days. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Paul and Simone.
All right, Amy Mars, thank you so much. We appreciate that. Coming up in the next hour, we're going to check in with Molly Smith. She's a U.S. economy editor, and I think we're supposed to talk about like some of the economic data, but we're going to rip up the script, and we're talking nothing but U.S. Open tennis. She is our resident tennis expert. I think she spent most of the week out at the United States Tennis Center out there in Queens. I was out there Tuesday, had a great time, so we'll get the latest on what's happening with this U.S. Open tennis. Lots of excitement going on out there. But in the EV space, Simone, the government's stepping up. But if you want to convert your factory that made internal combustion engine cars to an EV, the government's going to step up and help, isn't it?
Yeah, the U.S. will provide about $12 billion, up to $12 billion for automakers to retrofit their facilities to make more EVs and hybrids, according to U.S. Energy Secretary Jennifer Granholm. She said this during a briefing today, and this news coming out just about 40 minutes ago. We're watching shares of GM, Ford higher about by percent and about 0.8% here. But the interesting thing is that, you know, if you're Tesla, you have a factory built to make only EVs. You know, you're not necessarily seeing the benefits of this, I would think. We're looking for more details here. This is brand new reporting out from Bloomberg.
Yeah, and it's interesting because the cost associated with making that switch, they're big, and they're probably bigger than initially thought. When you think about Ford Motor Company, when they announced their big push into EVs, they initially said it would cost them $3 billion, and then they upped that to $4.5 billion. So the costs associated with them are pretty steep.
And I wonder how this plays into ongoing discussions with the United Auto Workers unions, between General Motors, Ford, Stellantis, et cetera.
Absolutely. I mean, there's a big discussion point there about EVs and what it means for the workforce, of course, for these automakers. So we'll have more reporting on that coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to talk to Molly Smith. She's a U.S. economy editor. We'll talk a little bit of economic news, but I really want to get her thoughts on the U.S. Open. She's the big tennis fanatic here in the building, so we'll get the latest on what's happening out at the U.S. Open in Queens. And then we're going to talk about the retailers. Brendan Case, U.S. retail reporter with Bloomberg News. We're going to talk about Dollar General's earnings miss, and then we're going to preview the Lululemon earnings coming after the close today. And then ETFs. You can never talk about ETFs too much because that's where the money's going. Bill Davis, managing partner and portfolio manager at Stance Capital. He's going to join us to talk about ETF investing, where the money is in fact going, what strategies are hot right now. But first, let's kick this hour off with our good friend Charlie Pellet.
Thank you very much, Paul Sweeney. Higher across the board right now for the Dow, the S&P, and NASDAQ. You mentioned Dollar General plunging 14.4%. Lululemon after the close of trading. Lululemon up now by about 1.1%. Stocks, bonds, and the dollar all posting small moves after mixed economic data this morning. More on that coming up in a moment. Traders are awaiting the big jobs report tomorrow morning for clues on the outlook for Federal Reserve policy. So here's where we stand. S&P right now up 0.2%, up 7. The Dow up 21, up by 0.7%. NASDAQ up 52, higher by 0.4%. Cannot ignore the fact that the S&P 500 index up for a fifth straight day. 10-year yield 4.08% with a 2-year yielding 4.77%. We've got spot gold down $1 the ounce to $19.41, while West Texas Intermediate crude is up 0.8%, $82.29 a barrel. The Federal Reserve's preferred measure of underlying inflation posted the smallest back-to-back increases since late 2022, encouraging a burst of consumer spending and feeding growth expectations that the economy can avert a recession. Services spending advanced 0.4%. Spending for concerts like Taylor Swift and Beyonce and movies like Barbie and Oppenheimer likely contributed to the gain. Anna Wong is chief U.S. economist at Bloomberg Economics, and she was interviewed this morning right here on Bloomberg Markets.
So Taylor Swift's tour in North America ends after August. And so is Beyonce's tour. So in the fourth quarter, there will be, just think about the fact that you don't even have a super pop star to maintain the same level of spending. That will be an automatic negative monthly growth going into September.
So Taylor Swift is an economic indicator. You can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. As we mentioned, Dollar General plunging after slashing its profit forecast for the second straight quarter. Shares of DG Dollar General down 13.4%. Salesforce after earnings up 3.6%. CrowdStrike after earnings up 9.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Simone Foxman, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live as well on YouTube, so go to youtube.com and search Bloomberg Radio. Charlie was mentioning we have a little bit of green on the screen, not much happening there, not a ton of volume either. But let's see what's happening under the hood. We welcome Emily Graffeo. She covers all the equity markets for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker Studio. Emily, what are you looking at today?
I have more Taylor Swift news.
Sure.
Sorry.
Keep it coming. Keep it coming.
We have AMC up higher. The stock was up as much as 9%. It's now up about 3%, but Taylor Swift announced that her recent Eras tour is going to screen in AMC theaters in October. They plan to show the movie, at least, I guess, a movie of the tour, at least 4 times per day, Thursdays, Fridays, Saturdays, and Sundays, at every one of its AMC locations in the U.S., starting in October. So we're seeing a little bit of
Will you go to that?
I don't know. I didn't go to the tour. So
Are you a Swiftie, though?
I'm not a huge Swiftie. I respect her, but I'm not a huge
Simone,
Swift
are you?
fan.
Will you go see the movie?
I totally am. And Miss Americana was so good too. It was a Netflix movie. I got really into it. I mean, she and I are like about the same age too. So I think there's been a huge upsurge in support among millennials of my age range. So
Good.
oh yeah.
All right.
I think this is a much needed pop for AMC. I mean, we know it.
Well, it's a meme
stock.
stock. Yeah,
so
exactly. It's all over the place.
It rallies on news like this, and it's down 67% year to date.
You know, another way, if you think about the concert business, Live Nation, the largest concert promoter in the world, they also own Ticketmaster. So if you want to get exposure to kind of the live event business, Live Nation, LYV, is the ticker. Stock's up 21% year to date.
So I'm really eager, Emily, to talk to you about what's happening in pot stocks, because my understanding is that there was this big announcement about how the U.S. Assistant Secretary for Health, Rachel Levine, recommending that the DEA essentially downgrade its classification scrutiny of the Controlled Substances Act of cannabis. So what's happening in the pot stock market?
That's right, Simone. So yesterday, there was an announcement that potentially we could see cannabis classified as a Schedule 3 designation. Right now, it's Schedule 1. It's up there with heroin and LSD. The Schedule 3 designation would put cannabis in the same category as steroids, like testosterone, ketamine. The pot stocks have done really poorly this year, so I think investors in that area are looking for any reason to rally. I mean, this isn't confirmed news that we're going to see that reclassification, but you look at the market, we have Canopy Growth up as much as 18%, Tilray Brands up about 8%, and one of my favorite ETF tickers ever, the weed ETF.
Sure.
It is the Round Hill Cannabis ETF. The ticker is literally weed. It's really small. It's only about $2 million in assets, but that's rallying as well. Right now, up about, my terminal's slow, 22%.
There you go.
So,
talk to us about the ETF biz. A lot of folks are looking at 2-year yields at 4.87%. Why not? Is there an ETF where I could just do that kind of stuff?
there are actually a number of short-term bond ETFs.
Okay.
The Bill ETF, which I guess is even shorter than 2-year, but you could even lock in a higher yield, had its best month of inflows since February. So this is at State Street's 1 to 3 month T-bill ETF. The ticker is BIL. Pulled in about $2.3 billion alone, just for one fund in August, which is pretty impressive, considering the last time we saw that large of a cash haul. It was February. That was when the SVB crisis happened, and traders were really, I guess, hiding out in cash, and now they're going back to that.
Very interesting.
Anything else you got for us?
I don't think so. I'm
All
just
right.
looking at that. I mean, month end, we're set to end the S&P down almost 2%. So
Yeah, not a great month, but a
Not a
good,
great month.
good
Yeah.
year to date.
Trying to eke out day 5 of gains on
Yes.
S&P. So
All right, good stuff. Emily Garfeo covering the equity markets for us. We appreciate getting your thoughts there. We're going to get a little bit of green on the screen, not going to overdo it. All right, here's a conversation of the day, kids. Tuesday, I take the New Jersey Transit from the Jersey Shore State into Penn Station, hop on the Long Island Railroad, couple of stops, boom, I'm at the National Tennis Center for a great day of tennis.
we said you were on assignment. I was
On
here.
assignment.
Jess was here.
I was
You
on
were
assignment. Exactly. Drinking my melon balls, which is the signature cocktail out at the National Tennis.
Paul.
Oh, honeydews, thank you. Molly Smith joins us. She is ostensibly here to talk to us about some of the economic data we got today, but let's just rip up the script, as Tom Keene would say. Molly Smith is our tennis expert within 731 Lexington Avenue here at Bloomberg HQ. Were you out there like every day so far this week?
I have been camping out Monday to Wednesday from about 10 to 10.
Really?
Full
So you go to
days.
day and night session?
It's the day session, but they're not kicking you out.
Oh, so they don't kick you out? So you get,
Only if you're like in one of the stadiums and you have like, for Ash or Armstrong, then they'll kick you out for the night session.
Okay.
But if you're on the grounds,
you can hang.
Yeah, and then you can kind of stay there and go eat food, and there's stuff. I don't know. My husband went out there 2 days ago, and he was like
I
blown
think
away.
if we want to weave in a little economics, once we get the Q3 economic data, I think growth is going to be supercharged by the U.S. Open. I mean, the amount of commerce that has been taking place in Flushing this week is out of control.
All right,
hear that Taylor Swift,
Yeah,
hear that
it's
Beyonce. It's actually the U.S. Open.
It's actually the U.S. Open.
Exactly. All right, so what's your takeaways from so far this year at the U.S. Open?
Well, I think my story about the depth of women's tennis is proving to be pretty timely. So not to toot my own horn, but it's been a lot of fun seeing a lot of, there have been a few women's seeds who have gone out fairly early, and some of these relative no-names coming up through the ranks. I mean, I watched actually a fantastic women's match yesterday between an American, Taylor Townsend, and a Brazilian, Beatriz Haddad Maia. And there was an insane Brazilian contingency in the crowd.
Is that right?
As well as a big U.S. crowd, as well as you'd imagine. And it was electric in there. I've never been to a tennis match as fun as that one.
Interesting. And for an early round kind of match as well. So what I noticed there is literally there are people from all over the world come to this thing.
Oh, yeah.
I mean, and people that aren't, you can say, oh, maybe they live in New York City somewhere. No, these people, you could tell, came from Italy, or they came from Germany, or Brazil for sure. I saw Jessica Pegula, the American.
Oh, me too.
Boy, she was awesome.
Oh, yeah.
I didn't know how good she was because her opponent, she won 6-2, 6-2, but it was much, much closer than that. It could have been gone either way. The points were so tight, and her opponent, the Italian, very good.
Yeah, that can be what's so misleading sometimes about tennis. You see a score like that, you assume it's a blowout, that she was probably on the court under an hour, and I would think she wasn't. But, I mean, it's just, I think it really, when you look at score lines like that, it just shows you then like what makes the great players so great. They just play the big points better.
That's right.
So I'm a complete tennis novice. Don't know anything. Who are like the big stars that I should be watching on the women's side, especially as we kind of move through the tournament?
Right. So Pegula being one of them. She's the top-ranked American right now in either side, men or women. She's number 3 in the world. Her doubles partner, Coco Gauff, another one. She's had an amazing summer. I saw the two of them play doubles yesterday. So they're ranked top 10 in singles and doubles, each of them individually. The Americans are really having a great run. It's a wonderful time to be a fan of Americans tennis right now. Taylor Fritz on the men's side, as well as Francis Tiafoe, Tommy Paul. They're all still doing well in the first week. As well as some of the other top seeds, Alcaraz and Djokovic cruising so far. Swiatek on the women's side. I know, Paul, if you want to try to say her name.
No, thank you. I'll leave it to you.
She's the number 1 women's player in the world, and some of the other top seeds who seem to be making it through pretty easily so far.
What I saw when I was on the grounds at the U.S. Tennis Center, which again, I will throw my pitch in. I will pitch for New York City and the mayor and everything. Go to the U.S. Open in New York. It is a great bucket list event, not just a sport event. It's just a great New York City event that I highly recommend going to. It's a great experience. What I noticed was all around the event, 50 years of equal pay between the men and the women. I didn't know it was that long.
Yeah, Billie Jean King,
Billie
our
Jean
star. She is, I mean, she does get all the glory, and as she should. But it was, her as part of what's called the original 9. So she was part of this group of 9 female players who were all rallying behind this cause. So from 1973, that was the first U.S. Open that awarded equal prize money. And I was just talking about this with some other colleagues that it can look a bit deceiving when you see other tournaments that are being played throughout the year that don't have equal prize money. And you must think, that looks really weird. What are the folks in Cincinnati, that was this tournament I called out in my story, that are not awarding equal prize money? And you kind of have to think of it as two products in one package. You have the Women's Tennis Association and the Men's Tour, which is the ATP, Association of Tennis Professionals. They have 2 different pools of prize money. They operate completely separate from each other, but they are, right now putting on 2 events at the same venue. So that's why it can look a bit deceiving and think that the disparity is so enormous and that it's done by the tournament organizers, but it is 2 different governing bodies that decide this.
And is there a movement to have more tournaments with equal pay?
There is, and I think what it comes down to, though, is the sponsorship and the viewership of each tour, and that certainly is growing on the women's side, and you hear a lot more women's players speaking about that. You see the stadiums that are just as full for women's matches now. The atmosphere is really electric. I think it is really just a matter of time before they catch up.
Yeah, it's one of those sports where I don't think of the product that differently like I do. Like, for example, I know there's big movements in women's sports in general, like women's basketball, for example. I follow that very, very closely, and women's attendance is coming up dramatically, and the viewership of tennis, I guess I don't think of it as two different products, really, because, I mean, we've had so many world-class athletes, like the Williams sisters, and before that, Chris Evert, and all the great women's tennis players. I don't even think of it as two different
But you know what's
products.
interesting? When we're talking about women's and men's sports, though, there was an ad for the French national soccer team, and they essentially put fake heads of men on the team on an ad, and then showed that this was actually a deep fake, and that this was the women playing. I wonder if that influences our perception, of how the play is in any of the other sports. Tennis, it seems obviously like pretty similar, whereas it's trying to bring that to other sports as well. I don't know. I
mean, the one big difference that is worth flagging at the Grand Slams is that the men do play a longer format.
They
this
do,
is the best of 5 sets versus women play best of 3. So people will call that out, and the women will say in response to that, we'll play best of 5 if you want us to.
Right.
But no one's asking.
Right, exactly. All right, so we've got, we're coming up to the mid-weekend of this tournament here. What are you looking for the rest? First of all, are you going back?
Oh, absolutely.
Okay.
At least 2 more times, maybe more.
Okay, and what are some of the storylines that people should pay attention to as they kind of watch over the weekend into next week?
Oh, goodness. You guys are going to laugh at me for flagging this, but I think there's some stomach bug going around at the U.S. Open. There have been a few players who have withdrawn with illness.
Oh, no.
Dominic Thiem the other day, he played an incredible first set against Ben Shelton, and then played 1 game in the second, and then was almost retching over on the side of the court and had to withdraw. And I think Chris Eubanks, also a great American star, he unfortunately lost. I think was also sick during his match. So Andy Roddick tweeted it, and I am a big fan of his. There was actually a great GQ article, a profile of him that everyone really should read.
Okay.
Phenomenal about his career, but he was also observing this on Twitter, X, whatever we call it.
Yes.
So that is something I think to watch. I think the heat is going to be more of a story. I was looking at the weather forecast for next week. It's been pretty mild right now for New York in late August, like in the 70s, maybe the 80s so far. Next week, going to get up into the 90s. That might be something to keep out for.
And I think on the men's side, I guess everybody's looking for Alcaraz, Djokovic, right?
Oh, man. If those two meet next Sunday, it just, you know where I'll be.
Yes, exactly. All right, Molly Smith, if your boss asks, we did talk about economics. But
the economics of the U.S. Open. There you go.
Open. All right, Molly Smith, she's our U.S. economy editor for Bloomberg News, but we know her also as just a rabid fan of tennis, does a lot of good coverage for us there, and we appreciate it. Again, she had a great story just talking about the women's game that ran a week or so ago. Check that out on the Bloomberg Terminal or on Bloomberg.com. Some good stuff. S&P 500 up 0.1%. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thank you, Paul. The federal government is weighing whether to change government restrictions on marijuana. Bloomberg's Amy Morris reports.
The Department of Health and Human Services is recommending that the DEA ease government restrictions on marijuana. 40 states allow the use of marijuana in some form, but on the federal level, it's still considered a Schedule I drug like LSD or heroin. President Biden ordered the health agency to conduct the review of the drug last summer. HHS made its recommendations to the DEA, which has final authority.
Now, this news has shares of marijuana stocks soaring right now. Tilray Brands up 12%, Canopy Growth up 30%. And UBS Bank has posted the biggest ever quarterly profit for a bank in the second quarter. The $29 billion gain is a result of its emergency takeover of Credit Suisse. UBS Chief Executive Officer Sergio Ermotti tells Bloomberg job cuts are next.
We will have around 3,000 jobs that will be made redundant.
Gannett right now up 4%. I'm Lisa Mateo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ, all advancing. S&P up barely now, up less than 0.1%, but stocks are gaining ahead of the jobs report tomorrow morning. The Dow right now up by 2 points, a little change there. The S&P up 4, up less than 0.1%. NASDAQ holding on to a 30-point gain, up by about 0.2%. 10 years yielding 4.07%, with a 2-year right now at 4.86%. We've got spot gold, little change, down 50 cents the ounce to $19.41, while West Texas Intermediate crude is up 1.1%, $82.51 a barrel on WTI. Shares of AMC Entertainment up now by 3%. Stock is gaining after pop star Taylor Swift announced her recent Eras Tour will screen in North American movie houses beginning in October. And with more on that story, here's Bloomberg's Erica Herskowitz.
Charlie, the pop star revealed the previously unannounced film in a post.
People would come up to me and they'd be like, "You're gonna just like do a show with like all the albums in it?" And I was like, "Yeah, it's gonna be called the Eras Tour. See you there."
Her tour is big business. It's expected to gross $1 billion. Charlie?
And that's Erica Herskowitz. Be there indeed. Shares again up by 3%. The Dow, the S&P, NASDAQ all advancing here. We've got the S&P up by 17, up by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Simone Foxman, Paul Sweeney here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube.com, so just head over there and search Bloomberg Radio. Retailers still reporting numbers. Dollar General out with some reports, earnings, and disappointing. Stocks down 13%. 52-week low here. Let's break it down. We also have some Lululemon after the closers. Let's break it down with Brendan Case. He's a U.S. retail reporter for Bloomberg News. He's located in Dallas, Texas. Brendan, thanks so much for joining us here. Dollar General, boy, I guess tell us what happened there, because that stock's really taking it on the chin today.
Yeah, just a really tough quarter, tough outlook, and this is on top of what's already been a really big share decline this year. But basically, there's a few things going on. One is that lower income consumers, the kind of people that Dollar General caters to, are under a lot of pressure. That's getting worse. But that's true for everyone. That's true for Dollar Tree. That's true for Walmart. That's true for, throughout the economy. What sets Dollar General apart is that it looks like it's losing ground to rivals. Walmart and Dollar Tree both reported comparable sales gains, same store sales gains, key metric for retailers of more than 6% in the second quarter. Dollar General was down slightly, call it flat, but that's still a huge gap with its rivals. And so there's a sense that it's kind of losing out, even though these other companies faced with the same macro backdrop are doing much better.
Do we have any sense of what Dollar General is doing wrong in comparison to those competitors?
Well, we have a little bit of a sense because of what they said on the conference call about what they're going to do about it. And one thing they're going to do is they're going to spend more on labor costs. They had said that they were going to add an extra $100 million in labor costs this year. Today, they upped that to $150 million, and a pretty good chunk of those extra costs happened in the second quarter. This is a company that's been fined over and over by the Labor Department for poor store conditions, the cluttered aisles, blocked fire exits, all kinds of problems within the stores, which, if you talk with employees, has a lot to do with not enough labor hours, not enough staffing to get the work done. The fact that Dollar General is spending more on that, I think, tells you that it realizes it needs more labor in its stores. Another thing that it's doing is dealing with an inventory increase. This is sort of an old story that began last year for a lot of retailers, but it kind of cropped up again earlier this year for Dollar General. And what they did in the second quarter and what they're probably going to continue doing through the rest of the year is marking a lot of merchandise down. And so that's going to be another headwind for sales.
You know, Simone and I learned from our colleague Emily Grafego earlier this morning that Dollar General is the largest U.S. retailer by store count, 18,774 stores as of January 1st, 2023. Is there a sense that they have too many stores, maybe not properly, they're not in the right places? What do we know about their store count?
Well, I would say that there's a sense among both Dollar General and Dollar Tree that there's actually still room to open more stores. But I think that there's probably a sense, certainly among some investors, that Dollar General's growth, which has been spectacular, over the last 10 years, has maybe gotten a little bit ahead of itself. I think what we can say is that for as many stores as it's open, it hasn't quite been able to keep up the quality. And that's really starting to have an effect. Just customer traffic was down in the second quarter, and that number of flat comparable sales trailing, some of its biggest rivals by a huge margin, I think is also sort of a sign that Dollar General's own shoppers are starting to say, you know what, there's other options out there.
I remember that Dollar Tree, did sink after its earnings. Now, maybe expectations were just a little bit too high there. But I think overall there has sort of been a divergence between some of the discount players that are performing more strongly in this current climate, and some that aren't really seeing the value, the trade down that everyone was anticipating. Is there a kind of narrative here that we can better understand some of what's happening across these discount players?
It does feel like there's a couple things going on. And, to your point, it's not that Dollar Tree is having such a great year. They cut their profit outlook, a couple weeks ago. Their shares have been kind of, ho-hum this year, not great. But what they are doing is they're gaining a lot of sales momentum. And I think that the big story there is a turnaround effort that's being led by a former CEO of Dollar General, and it's backed by an activist investor called Mantle Ridge. And so they have sort of, their own company-specific turnaround story going. But if you look at a company like Walmart, they're also making big gains. And I think that what we're seeing is, consumers looking really hard for value. They're looking for bargains. And they seem to be deciding that Walmart has them. Dollar Tree has them to a certain extent. And so I think what you're seeing is sort of a separation of kind of who is offering the best prices at a time when consumers are under rising stress. And then, of course, the other part of it is that people just aren't buying big ticket items. They're shying away from a lot of the discretionary purchases that they binged on during the pandemic. That's why you see a company like Target under a lot of pressure right now.
All right, Brendan, let's look forward to tonight after the close. Lululemon reports results. Lululemon, I was surprised to find out, is a company with a market cap near $50 billion.
Wow, I did not realize
I did not
that was
know
quite
that.
large.
The stock's up about 19% year to date, up 27% on a trailing 12-month basis, so stock's doing well. What do we expect from Lululemon?
Yeah, this is a company that's really bucked, a lot of industry trends this year. Not that many retailers are showing that big of a gain. And I think what you're seeing with Lululemon is an important lesson for the broader retail industry, which is, yes, consumers are under pressure, but at the same time, they're still finding ways to treat themselves. And you see that throughout the sector. You see that, with, Target's under a lot of strain right now, but its beauty product sales are doing great. There's a lot of other things that people are still spending on, among them, some of the athleisure type products that Lululemon has. I think expectations are pretty high going into the report. We'll have to see how they did. But so far it's been a story of, there's still pockets of growth out there. especially among higher income customers.
For Lululemon, I understand it has a fair bit of its business outside of the United States, maybe more than some other retailers. Are there any key themes we're looking for there?
Yeah, and in terms of the international growth, I mean, that could vary. And for a lot of companies, the international piece has actually been, in some cases, better than what's going on in the U.S. Costco came out with comparable sales data for August last night, and the U.S. sales, were fine. They were solid, but they actually trailed, most of the other markets. And so with Lululemon, that again could be the case. They might be able to rely on some of those overseas markets as well.
Hey, Brendan, what are some of the retailers that you follow? What are they saying about kind of the holiday season coming up?
Mixed messages. Walmart said that back to school sales were pretty good, and they said that when you see a good back to school season, it usually means a pretty good holiday season. But at the same time, I don't think that anyone is expecting a blowout holiday season. Best Buy said earlier this week that it was going to be a lot more like pre-pandemic times, where retailers are going to have to rely on targeted promotions, not necessarily, slashing prices right and left, but definitely trying to get people in the door with some pretty attractive deals.
All right, Brendan, thanks so much for joining us there. Appreciate getting the update on the retailers. Brendan Case, he's a U.S. retail reporter for Bloomberg News, based down in Big D, Dallas, Texas, talking to us about Dollar General's disappointing results. We got Lululemon after the close. That stock's performed well. We'll see how they deliver in terms of the results after the close. Right now, with our news in New York City, here's Denise Pellegrini.
Yeah, thank you, Paul. We've got Donald Trump pleading not guilty to Georgia. This story being very closely watched here at Bloomberg. State charges. He faced conspiring to overturn the 2020 presidential election. Of course, he pled not guilty. He denies it. It's one of 4 criminal prosecutions, though, that he is facing. Concern about the health of Senate Republican leader Mitch McConnell, who appeared to freeze up yesterday for the second time in public. Bloomberg's Anne-Marie Hordern says this is triggering some,
murmuring around Capitol Hill about who would take his position. Rick Scott, senator from Florida, who actually challenged Mitch McConnell for this leadership contest last year, was asked about this on CBS, and he said he sees that Mitch McConnell will lead them through the remainder this session, and then potentially there'll be someone, he'll just have to wait. They'll all have to wait.
And Hordern there on Bloomberg Surveillance, she says the 81-year-old McConnell is the longest Senate party leader ever. In Florida, Governor Ron DeSantis in Tallahassee saying power is already restored for hundreds of thousands of Florida residents following Hurricane Idalia on the Gulf Coast.
The bulk of the outages at this point are in that Big Bend region, a lot of the rural counties that bore the brunt of the storm.
And the storm also hammered South Carolina and Georgia, several deaths being reported. And Taylor Swift coming soon to a theater near you. As we've been talking about, the pop star announcing that fans who didn't get to see that blockbuster Eras tour in person, well, you'll get the next best thing starting October 13th. A film about the tour comes to North American cinemas. AMC says it will screen this at least 4 times a day on Thursdays through Sundays. And the pre-sale for tickets, well, it has already started. Global News, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In the newsroom, I'm Denise Pellegrini. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow now negative, down 45 points, just moving lower past few minutes. S&P holding on to a 1-point gain, little change there. NASDAQ up by 30 points for the NASDAQ Composite Index. That is a gain right now of just about 0.2%. So we're looking at a mixed market right now. Key takeaway perhaps a little changed with stocks, bonds, and the dollar posting small moves as traders await tomorrow morning's jobs report for clues about the outlook for Federal Reserve interest rate policy. Complete coverage, as always, heading into and once the number drops, 8:30 a.m. Wall Street time, and naturally reaction throughout the day here on Bloomberg Radio. 10-year yield right now, 4.07%. We have got the 2-year yielding just about 4.86%. Spot gold, little change, down 20 cents the ounce to $19.42, while West Texas Intermediate crude is up 0.9%, $82.40 right now for a barrel of West Texas Intermediate crude. After earnings, Dollar General, I should say, down now by 13.4%. And among the names after the close of trading today will be Lululemon. That stock up now by about 1.2%. Brendan Case covers retail for Bloomberg, and he was a guest moments ago right here on Bloomberg Markets.
Yeah, this is a company that's really bucked, a lot of industry trends this year. Not that many retailers are showing that big of a gain. And I think what you're seeing with Lululemon is an important lesson for the broader retail industry, which is, yes, consumers are under pressure, but at the same time, they're still finding ways to treat themselves. And you see that throughout the sector. You see that, with Target's under a lot of strain right now, but its beauty product sales are doing great.
And both Target and Lululemon are advancing. Target shares up now by 0.2%. Lululemon up now by just about 1.1%. So again, recapping here, we do have stocks trading mixed. S&P 500 index little changed, up now by 1 point. Briefly after earnings, Salesforce up 3.1% after earnings. CrowdStrike up 9.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate it. Simone Foxman and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're streaming live as well on YouTube, so just go to youtube.com and check out Bloomberg Radio, and you'll find us there. I first heard about ESG investing, environmental social governance, maybe, 12, 13, 14 years ago from my European clients. That's kind of where it started. Then it's come to the U.S. Really, it is getting a lot of asset flow, but it seems to have hit a little bit of a wall here in the U.S. I want to get a sense of kind of where we are with ESG as a factor in investing. Bill Davis joins us. He's a portfolio manager and founder of Stance Capital. So, Bill, again, give us a sense of where ESG investing is in terms of a story here in the U.S., maybe versus the rest of the world.
Yeah, Paul, first of all, hi, and thanks for having me on. I think I'd say ESG is sort of in its awkward adolescent phase here in the U.S. I mean, to your point, it sort of started in Europe, I think then went to Canada, the U.S. It's now sweeping through Asia a bit. And the underlying ideas behind it, which is to say that there are risks that are existential to investor performance, and therefore it's fiduciarily responsible to manage those risks, are not going away. Like, big institutional investors pay attention to this stuff. They think long term. They worry about some of these existential risks, particularly around climate. However, I do think that, like in the US, it's a bit of a mixed bag. Everybody it became the hot dot for a while. Everybody rushed into it with product that wasn't particularly thoughtful or authentic. I think the SEC obviously is taking notice and is curbing some of that enthusiasm. And then, of course, you've got, the culture war stuff around the edges of it. But I don't think it's actually changing its trajectory by much. I mean, I think it's slowing down a little bit of the enthusiasm for it. However, I think it is here to stay. And, look, I wouldn't be surprised if 3 or 4 years from now, we just stop using the term. I mean, I think in Europe, you don't really hear that term ESG as much. It's just how people think about managing risk in portfolios.
Well, I want to dive into some of the stocks in your portfolio. Again, the Hennessy Stance ESG Fund is ticker STNC. One of the names that really caught my eye was Eli Lilly, in part because we have this sort of U.S. government going toe-to-toe with the pharma companies over how much they're going to pay for stuff, but also because of the weight loss and diabetes drug play. Why is this an ESG name, and why do you like it?
Well, in order to like something, I should say, in order to invest in something, we need to hold two views simultaneously. And the first, or I should say, one of the views is that we like it from a fundamental standpoint. And in the case of Lilly, there's probably 45 or 50 different factors that we're looking at from a fundamental standpoint. Interestingly, 13F filings happens to be probably the most significant factor among others in the case of Lilly. But from an ESG standpoint, well, look, Lilly has been like on a tear, not just recently. It's really actually, if you look at it over the last handful of years, it's actually done particularly well. So you can't attribute all of that to a weight loss drug. I would say that from an ESG standpoint, Lilly is in the top half of its peer group. They have a particular or a specific emphasis on access to medicine, which, you brought up the issue of the U.S. government interceding in the pricing of certain drugs, which is certainly going to affect Lilly, as it will everybody else. However, that doesn't seem to be slowing it down. And so I think it's more of it's a durability play. I think it's a well-run company. I think that they think broadly from an ESG standpoint about how to be better on a lot of different dimensions. We purchased it at the beginning of this quarter. I think it's up over 18%. I haven't looked at it today, but it's over 18% since we bought it. And it's been doing well for quite some time.
Hey, Bill, another name that kind of caught my attention, an industrial name, and a name I didn't think I'd see in an ESG fund, Nucor. Talk to us about Nucor. What's your investment theme there?
Yeah, so before I talk about Nucor, let me talk about industrials. I mean, I think that you raise a good point. I think most ESG product, and in particular U.S. ESG product, tends to be very growthy, and even more than growthy, it tends to be mega cappy. And one of the things that we believe at Stance Capital is that you don't solve the problem. Well, first of all, many ESG investors care about climate, and you don't solve the problems of the changing climate and a need to decarbonize by simply investing in companies that don't have a decarbonization problem or opportunity to begin with. So we think that there is we think, number one, all sectors of the economy survive, right, and flourish over time, but there's going to be winners and losers in each sector that's going to be driven in part how they respond to some of these external factors like climate. And so, as we think, so that's one of the reasons why we tend to be actually overweight industrials. And in the case of Nucor, somebody might look at this from the outside and say, well, why is an ESG investor investing in a steel company? Isn't that incredibly, energy intensive and carbon intensive? And the answer is yes and yes. However, like what I said earlier, there are companies that are doing more than other companies in each industry group. And in the case of Nucor, they do a better job of sustainable investing and sustainable revenues than I think any of their peers. And we think that they're well positioned to be a leader moving forward. I think we also purchased this at the beginning of this quarter. It's sort of a normal size position for us, about 2.5% of the portfolio. It's up, I think, around 5.5% since we bought it.
All right, Bill, thanks for joining us. Appreciate getting your thoughts and your perspective and talking a couple of names that are in your portfolio. Bill Davis, he's a portfolio manager, founder at Stance Capital, talking about the ESG space.
And it's a compelling argument, companies that focus on hydrocarbons or carbon-intensive stuff. If you want to stay in business, you gotta pull down your carbon.
Yep,
efficiency.
exactly. So we'll talk about that more going forward. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. X, the social media company formerly known as Twitter, has updated its privacy policy. It will now include users' biometric data, jobs history, and education history. Bloomberg's Ed Ludlow has more.
This is for premium subscribers only, not those that do not pay for the X service. They're going to start giving you an option to upload your government ID and to take a selfie. The biometric data that we're talking about is going to be extracted from both your government ID, but also the selfie image for matching purposes.
Ludlow says the company feels it will help tie a real human being to that account and also help them fight those fake users. But that's not all the changes happening at X. Bloomberg's Erica Hershkowitz explains.
Elon Musk wants to make X an everything app. He announced another step toward that goal today. Soon, users of the app, formerly known as Twitter, will be able to make video and audio calls through the platform without having to share their phone number. X also has plans to include features for payments and banking.
Meanwhile, a judge says X will have to face a class action lawsuit from former Twitter employees. They claim layoffs following Musk's takeover of Twitter fell hardest on older workers. And Amazon.com and Shopify will be doing some business together. The e-commerce companies struck a deal to let merchants that pay for Shopify's tools use the Amazon's logistics network. Now, the companies say Amazon's Buy with Prime tools will be made available to all Shopify sellers by the end of September. Shares of Shopify right now up about 8%. Shares of Amazon, they're up nearly 2%. Those are the company stories we're following this hour. We'll have more in just a bit. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Turn quickly. We're going to have some red on the screen here. S&P 500 off just fractionally. The Dow off about 0.2% after being higher earlier today. The Nasdaq pretty much unchanged on the day and a late day of trading. Looking down at the yields, the 10-year Treasury yielding 4.08%. That's off 3.5 basis points today, so a little bit of a pullback in yield. And on the commodities front, WTI crude oil up another $1 today, $82.63 on the crude oil. We'll keep an eye on that. Gold also kind of unchanged today, $1,941 an ounce. Right now with our news in New York City, here is Denise Pellegrini.
Thank you, Paul. Well, the power is still out for more than 100,000 people in Florida, though many more, I should also mention, have already had their power back. The storm also hit South Carolina and Georgia. Near Charleston, 2 people, well, their car was flipped over by a tornado. Malijah Smoke was in the vehicle.
It was just a crazy turn of events. I'm just on my way home, and all of a sudden it was a gust of wind, and my car started to shake, and all of a sudden I just know I'm in the air. I close my eyes, and then I just pray that I just make it out of this.
No major injuries in that incident, amazingly, but across the Southeast, several deaths have been reported. Flight attendants and pilots picketing today at airports across country ahead of an expected busy Labor Day weekend for the airports. Bloomberg's Amy Morris tracking those developments.
The Southwest Airlines Pilots Association is holding a nationwide picket today over contract negotiations. United Airlines flight attendants are picketing for a national day of action. The Association of Professional Flight Attendants says American Airlines flight attendants are signing off on a strike if the union ends contract negotiations. This is all happening as travel is ramping up. The TSA called this the busiest summer travel period on record. They expect to screen more than 14 million travelers this weekend. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy. Donald Trump pleading not guilty to Georgia state charges. He conspired to overturn the 2020 presidential election. He calls all the charges against him a political witch hunt. Meantime, this breaking development, a former organizer of the far-right Proud Boys extremist group has just been sentenced to 17 years in prison. That's for charges of spearheading the January 6, 2021 attack on the U.S. Capitol to prevent Joe Biden from becoming president. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In the newsroom, I'm Denise Pellegrini. This is Bloomberg. Back over to you guys.
All right, Denise, thank you so much. We appreciate it. Here's a story that got my attention, Simone. Can't spell AI without Anguilla. Apparently, the domain name for the tiny island nation is AI.
Yeah, and that is who sells these domain names. And so they've been bringing in, small bits and pieces, $7.4 million from .ai domain registrations in 2021. But there's been like a sudden surge in the number of companies who want .ai domain names. And you think X.ai, character.ai, stability.ai. But the total number of registrations of sites ending in these 2 letters has effectively doubled in the past year to 287,432, according to Vince Kate, who has for decades managed the .ai domain name for the country.
Yeah, so, it's interesting. Once one of the many obscure top-level domains assigned to countries and territories, .ai websites experienced a slow but steady increase in demand in recent years. But the sudden spike in .ai domains 9 months ago highlights the broader frenzy around artificial intelligence and its ripple effects throughout the economy. I think, ChatGPT is something that got people's attention and said, oh, this AI thing has practical applications.
Yeah, AI, it's not the AI hype. It's not just for the stock market. It's also for domain name registrations. And if you want a .ai domain name and you want to go to some place like GoDaddy or Namecheap, you're not going to have to pay $140 per 2-year registration, up from $120 in mid-April.
Have you ever been to Anguilla?
I have not.
Me neither. I'm just looking at some of the photos in the Bloomberg story.
I got to find a reporting trip to make sure I get down there.
There. All right, we'll see. All right, looking at the markets here, pretty much unchanged right now across the board. Not a lot of move in any of the indexes as well. Yields slightly lower. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Richard about that in a moment. But again, looking at the S&P 500, not much movement for the moment. We're still positive on the NASDAQ. We still have those mega caps outperforming. There is a bid in treasuries, as you can see, the 2-year yield is at 4.86, so we really did a bit of a round trip. We're back where we were just a couple of sessions ago. The dollar index is also bid. That's a little bit of a euro story, a little bit of a rate story, and we'll continue to watch that. And then looking at the month as a whole, August, not the greatest month in the world over the last 30 years for the S&P 500, as you can see. The stocks are on track for the first monthly drop since February of this year, so we'll monitor that as well. It has been a great week, though, we have to say. 4 up sessions so far this week. And, of course, all eyes are on the jobs report tomorrow morning. So as we wrap up the month, earlier we did catch up with Joanne Feeney, who gave her take on where we stand right now on the economy and inflation.
We are dealing with a U.S. economy that has a fundamental shortage of labor, which is what's keeping services provision tamped down, which is still keeping goods supply tamped down. And that's still fundamentally the problem behind inflation. So the longer this takes, the more patience the Fed has, the more patience the markets have, the more likely it is that supply catches up to demand.
So we did get some of the readings that the Fed were waiting on before they decide what to do at their next meeting and the meeting after that. Let's get to the state of the economy with Bloomberg's Reid Pickert. And Reid, we did get pretty benign inflation data today, although if you look under the surface, there might be a few things to be concerned about. What were your main takeaways?
Yeah, so, big picture, it was a benign inflation reading. We saw the slowest back-to-back advances in that core inflation metric that we care so much about since the end of 2020. And so, it really shows how much progress we've made over the last year. But it's certainly not, victory declared yet. There's a couple things to keep in mind. And one of the main things was this robust surge in consumer spending that we saw. And when you see this kind of broad-based spending that, was driven up by things ranging from Amazon Prime Day and all of the spending on goods to spending at restaurants and even the extra spending that people had on utilities amid this heat wave, and so extra spending on AC. When you see stuff like that, it suggests that the economy is still, quite hot. And, we've saw economists react to that. I mean, JP Morgan, for instance, revised up their third quarter GDP estimate from 2.5% to 3.5%. And, that is a fresh headwind for a Fed that's hoping for an economy that's slowing down, not speeding back up.
Well, Raphael Bostic said that policy is restrictive enough right now. Now, he's not a voter, but what will the Fed be hoping tomorrow brings in order for them to feel comfortable about holding steady in September and possibly beyond?
So Powell has made it very clear that they want to continue to see this rebalancing in the labor market. And the way you get a rebalancing in the labor market is a slow moderation in demand for workers and, a continued increase in terms of the number of people in the workforce. So, kind of continuing to see improvement on the workforce participation side. And at least we know, or at least economists think they know, that tomorrow you'll continue to see this moderation in job growth. So still a very solid number, kind of around 170,000 jobs and an unemployment rate that's still near historic lows. But if you continue to see this trend of moderation without an increase in unemployment, that's the type of thing that the Federal Reserve is hoping to see. And it's also the type of thing that is, bolstering hopes that the U.S. might, avert a recession after all.
Reid, thank you so much. We'll be watching that data tomorrow morning, even if you're on the beach. Outside of the economy, crypto has certainly grabbed headlines this week. A ruling overturned the SEC's decision to block Grayscale's bid to convert its Bitcoin trust into a physically backed ETF. The decision potentially opening the door for Bitcoin ETFs from various funds. Here's how Grayscale and others reacted to the news.
Huge win for Grayscale, huge win for our investors, and really the crypto and investment community as a whole.
The news from the Grayscale lawsuit is incredibly positive. We still don't know precisely what it means, but the main reason that the SEC has been using for the last decade to reject all of these Bitcoin applications has been struck down.
Courts once again are stepping in to provide regulatory clarity where the SEC has refused to do it. It just shows again that the SEC, when it acts contrary to law, without regard for developing common rules and standards, is going to find itself held accountable in courts of law.
Sui Chung is the CEO of CF Benchmarks, and he joins us now. Sui, you heard it right there. We still don't know what this means. This was a court ruling. This doesn't really have anything to do with the SEC or what happens next.
Very much for having me on the show. I think that you've got to remember that the ruling means that Grayscale will be allowed to the starting line. That's what this ruling allows for, because previously the SEC had just rejected out of hand Grayscale's notion of applying for a conversion of its existing Bitcoin Trust private market product into a public market ETF.
Right, so we're back at the starting line again, and certainly Bitcoin investors, spot investors, have sent Bitcoin lower. Does that indicate anything to you that there might be a little bit of pessimism going forward?
I wouldn't say pessimism. I think the initial reaction, the initial headlines were Grayscale achieves a victory in court versus the SEC. But once people had actually read the ruling and what it meant, and that what it meant was we are closer to having a spot physically backed Bitcoin ETF, but that day hasn't actually happened yet. And as people had digested that, then some of that enthusiasm, over-exuberance, if you like, there was a bit of a reality check, and there are still a number of hurdles, a number of milestones that need to be crossed before a physically backed spot Bitcoin ETF will be listed in the USA.
So you're the CEO of CF Benchmarks, and that provides the index which would be used in the BlackRock proposal. But there are 30 plus proposals out there. Why just the BlackRock, or would you be also including others in that in the event that they are actually given the go-ahead?
Yes, so Vonnie, but yeah, we are fortunate enough to be partners with BlackRock, but we are also partners with a number of the other applicants that are in front of the SEC, including Wisdom Tree and Valkyrie, to name a few. We are the leading index provider for cryptocurrency. We are the leading benchmark provider for cryptocurrency. The CME Bitcoin Dollar Futures contract, the CME Ether Dollar Futures contract, both settled to benchmark indices provided by CF Benchmarks. We have had, obviously, over 5 years of experience of working with CME and settling their very successful derivatives contracts in the crypto space, as well as ETFs that are listed in Canada, Brazil, and parts of Europe. You know, the USA is a little bit of an outlier.
I'm curious as to what you think will differentiate them then, Sui, because if there are 30 plus and they're all going to be physically backed, what's going to be the difference between them? It feels to me more like a commodities ETF, which is backed by the physical commodity, and there aren't that many of those either.
Yeah, that's a very interesting point. That's kind of the $64,000 question. How will this market shake out? What will the parameters of competition be? Will it look more like, say, equities and fixed income, where you have a number of providers providing ETFs that seek to deliver similar-ish outcomes? Or will it look more like the commodity space, where you tend to have one, maximum two ETFs that represent a specific commodity, like your USOs and your GLDs for oil and gold, respectively? That'll be a fascinating thing to see as and when the applications are approved and we actually see the ETFs list.
Sui, what changes might need to happen in the applications in order for them to satisfy the SEC at some point? Are you giving any advice?
Well, we're not advisors, we're not regulatory advisors, but we have had quite a lot of experience in this space, given CME, given the other issuers we work with in other parts of the world. Obviously, each regulatory jurisdiction is unique, has its own rules, but we have seen over the past 10 years a number of applications in front of the SEC, and the SEC has been very transparent in why it denied those applications. So that's all a matter of public record. And if you recall, in this latest spate of ETF applications, what is different, what marks them out versus the ones that had been tried previously, is the inclusion by the listing exchanges, the national stock exchanges that will seek to list the ETFs for trading, is that they have information sharing agreements in place with major spot cryptocurrency exchanges, which is something that the SEC has said on a number of occasions that it wants to see. It's a bar that has to be met before it will list, before it will allow the listing of any spot Bitcoin ETFs.
Sui, with the idea that there are roughly 30 applications, as we've said, up for approval, give me a benchmark. How many do we need? Is this all for retail investors? And really, do we need 30? How many should be given the green light?
Well, I think in terms of given the green light, if they meet the SEC's requirements, then of course they will all be given the green light. Now, as to the question of how many the market needs, as I said, that's sort of the $64,000 question. It's difficult to know the sort of shape and structure that this market will take within the ETF ecosystem. You've also got to remember that you're talking about different managers, but they will appoint different custodians. They will have different fund administrators. An ETF, because they've become so common and such a well-used instrument, we do forget that there are a number of service providers behind any given ETF. And because we're in new territory, it's a greenfield space in terms of crypto ETFs. May very well be that investors will pick and choose based on the full stack of providers, the manager, the custodian, the fund admin, etc., because of the novelty of this particular instrument.
And fees, I'm sure, will play a part as well. Sui, thank you so much for joining us today. That's CF Benchmark CEO Sui Chung. Coming up, Nancy Pelosi on the war in Ukraine and Russia. That's next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Markets. I'm Vonnie Quinn. Bloomberg's Francis Lacroix caught up earlier with former U.S. House Speaker Nancy Pelosi in Venice, Italy, ahead of a charity event. They discussed the current geopolitical situation in China, Russia, and Ukraine. Have a listen.
on security, what is happening in Ukraine is a challenge to democracy, not just there, not just in the EU, NATO countries, but really to the world. And what a tribute to democracy that the courage of the Ukrainian people are. What's frightening is that Putin does not share any values of democracy, of justice, of respect for the lives of people, concern for children or anything. And he's frightening, but it's doubly frightening as a person like the former president who thinks that's okay. Well, isn't that sad? But it's so sad and it's so extreme that it's everything to me is not frightening, but an opportunity.
An opportunity, but when you look at China, for example, if you look at what the U.S. has been doing with China and how they should treat China going forward.
Well, China's a big country, and so are we, and we have to find an accommodation on how we treat each other. But in terms of the three things I named, security, China has been a violator of transferring technology of weapons of mass destruction to rogue countries, A. B, in terms of economics, they've been violated almost every trade standard of access, of piracy, of obeying WTA rules and the rest. And in terms of governance, what need I tell you, Hong Kong, Tibet, Uyghurs, threat to Taiwan, and the rest. So we don't have shared values, but we have a shared planet, and we have to work with the Chinese to save the planet, because they're now, I think, the biggest emitter. If not us, they're second, and they're part of the solution in all this.
And that was former U.S. House Speaker Nancy Pelosi speaking with Bloomberg's Francine Lacroix. Meanwhile, the Biden administration has formally asked Congress for a short-term funding package to avoid a government shutdown on October 1st. Bloomberg's Eric Wasson reported on the news. Eric, I can't help it, but we're back here again. Does it get any easier? Is it going to be easier this time?
It's actually not. There's a lot of worry on Capitol Hill and in D.C. that we're facing a possible government shutdown on October 1st. The House Freedom Caucus and other hardline conservatives really are opposing even a short-term government funding bill if it doesn't, change border security policy, doesn't cut billions from the budget. It's going to be really up to House Speaker Kevin McCarthy whether he goes along with that line or kind of teams up with Democrats to keep the government open. And it's very much an open question right now.
How has his math changed? Because the last time he didn't really have much to work with, and yet he managed to pull it off. He managed to get some of those more extreme Republicans on his side, because don't forget, he can be ousted with one vote, right?
Well, that's right. I mean, the vote could be called by a single member, and only take 4 or 5 of them in order, if Democrats all stuck together, to oust him. So I think it is tough math for him. And the Biden administration request also makes it more difficult. They're asking for $40 billion, including 24 for the war in Ukraine, which is opposed by some conservatives. They're asking for, even today, another $2 billion for refugees, which is a big hot button issue. They're asking all kinds of spending increases that are just not going to be palatable. On the other hand, the Senate Republicans are kind of siding with Biden. We saw Mitch McConnell, who did have this freeze episode this week, prior to that, saying he expects a short-term spending bill through December. So the Republicans in the Senate are not really lining up with House Republicans, kind of leaves them more isolated, may bode well. But if we don't see a shutdown October 1st, there's definitely one on the table for December if they continue it then, because then is the big question, does McCarthy put a bipartisan deal on the table and have a vote? And I think that he may be reluctant to do so.
I mean, will Republican priorities be pulled in other directions at some point, such that this will become less of a priority given everything that's going on with the special counsels and, frankly, the election cycle?
Well, it's interesting. I think Kevin McCarthy is certainly talking more about the impeachment inquiry into Joe Biden. He's mentioned that a shutdown would possibly complicate that investigation. So he's definitely looking to get the conservatives more interested in this impeachment push, perhaps to take some of the heat off of the government funding effort. But so far, conservatives are not really buying it. They're saying we can do both. Impeachment inquiry into Trump and others went forward under a shutdown. So, I think that might be a tough sort of act for him to pursue.
Do the Democrats have an economic argument here in the sense that Biden can take credit for an economy that's really picking up steam again, and that, by all accounts, isn't doing so badly. We had consumer spending up once again this month, and use that to make his case for the amount of money that he wants to spend on various projects.
I think certainly if the Congress fails to pass a stopgap measure, and we see a government shutdown, we see amid all these disasters, an inability to cover the Maui wildfires and Hurricane Idalia, I think it tends to be the case that Congress and Republicans in Congress in particular would be blamed. And there's also a risk that if a shutdown happens in October, when we're looking at this soft landing with the Fed hikes, it could be perfect timing to sort of tip that into more of a possible recessionary situation. And then if we did have a recession, the president could blame Republicans. So it's a really big risk, I think, for Republicans to engage in this. And I think in the end of the day, probably even if there's a shutdown, it would be short-lived and they would back off.
Eric, thank you so much for your time today. That's Eric Wasson. Still ahead, global investments in renewable energy hit a record high in the first half of this year, but solar stocks are stumbling, and some hedge funds are actually now betting against renewable stocks. We'll have details next. This is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
Bloomberg Markets, I'm Bonnie Quinn. Time now for our weekly Bloomberg Green segment. A number of hedge funds have started shorting renewable energy stocks that the Biden administration's Inflation Reduction Act is meant to help. And solar stocks in particular are underperforming, despite global investments in renewable energy hitting records. Let's bring in Bloomberg NEF reporter Paul Lascano. So Paul, it's not necessarily that the IRA is meant to help the stocks, but it is meant to help the companies, right? There's spending going into these companies. So why are solar companies not doing so well?
So solar manufacturing companies really compete globally. And the US just represents about 10% of global, less than 10% of global solar demand. So while the generous subsidies in the IRA are certainly helping some of these companies, overall these companies, especially the manufacturers, have to compete globally. And they're competing globally against very, very fierce competition as a lot of the manufacturing expansions are going on underway in China and Asia, and they're really bringing costs down. And module prices, which is the main product that they sell, are really plummeting.
And so is everybody just looking to China in order to meet their renewables goals? Is that what's happening?
So China is the factory of the world, as we all know, and this is true for solar as well. For the US, they mostly rely on imports coming from Southeast Asia rather than China, but a lot of those factories are owned by Chinese companies as well. So China is by far the biggest market for new solar additions, and it's far outpacing the US. But still, it just remains the factory of the world and is where a lot of the IP and a lot of the technological progress is taking place.
So the other thing that's happening is that obviously solar and wind companies are extraordinarily capex intensive. What impact are higher rates having on plans to, put money into research and development, into manufacturing plants, into more, basically?
Yeah, certainly. The IRA has attracted a lot of investment into the U.S. across the different clean energy sectors, and solar has not been an exception. And those manufacturing subsidies are really bringing down the costs of making panels in the U.S. But even after those subsidies, the competition that's coming from Southeast Asia is fierce. And these factories in the U.S., despite getting really generous subsidies, are really going to struggle to compete against best-in-class facilities in Southeast Asia that are fully vertically integrated.
We have a great story on the Bloomberg today that a number of hedge funds have started shorting renewable energy stocks. This was a thing a while back, and it seems to be a thing again now. I mean, is this what's needed, a culling of some of these energy stocks?
Yeah, I don't necessarily know if hedge fund shorting is what's needed in the market. Really, what's needed in the market is for grid connection bottlenecks to ease to let solar and wind projects getting built much quicker and allowing the market to grow even faster. What they're probably seeing is oversupply and competition really being fierce globally. And then higher interest rates has been an issue on the renewable energy industry as well. And even before the IRA, rising interest rates have really increased the cost of renewable energy project financing. And that's one of the key arguments that some of these hedge funds are making as well.
Yes. Paul, thank you so much. That is BNEF solar analyst Paul Lascano. Do stick with us. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come. I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg.
I'm John Ehrlichman. Welcome to Bloomberg Markets.
I'm Bonnie Quinn. Let's get straight to it. A quick check on the markets now. We got some benign inflation data out of the US today and some good employment and personal spending data as well. We are seeing not too much movement in the indices themselves, a little bit of whipping around for the S&P 500. It was negative a couple of minutes ago, now about 1/10%. A couple of big moves in individual stocks, though, and we'll get to some of those in a moment. The NASDAQ, of course, is outperforming as we have come to expect in 2023. Bid for treasuries, the two-year yield at 4.86%. But bear in mind, it was at 5.10 just a few days ago. And the dollar index is bid to the euro is having a bit of a difficult day. Worse data out of Europe than out of the United States today, John.
All right, Vonnie, well, let's stay on that theme of tech outperformance today on a cautious overall trading session. First of all, you've got Salesforce, which soothed some potential concerns about the outlook with its latest financial guidance, and that stock up more than 3.5% today. We've also been watching Shopify, which is one of the standout names in both Toronto and New York, as the e-commerce giant has struck a new deal with Amazon to tap into its logistics network. The market responding with a 9% mover higher for that stock. Cybersecurity, even in an uncertain economy, gets attention with a name like CrowdStrike. And based on the latest quarterly results from that company, investors too liked what they heard. That stock up about 9%. But we are obviously watching what's happening in the pet economy as well. And we had Chewy, Vonnie, for example, with some numbers that might reflect an economy that is weakening and maybe people paying a little bit less for their pet treats. And you've seen the broader industry, including a name like Petco, under some pressure today.
Yeah, if you're crimping on your pets, that's something we definitely need to keep an eye on because people don't tend to crimp on their pets, right, John? Well, when it comes to the overall economic picture, we heard earlier from Citi's Andrew Hollenhorst about how he thinks the Fed will interpret the latest data.
I think what we heard from Chair Powell last week at Jackson Hole was that although they'll be attentive to both growth and inflation, right now they really do have to concentrate on those upside risks to inflation. That's where you're coming from. We still have various measures of core underlying inflation that are running too high. And that means that there could be a period of time when you see somewhat weaker growth data, but the Fed is still holding rates higher.
Well, economist Stuart Paul from the Bloomberg Economics team has been writing extensively about this. Let's bring him into the conversation. Great to have you with us, Stuart. If you had to characterize the progress being made in the fight against inflation, how would you put it?
There's been some very favorable base effects that have allowed headline inflation to continue fading. Energy prices fading from where they were, say, upon the invasion of Ukraine. That's been a favorable effect. Those favorable base effects have totally been stripped out and are not going to be serving as any sort of tailwinds in terms of providing the Fed with any sort of benefit to reach its 2% inflation target going forward, though. Fortunately, we've seen wage inflation start dissipating quite a bit, and that is something that the Fed is going to be finding helpful in sustainably reining in inflation.
How closely do we have to look at these figures? Because if you push it out to the third decimal point, the core number actually went up again. And, that's the one that the Fed seems to prefer, core PCE deflator, and that's not a good thing.
No, so I think that we could probably smooth out the third decimal place. In fact, I think that when we're thinking about the Fed and its policy making, they're primarily looking at 3-month moving averages. So if we're thinking about core PCE inflation as a 3-month moving average, we're somewhere in the range of 3%, 2.7, 2.8%, if we were to annualize the monthly prints that we've seen recently. And I think that that's something that the Fed is going to appreciate. I think that there's still room to continue leaning against inflation. It still does not want to see some sort of secondary surge in inflation as we saw in the 1970s. So as Andrew was saying in the previous segment, there is room to expect the Fed to maintain its higher for longer posture.
Stuart, just going back to where the economy goes, and maybe we'll get some more clues with the jobs data tomorrow, but I know you've been looking at some of the trends with spending as well. What are you seeing there?
Today's report was really interesting because it defied a lot of the trends that we've been seeing. Today's PCE inflation, today's personal income and outlays data was quite a bit of a head fake. So we had 0.8% month-on-month growth in PCE spending and nominal PCE spending, and a big part of that was driven driven by nearly 11% growth in movie ticket sales, right? I mean, it's a pretty wacky dynamic going on in the background where you have Barbie, Oppenheimer, and Taylor Swift and Beyonce driving so much spending. It will provide for about 50 basis points of growth in the 3Q GDP print, but a lot of that comes from a sense of urgency to spend on these experiences that are not going to be there in Q4. So I think that we return to a trend that's more so in line with what we see on the income side, which is calling for a slowdown in growth.
All right, Bloomberg economics economist Stuart Paul, thank you so much for joining us.
Thank you.
We'll be watching those jobs numbers in the morning very closely. Well, let's now connect the economy to one particular stock. Dollar General is falling, plunging after slashing its profit forecast for the second straight quarter. Bloomberg's Brendan Case covers retailers for us. And Brendan, is this a Dollar General story, or is this a consumer story in the sense of the layer of consumer that just doesn't have those discretionary funds anymore?
You know what, Vonnie, there's definitely a macro effect. There's no doubt that lower income consumers are under a lot of pressure. That affects Dollar General, but that affects retailers, across the board. And I think what we're really seeing today is much more of a company-specific story. If you look at comparable sales, same-store sales for Dollar General in the latest quarter, they were essentially flat. In fact, they fell very slightly. Compare that with gains of more than 6% at Dollar Tree, the other big dollar store chain, and at Walmart, which also has a lot of lower income customers. And so if you look at that gap, I think what you're really seeing is sort of an increasing signal that Dollar General is underperforming its rivals after years and years of outpacing them.
Brendan, let's lean into that. You wrote about in your story some of the changes at Dollar Tree, which include former Dollar General management playing a key role at that company now.
Yeah, that's exactly right. KKR took that company public again in 2009. They brought in a CEO named Rick Drayling, who for many years at Dollar General presided over big-time store growth, large gains in sales, very, very successful story. He retired, but came out of retirement very recently to join a turnaround effort at Dollar Tree, which is backed by an activist named Mantle Ridge. Dollar Tree has problems of its own. It cut its own profit forecast, earlier this month because of cost pressures, but they're really getting traction on the sales side, bringing people into the stores, which is a pretty sharp contrast to Dollar General, where customer traffic actually fell a little bit last quarter.
Brendan, what's the outlook? Does Dollar General need to reduce its footprint very quickly, very fast, or renegotiate leases, or does it suddenly become a target?
Well, they're looking to continue growing. They've got more than 19,000 stores in the U.S. It's the biggest retailer in the U.S. by store count, and they're sticking with their plan to add almost 1,000 stores this year. There is, however, an increasing sense that maybe the growth they've gotten a little ahead of themselves. And what they're doing is they're going back and they're boosting staffing hours. They're taking a lot of steps to try to improve the conditions of the stores. I think that the comparable sales number is a pretty clear indication that their stores, their customer experience is not the best. They need to improve that, but they think they can do that while still hitting the accelerator in terms of boosting that store count. They could be nearing 20,000 by the end of the year.
Well, Brendan, thank you so much. That's Brendan Case, and he joins us from Dallas. Coming up, we'll look at the health of Canada's banking sector as CIBC becomes the last of the big six to report results. That's next. This is Bloomberg.
Markets with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's always for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm John Ehrlichman with Vonnie Quinn. Time now for our stock of the hour. We're tracking shares of Canadian bank CIBC. They've been under pressure after profit fell short of estimates in the latest quarter. With economic uncertainty, CIBC is setting aside more money for potentially bad loans. And just like with some U.S. banks, a shaky office market is potentially eating into performance as well. Let's get some more perspective from Mark Nairn. He is a senior director for North American bank coverage at Fitch Ratings. Mark, great to have you with us. Your reaction to a bank like this setting aside more money for potentially bad loans?
Well, thanks for having me. On average, this was one of the weakest quarters for all of the large Canadian banks since really 2020. And we're seeing this underperformance before the economy has absorbed the full impact of rate hikes. You know, that said, banks are in a good position, including CIBC, from a capital, liquidity, and loan quality perspective. And not only that, but there are signs that some of the pressures on earnings are stabilizing, even if they're not going away anytime soon.
I think one of the challenges within the banking sector is figuring out where the potential sore spots are with the regional banks. Obviously, there's been a lot of focus on what's happening in the commercial real estate market. CIBC itself today talked about some of the challenges there. But of course, in Canada, where you have a lot of people in shorter duration mortgages than the U.S., there's a look at the health of the Canadian economy, given all these higher interest rates that we've seen. What are you watching to try to determine the health of the North American banking sector right now?
Right. For all of the banks across North America, I think we look at three things, and this has been the motif for the last year or so. That's the cost of deposits, which have been going up steadily, after the benefits from the rate hiking cycle kind of wore off. Then you've got the cost of salaries. So operating expenses and negative operating leverage has really been kind of embedded. And then lastly, as you mentioned, the provisions for bad loans, and those have roughly doubled at the Canadian banks over the course of the last year. But when you look on a quarter-over-quarter basis, all three of those pressures, they seem to be stabilizing, which is good news and provides some positive takeaway.
Mark, since the failures of Signature and SVB here in the United States back in March, regulators have put in place, or at least have proposed to put in place within the next 3 years, a whole raft of things like living wills and, more money into a pot in case of systemic crisis and so on. Are there any concerns like that about Canadian banks, that there might be, issues with what's on the books and what it's tied to and whether it's market to market and so on?
The domestic systemically important banks in Canada are already complying with the rash of those large regulatory requirements regarding resolution, regarding mark-to-market. So that's not really a huge concern for these banks. They're already compliant with sort of the international standards. They report the liquidity coverage ratio. They include AOCI in their regulatory capital. What you do see is some incremental changes on the margin to their capital requirements. They talked about the impact of a forthcoming sort of market risk charge, but they are already compliant with the highest international standards. So it's really less of a concern for them.
Now, we have seen plenty of moves with the loonie as well this year, and obviously interest rates, but the Bank of Canada might be done or nearly done. How are banks reacting? What will it do to their net interest margins and their bottom lines in terms of deposits and so on?
Right. So on this, we did see some positives this quarter. So just to recap, beginning at the beginning of the hiking cycle, when banks were benefiting from the rising rate environment, and for the last year, deposit costs have really started rising quickly. More importantly, the mix of those deposits have been changing unfavorably as customers have been moving their money from demand accounts to higher yielding term accounts and GICs. But the good news is the rate of net interest margin compression is slowing. And in fact, for a couple of banks reporting this week, net interest margins were actually flat or even up a bit quarter over quarter. So it looks like we're reaching a kind of a peak on net interest margin compression. Surely it'll float around a little bit, but I think the worst of the compression may be over, particularly if the Bank of Canada has reached or approached its terminal policy rate.
One other consideration when you're trying to improve margins is the level of employment, and we're waiting for a U.S. jobs report tomorrow. We're about a week away from the next Canadian jobs report. Obviously, cost cutting or cost controls have been at least one of the takeaways from the Canadian bank earnings season. What does the employment picture look like going forward, in your opinion?
Sure. So, like I said, negative operating leverage has been a big motif for the last year. We heard of banks having to make large and frequent salary adjustments to retain their staff, and that continues to be a theme. But I think what we heard on the earnings calls over the last few days was tougher rhetoric about cost cutting, including staff reductions announced by Royal Bank and Bank of Montreal. Expenses have also been kind of inflated related to integrations of recent acquisitions, some litigation charges, et cetera. So I think the message overall is that this war for talent has kind of abated, and that should help banks manage their operating costs a little bit better. To your question about broader unemployment, were unemployment to rise among bank customers, that clearly would be incrementally negative for credit quality.
One of the trends we'll have to watch. Hey, Mark, thanks very much for your time today. Appreciate it. Mark Narrett joining us, Senior Director at Fitch on the banking system. Coming up, we're talking a little bit more about the travel world. Google says it's the best time to book vacation flights. And we're going to chat with Hopper's president, a well-known travel play that's embracing technology about some of the travel spending trends. This is Bloomberg.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
This is Bloomberg Markets. I'm Bonnie Quinn. This is John Ehrlichman. Well, ahead of the long holiday weekend, the Labor Day weekend here in the US and Canada, affordability is a big question for many travellers. And with a soaring cost of living, scoring a good deal could be make or break when it comes to actually locking down your next vacation. Well, Canadian startup Hopper is betting on that with its price prediction tools. Let's bring in Dakota Smith, who's co-founder and president of Hopper, for more. So I think, Dakota, the first question on anyone's mind is, when do I need to be booking if it's a vacation coming up and I want to get the best deal?
Hi, thank you for having me. I would say the short answer is book as far in advance as you can. So that's really where Hopper's tools come in handy, because you can search for a trip, set up a price alert, and receive notifications about price volatility. So what we're seeing is that consumers are booking last minute still, kind of in a trend that's carried over from maybe the start of the pandemic. And that's really costing them when it's time to book, because they're paying more than maybe they have been before due to that.
Dakota, there's been a lot of focus on AI this year. It's something you guys have been focused on for quite some time. And, when we're talking about Elon Musk trying to build an everything app, you guys have been focused on creating a travel super app. How does that work, and why are, in particular, younger travelers leaning into that?
Yeah, so AI has been at the core of everything we've done at Hopper for a long time, along with machine learning and big data. So our proprietary price prediction, which you alluded to, that's built on trillions of data points, trillions of price points, and uses machine learning to help consumers find the best time to fly and book. Similarly, we have a kind of a suite of proprietary fintech products that give consumers more flexibility and things like that when they're booking. And those are all priced using machine learning too. And we're starting to explore more generative AI models like ChatGPT in terms of ways that they can help consumers plan their trips. So what we found with our app, that's what we're best known for. It's been installed maybe 100 million times, predominantly used by young travelers, Gen Z, young millennials. I think our average consumer's age is 25. They're looking for great prices. They're very flexible on dates, on destinations even. So we're trying to help guide them to make the right purchasing decisions.
And so then how does Hopper make its money, Dakota? Is it from pass-through fees? Do you get a little percentage of the booking if there is a booking? Is it advertising?
Yeah, so we get a percentage of everything we sell. So this year we're going to sell about $6 billion of travel products. both directly in our app, but also through our B2B partnerships. Like we power Capital One Travel for Capital One credit card issuer in the US. So when someone buys a hotel or flight, we earn a percentage of that as a commission from the supplier. Similarly, though, we also sell our own suite of fintech products, which give consumers maybe more flexibility or peace of mind. An example is a product called Price Freeze, where you can lock in any price you see in the app for up to 21 days. We also earn revenue on those products too.
And we should note that your co-founder, Fred Lalonde, had told us here at Bloomberg not too long ago that an IPO might be something you guys will consider. So your business is growing quickly. But given you've got all that access to data, Dakota, we talked earlier about how it's been an interesting summer. A lot of people going out to concerts, Taylor Swift, and yet can that spending reality continue if the economy is cooling? Does your data give you any insight on whether travelers are still going to be doing the same amount of traveling into next year?
I mean, that is the open question for the entire industry. I mean, that said, the data we do see, it doesn't show any softening of consumer demand. And we even survey our consumers, to try to stay ahead of this trend and things like that. So 80% of our customers said they plan on spending more on travel in the coming year than they have in the last year. And this year was actually the first time this summer that international travel returned to its pre-pandemic levels. So, that was not exaggerated that a lot of Americans and Canadians were traveling to Europe this summer, but we even saw travel to Asia return to its pre-pandemic levels. So far, there's no signs of the surge abating.
All right, Dakota, thanks very much for the perspective. Dakota Smith of Hopper joining us on the travel trends. Vonnie, ahead of a big weekend. Now, in the markets, as we wrap up August trading right now, we're seeing some cautious trading in the market.
For sure, and obviously markets were a little bit relieved after Jackson Hole, but they're also a bit trepidatious about tomorrow's jobs report, right, John?
We'll be certainly watching that employment data very closely. For Vonnie Quinn, I'm John Ehrlichman. This is Bloomberg.
IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
Market on this last trading day of August, live from Studio 2 at Bloomberg headquarters in New York. I'm Katie Greifeld.
And I'm Bonnie Quinn, and we're kicking you off to the closing bell here in the United States. Well, we had a triumphant week, really, for U.S. stock bulls, but it is fizzling just a little bit now, and we can see the S&P 500 is up about 0.1%. It was lower a little bit earlier. There's some individual stock stories in there that we will be getting to at a certain point today. The NASDAQ 100, as we know, it's not unusual that it should be higher than the S&P 500. It's up about 0.4%. Of course, we got that inflation data, which showed that the core PCE deflator was coming in just at around 0.2%. So that calmed markets. That was a benign reading. We also obviously had the JOLTS data, which showed that perhaps we're seeing a little bit of rebalancing in the labor market. We'll have to see if that continues tomorrow morning. All eyes will be on that report, and perhaps that's why we're seeing a little bit of a sort of, calm churning of the waters here. Definitely a bid in treasuries. The 2-year yield at 4.865%. That's been the same for a day or two now. And a bid in the dollar index. I do want to point out, though, that we have had a 4-day run now for the S&P 500. And we'll have to see if we have a fifth.
That's right. Yeah, of course. It does feel like we're in a holding pattern, like you mentioned, because you look across the board, trading volume much lower, of course. And we know that we're heading into a 3-day weekend, and that also we also know that the Fed's jobs report that, of course, they're going to be looking at very closely is tomorrow as well. So we'll see what happens there. Of course, you can see that the S&P is barreling higher, and that September is one of the worst months on record on average for the S&P 500. So we'll see if we get there. But like I mentioned, we do have that jobs report tomorrow, and it's one of the last ones, the last one before the Fed's September rate hike. What that means for the Fed's path forward, Wall Street a little bit divided right now after we got some mixed economic data this morning just from initial jobless claims and also that core PCE. So right now about even odds when it comes to a November rate hike. And Vonnie, of course, what the Fed's path forward matters a lot for leadership in this market.
Well, is it done or is it not done? Is it going to be done at next month's meeting? We are expecting a pause, but maybe the one after that or the one after that, there might be even another hike if we do see inflation continue to increase and, of course, the U.S. economy to continue to heat up. Can't really say for sure right now. We are in that holding pattern. I did want to point out, though, that some of the narratives beneath the surface of the stock market are still in place, including that mega tech leadership. It's coming back. All of those stocks that we were sort of watching in awe when they were rising in the last 6 to 7 months, well, they're right back. Look at this. The equal weighted index versus the non-equal weighted index, and you can see that we're at the strongest in 2 years right here at 0.74. Does that continue? Well, that's the question that most investors are asking themselves.
It's a big question right now, and luckily we're joined now by Quincy Crosby. She is Chief Global Strategist for LPL Financial, going to help address some of the big questions hanging over this market at a pretty interesting juncture, Quincy. It feels like, okay, we had decided that the narrative was bad in August, then we saw this lift to end this month. As we head in towards September, which of course is seasonally a pretty terrible month for the S&P 500, what's the mood music on stocks right now?
Well, when we look ahead to the end of the year, from the end of July to the end of the year, the statistics, the historical picture looks very good. We had a very strong move from last year till July, the beginning of the year until the end of July. And typically, historically, the market should close higher. In addition to that, it is very rare that you have 2 years of a market down, and that was unusual. It was 1999, 2000, 2001, and 2008, and 2009. This year does not fall into that pattern. We have the presidential cycle, and we have companies that are actually doing quite well. So it's not a given, by the way, just because of the historical negative seasonality, that September is a horrible month, but we should be prepared for it. And the financials, they're under pressure, but the big tech, as you said, they are coming back. And the semiconductors overall are coming back. We want to see that because they are a major leading indicator. They are a barometer for global demand.
It's interesting to hear you say that, Quincy. Talk a little bit more about that. When you're thinking about what's the bellwether here, what are the canaries, if you will, that you should be watching? Sounds like the semiconductors.
Well, absolutely, because if they start pulling back in a material way, it's very difficult for the rest of big tech to keep moving. We have to remember that NVIDIA, basically a semiconductor name, they were well known in the gaming industry as the semiconductor part of the market, now up there with the big megatech names, pure megatech names. So if they start pulling back, you can expect, I think, the market to say, we're seeing a slowdown coming. It spreads beyond just technology when the semiconductors are pulling back. That's how much of a bellwether they are. And in fact, I want to point out, when this bull market was born, the semis led, big tech led, but we did not see transportation leading. And that worried a lot of people, maybe old-fashioned, but then we heard the counter argument, and that as well, the semiconductors are really the new transports.
Quincy, with all your background in fixed income, are treasuries a screaming buy here, and where, if so?
Well, yeah, I mean, they are attractive. They're providing an income. They are, what shall I say, on the short duration side, they're well. And by the way, if you believe that the economy is slowing and that we are due for a broader slowdown, you probably want to go out long duration because then you get your capital appreciation plus the yield. But if you're in short to maybe the belly of the curve, I think you'll do very well. Investment grade corporates are doing well, high grade. I would stay away from high yield. I know that that there's tremendous attraction to it because they've been doing well. They're pretty tight in terms of the yields. But September they have kind of a negative profile because September could be difficult. Maybe it breaks the cycle this year, but we would say stay away right now.
Quincy, what are you anticipating in terms of issuance for corporate issuers now as rates sort of maybe peak or at least are close to peaking? Does issuance continue? Will it be attractive?
Yeah, I think issuance is going to continue. And I think that as the yields pull back a bit, if they continue to pull back, you're going to see attractive offerings and bidders for it. There's attraction for corporates. There's attraction for the treasuries.
All right, Quincy, got to leave it there. Really appreciate your time on this final trading day of August. Our thanks to Quincy Crosby of LPL Financial. Now, coming up on the close, we'll get a preview of tomorrow's highly anticipated U.S. jobs report. We're going to do that with Elise Gold. She is senior economist at the Economic Policy Institute.
Plus, shares of UBS soar after the bank posts a record profit and outlines major cost cuts following the acquisition of its former rival Credit Suisse. We'll have the latest on what UBS is planning.
And we'll get insight on the climate for ESG investing in conversation with Stephen Meyer, CIO of New York City Retirement System. All that and more coming up. This is Bloomberg.
hardest thing in life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute, and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier you will be.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Well, the Fed's preferred underlying inflation measure posted the smallest back-to-back increases since late 2020. But at the same time, we also saw spending jump. So let's break it down now with Bloomberg U.S. economy reporter Reed Pickard. And Reed, it's interesting, again, to see inflation cool, spending pick up on the latter part. Is that spending sustainable?
So, we saw this huge burst in spending in July, and it was driven by things like Amazon Prime Day. We saw increases from utility usage as this heat wave drove people to spend more on their air conditioning. But in terms of looking forward, it's not clear whether it's sustainable. One hint that we have was the savings rate, and we saw this savings rate really decline in the month to its lowest level since November. And when you do see this decline in the savings rate, we saw a pullback in inflation-adjusted disposable income. It does suggest that this burst of spending that we saw will be hard to sustain going forward, especially with the headwinds of declining pandemic-era savings and the resumption of student loan payments.
And of course, Reid, even if some of this data, was a nice thing to see for the Federal Reserve and even for investors, it doesn't necessarily mean that people are not still going to feel the bite of inflation, right? The overall figure was still, quite high. The core PCE deflator year over year was still 4.2%.
Right. So these year-over-year numbers are still, quite high, especially on that core number. We've really seen a lot of progress over the last year in terms of inflation moving towards the Fed's target. But I think it was really clear when we heard Powell speak at Jackson Hole last week that the Fed is far from done. And when you see that high level of year-over-year inflation on the core metric, it shows why. And especially when you kind of dig into some of the details. For instance, we saw the super core measure, which excludes housing and energy services. It was, propped up by a volatile metric known as portfolio management services, but you still saw that come in hotter than you'd like to see. And so there's definitely still a little hesitation about saying that we're all clear on the inflation front.
Super core. Still trying to work out what exactly that is, but great point that actually you did see that heat up a little bit. It's going to be interesting to see what that means for the Fed when we finally get some Fed speak. But just quickly, Reid, let's talk about what we're going to get at 8:30 a.m. tomorrow. The August jobs report. What are people thinking?
So Jobs Day, always one of the most exciting days of the month. Economists are expecting for 170,000 jobs to be added in the month. And, that's another solid gain, but it's part of this gradual moderation that we've been seeing in the labor market and that the Federal Reserve wants to keep seeing. So you're seeing this moderation in job growth, you're seeing this moderation in wage growth, and meanwhile, you're seeing the unemployment rate stay near these historic lows. So it'll be interesting to see if we can continue to see that trend continue, or if you see any kind of reacceleration in the months ahead. But for now, it's fitting that picture of a labor market that's coming more into balance.
All right, Reed, I really appreciate the preview. Our thanks to Bloomberg's Reed Pickert in D.C. And we want to keep this conversation going right now with Elise Gould. She is senior economist at the Economic Policy Institute, joining us now. And Elise, it's great to have you with us because it's just been an embarrassment of riches when we talk about labor market data this week. We had JOLTS, we had initial jobless claims, we're getting NFP tomorrow. When you boil it all down, and I know we don't have the NFP data in hand yet, but what does this say about where we stand in this labor market?
Well, I think it's still a very strong economy. The job openings data showed us that the job openings are coming down. That's more indicative of that great reshuffling slowing down a bit. I think we're expecting and will see and have seen for many months job growth well in excess of population growth. So not only are we keeping up with the population, we're also bringing in more workers month after month off the sidelines. Women's employment to population ratio is still strong. Expect to continue to see that be strong there. Wage growth, as you already mentioned, decelerating. Inflation falling faster than wage growth. So when we get the real wage numbers in a couple of weeks, I expect those to continue to rise so that living standards of workers and their families in this country will be better.
So Elise, you know, the estimate is for about 170. What would cause the Fed to pause? And I don't mean pause its interest rate campaign. I just mean to pause and think that maybe there's something else going on in the economy.
Well, I think that those are the key measures to look at. So how fast is job growth? Is unemployment staying low? Is wage growth continuing to decelerate? Those would all be measures that should lead the Federal Reserve to pause. I think that would be important. I think we're also looking at where are there maybe canaries in the coal mine that can tell us that there is trouble ahead. For that, I would look at historically marginalized groups that tend to do poorly, more poorly, and maybe the signs of a recession coming. So we've been watching what's happening with Black unemployment, with Hispanic unemployment, what's happening with young workers, with workers with lower levels of formal education. Those would be the signs I'd be looking at to see whether or not there's trouble ahead. Again, many of those series are volatile, so we'd want to look at some longer-term trends there.
Is it possible for the number to be too low tomorrow?
I don't expect it to be too low. I think that as long as we're above around 100,000, as I mentioned, we're going to be keeping up with population growth. We are approaching full employment. Those are all positive signs for workers and the labor market as a whole.
And Elise, I want to talk a little bit more about wage growth and what we're seeing there, because you've heard on the fringes some talk of maybe we're starting to approach a wage price spiral, the idea that if we keep getting wage growth levels around these levels, when we think about the path back to 2% inflation, that's not a sustainable dynamic. When you think about that debate, where do you fall?
Well, when you look at the data, inflation is falling steeply. So the rate of price growth has been falling steeply and wage growth has been decelerating, but not nearly as much as what we've seen for inflation. Again, that's why we're seeing some real wage growth here. But it's pretty clear that wage growth is moderating and that is coming down. Inflation is coming down. So those are not concerns that I have. The labor market certainly was not the cause for inflation in the first place. And that's what you would see if you see some sort of a spiral. Again, it was coming from outside the labor market, many other pressures of the pandemic, what was going on in Ukraine, other kinds of issues, demand shifts in the economy. It was not from the labor market or any particular pressures from faster wage growth.
And I also want to get your thoughts on the recession conversation. Obviously, what kind of landing we're heading for, the jury's still out. But if we were to get a recession in this cycle, in this economy, is it possible to have a recession with full employment?
It's curious how you would define a recession then. I mean, my concern is if the Federal Reserve continues to move too fast, that it will cause a recession. And right now, legislators in Congress, unlike during the pandemic when there was a lot of action and there was a better safety net in place, we will not have any counter-cyclical measures to help those workers if they lose their jobs, like the UI reform that was put in place, the unemployment insurance changes that were made. None of those were made permanent. And so there could be a lot of pain in the economy, again, disproportionately for historically marginalized groups. So that is a huge risk.
Elise, what are you looking at in terms of interest rate cuts next year? Does the Fed manage to avoid the first half? And how many basis points are we looking at for the entire year?
I think it's just too soon to tell. There's a lot of data that we're going to get between now and then, and I'll be keeping an eye on it.
Sounds like you should be at the Fed as well. Elise, thank you so much for joining us today. That is Elise Gould of the Economic Policy Institute. Coming up, UBS shares soaring to their highest since 2008 of more than 5% now. This after posting results this morning. We'll bring you part of our interview with the CEO next. This is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Quarter, we see inflows on both platforms, not only in wealth management, but also in the Swiss bank, and which is a testament on how much clients really believe in our story.
And that was UBS CEO Sergio Ermotti speaking with Bloomberg Television earlier. And that was after the company posted its biggest ever quarterly profit for a bank as a result of that emergency takeover of Credit Suisse. Joining us now is Allison Williams, Bloomberg Intelligence Senior Banks Analyst. And Allison, of course, when we talk about biggest ever, a lot of that comes back to accounting. But outside of that, what were your biggest takeaways reading through these numbers?
Yeah, so I mean, I guess the net profit is an impressive number, but it's really, not one of the core things we were looking at. Two key real positives that we saw in the quarter. The first really is the stabilization of wealth inflows. And we saw results from both Credit Suisse and UBS. And I think it was really remarkable, Credit Suisse turning positive in June. They've had positive flows in the quarter to date through late August. And deposits. It was interesting to see that Credit Suisse had about 18 billion of deposit inflows in the second quarter, about 14 billion in the third quarter, versus flat at UBS. So really the key takeaway here is stabilization. I think that was investors' biggest concern. It's the key rationale for the deal to work is that wealth business. We heard a lot about competitors eyeing this business at the time, but what we were seeing is really the business coming back and that stabilization, which is core, I think, for the deal's success.
And then, Allison, what are the key questions remaining? They've obviously been operating at warp speed here.
Yeah, I mean, the biggest negative is just that this deal is going to take a long time, and it's going to require investor patience, which is a tough thing to do. But when they're talking about their targets, they are talking about $10 billion of gross cost saves, so that's upsized from the initial number. So that's a big number, but it's going to be realized with substantial integration by the end of 2026. So that's a fair amount of time. And there's obviously a lot of questions in terms of getting to that number. Is it realistic? The bank did talk about some of the job reductions that will be involved. But at the end of the process, the projected cost ratio of less than 70% is less than what UBS had wanted to do standalone before the deal. But the returns, UBS looks at return on common equity tier 1. They're targeting 15% at sort of the exit point of 2026. That's below their former standalone target to 15 to 18%. So that's not as great. The one other, I guess, just flipping back to another key positive that we saw with the deal was the fact that they are going to retain and integrate the core Swiss unit. This is something that actually our Bloomberg News department had done a great job reporting on earlier this week. And that's a key positive, really, because the competitive position that they have is significant. The offset is going to be that the government is obviously going to want them to have a standard of care, and perhaps that's going to require more capital, and perhaps that's where the lower returns come from.
Well, we've seen a 5.2% now increase today. That's what investors are responding to, you think, Alison, or is there something else there?
I think it is definitely a relief rally in terms of the stabilization of the wealth business. And so we saw not only stabilization at Credit Suisse, but for the UBS standalone business, seeing really good momentum and flows on the wealth side of things. And the wealth business is really the key reason that investors want to own UBS. They have always wanted to own UBS. It's the crown jewel. It's the business they liked about Credit Suisse. And investment bank is really the business that they don't like as much. And I think also what we saw today was that business is going to shrink.
All right, Alison, really appreciate the breakdown. Our thanks to Alison Williams of Bloomberg Intelligence. Take a look at these markets right now. Slightly higher, both on the S&P 500 and the NASDAQ 100. We're going to continue to count you down to the close. This is Bloomberg.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Business Week Radio. Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Bloomberg Markets, the close. Let's get a cross-asset check as we head towards the close of commodities markets. Bloomberg's Abigail Doolittle standing by with more.
So commodities, Katie, are staying a little bit more on the risk-off side of the picture today, with the Bloomberg Commodity Index down a little bit. That Bloomberg Dollar Index up about 0.2%. But you can see one spot of strength, crude oil. Brent crude up 1.8%. This is, I think, the 6th up day in a row, the longest winning streak since January. WTI crude up for a 5th day in a row. And of course, some of the OPEC Plus cuts are holding. Russia has agreed to some of those cuts, so traders encouraged. On the other hand, European natural gas, not so much, plunging once again down 11%. Uncertainty around the potential LNG strike in Australia. Plus, some are saying that demand is somewhat weak at this point, so really seeing it for European natural gas. Silver down 1%, probably some of that dollar strength. And then wheat, not a huge decline, down 1%, but when we put this decline into the context of the month of August, we are going to see a pretty significant decline. In fact, this is the worst decline in more than a year. Right now, we do have wheat. Basically, you can see the trend going the wrong way, down 13%. Again, the worst month in the more than a year. It seems to have to do with uncertainty around supply, more supply hitting the market than traders had perhaps expected at the beginning of the month, Katie.
All right, Abigail, thank you for that. And let's get to the latest economic data from China, where the manufacturing contraction actually eased slightly in August and a gauge of new orders improved. That's the good news. The bad news is that developer Country Garden posted a record loss and also warned of a possible default. Joining us now with the latest is Bloomberg Emerging Markets correspondent Sherry Anand. Let's start with the good news, that economic data. It was interesting to actually wake up and see that came in pretty good.
Yeah, I mean, let's start with the good news because there aren't many of those coming from China these days. The headlines have been pretty negative, but at least when it came to the official manufacturing PMI, you said it topped estimates and is now getting closer to that expansion threshold of 50. We had seen some signs that perhaps we are seeing these pockets of strength in the Chinese economy. Remember last week we had iron ore climbing to the highest level in about a month or so, and that's because the central government has continued to invest on infrastructure projects. In this latest set of numbers, we saw new orders improving as well, which is now providing some hope that the slump could be nearing its end. Having said that, the non-manufacturing PMI is still expansionary, but actually easing, and easing more than economists had expected. Within those numbers, you have the sub-gauge of the services activity. That's actually fallen to the lowest since December.
Yeah, it's troubling, Sherry. You know, not going to lie, it's very troubling. More troubling, though, are the prospects for Country Garden bondholders. What's the latest there?
We were expecting that voting by bondholders and that deadline last night. They have extended that deadline again till Friday, 10 p.m. Beijing time. It's really interesting because this is supposed to be about this $537 million bond that's supposed to mature next week. Some of the proposals included a 3-year extension plan, a grace period of 40 calendar days, and also request a full payment upon maturity. Before the vote, we were starting to see some news of uncertainty. Another group of bondholders wanted to declare a default on the yuan bond because of a recent downgrade by Moody's. So right now we're in this wait-and-see period. But Katie, you said it, we have seen the first half loss by Country Garden that came in at $7 billion already, and they are warning of a possible default.
If they did default, just put that into context for us. Is that troubling in that it's a sign of the times, more could come, or does this actually matter for China's economy?
Remember when we couldn't stop talking about Evergrande 2 years ago and that downfall? This property developer was, just a few years ago, the biggest in China. They have 3,000 developments, 4 times as many building projects underway as Evergrande. When they missed their $22 million bond coupons earlier this month, we saw the distress spreading. The broader Chinese junk dollar debt market fell to the lowest levels this year, and you saw those bonds already from Country Garden for the next 3 years trading at junk levels. So not surprising, we are now seeing more efforts by the central government, by the PBOC to support the property sector. We have been talking about lowering those rates on existing mortgages. We've seen that announcement. They're also cutting the mortgage down payments for home buyers. All of this will come into effect September 25th. So we're waiting to see when that support measure can actually translate to some boost for the economy.
But also the yuan, right? Sherry, the PBOC and banks have had to shore up the yuan. Essentially, we've seen a stronger than expected fixing for how many, 20 plus days now?
Because we continue to see this divergence in monetary policy in China, where we continue to see these benchmark rate reductions. But at the same time, you have the rest of the world actually trying to pause or tighten and keep the rates higher for longer. So we continue to see this downside pressure coming from monetary policy. So the yuan now trading at around levels that we haven't seen in 9 months against the US dollar. Very weak, and not being able to get out of that slump, because also, as we started this conversation, the news flow from China has been pretty negative.
All right, well, we'll continue to monitor. Sherry, thank you so much. That is emerging markets correspondent Sherry An. Still ahead, a surge in Sunbelt apartment supply has investors favoring some apartment REITs. It's why Truist recently upgraded 2 stocks with attractive valuations. We'll hear from the analyst behind that goal next. This is Bloomberg.
In global leadership are on Bloomberg.
When the dust settles, Israel will not only remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority.
City. From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
In 2018, the IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those 2 poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
Time now for top calls. Look at some of the big movers on the back of analyst recommendations. And we start with ExxonMobil, shaking off its only sell rating after Redburn upgraded the oil giant to neutral. Now that move reflects oil price assumptions for the second half of the year. As prices continue to rise faster than expected, which analyst Peter Lowe says could help oil refiners such as Exxon. You take a look at shares right now, up a little bit, 0.3%. Next up, we have Chewy. It was downgraded to inline from outperform over at Evercore ISI after yesterday's second quarter report. The analyst is taking a more cautious stance on the pet care company after net additions fell in the quarter following a modest increase in the first quarter. You look at shares right now, absolutely woofing it, down 12%. And finally, we have Extra Space Storage. Raymond James cut its price target to $165 from $185. The firm keeps a strong buy rating on the shares, however. Now, self-storage REITs, they've recently underperformed the broader real estate sector. And while the firm initially believed that the trough in EXR's revenue growth was in the not-too-distant future, the analyst now says that its views were, quote, too optimistic. You take a look at shares right now, currently off by about 1.3%. And those are some of our top calls. Now, let's stick with REITs, but talk specifically about apartments, because Truist is seeing near-term growth potential in the sector, which is why it recently upgraded UDR and Apartment Income REIT to buy. Here with more on that call, I'm pleased to say we have Michael Lewis. He is Managing Director for REIT Equity Research. And it's interesting. It's a troubling time when you look at the property market broadly, maybe specifically in commercial, but it sounds like, Michael, residential, there's some things to like.
Yeah, I think it's instructive to think a little bit about where we've been in the recent past and kind of frame where the stocks are going. The last 3 years have been tremendous for apartment landlords. They've been able to push rents during the pandemic. That's especially true in the Sun Belt, where we already had a secular migration of population and jobs into that region. That was accelerated during the pandemic. And so that was especially strong, and it was reflected in the stock prices. The Sun Belt REITs outperformed. When we got to the beginning of this year, as is prone in the Sun Belt, it's easy to build there. And we're starting to see the leading edge of a supply wave. As we look out over the next 12 months, we think deliveries peak sometime in the first half of next year. And so the stock market forward looking, again, has now kind of reversed itself. The Sun Belt names have underperformed year to date. The coastal names have outperformed. Those stocks, because they've outperformed, we think they're a little bit less attractive. The upgrade of UDR and Apartment Income REIT, we think are kind of tweeners, right? So we screen all the markets by job growth and by supply growth. We think both of these screen as above average on both, and we think with their strong NOI margins, they're poised to post better growth over the next 12 months.
How do rising interest rates factor into your call?
Yeah, so that's more of a broad REIT question, right? So interest rates have been a huge drag on commercial real estate. They're levered investments. They're often viewed as income vehicles. So you have other high yield vehicles that are now competing for the same dollars. And we've seen multiple contraction. In apartment REITs, financing is a little bit more readily available. You have some agency debt and other things. The REITs don't use it a lot, but it's there. The REITs are also much less levered than the typical private investor. So you'll see 30% loan to value. Where you might see double that in the private markets. And so the balance sheets are in good shape. I think overall, though, we're looking forward to a time when interest rates ease a little bit. Maybe there'll be some more flows into real estate. And I think when those flows do come to real estate, I think they'll come to the listed space, because we do think private market values are expensive relative to what you could get in the listed market with the REITs.
What are the movements out there? Are we seeing a lot of consolidation? Are we seeing, more more players pop up? What does the landscape look like?
Yeah, you know, the apartment REIT space has been one that's been ripe for consolidation. There's been a lot of consolidation over the years. We've really ended up with a core group of REITs in the sector now that are very high quality, very competitive. You know, there could be some opportunities to pick up some smaller ones, but the cost of equity isn't really there, and the cost of financing is expensive. I think it's harder to make M&A work in this environment. You also, you know, employment is the primary driver of demand. That's obviously easing. It's not uniform, so California is slow, but Tampa and Dallas are stronger. But that also kind of casts a pale, I guess, over the forward outlook when you're dealing with high rates and you're dealing with easing employment.
And Michael, looking through your call, it's interesting. Of course, as we mentioned, you upgraded UDR and Apartment Income REIT, but then you look at peer Essex Property Trust. You actually downgraded that name. What's the difference there?
Yeah, so we made a swap here, right? So Essex has been an outperformer on that coastal theme. They're focused on the West Coast specifically. And when you look at those West Coast markets, the labor market growth has been lagging. The employment growth has been lagging, and the stock has outperformed a little bit. They do have low new supply, and I think that's been the focus for investors. But we saw relative value opportunity there. The coastal name, again, has outperformed, and it's got lower growth. We see better growth at UDR and AIRC and at better stock valuation. So we thought that was a good tactical trade. In the long run, Essex will still benefit from low supply in its markets. It also, you know, Northern California especially is a boom-bust market. When it busts, it really busts, and when it booms, it really booms. Over the long run, that's been good for them. We like it as a long-term performer, but we think this is a good tactical call while that market is kind of, you know, lagging in the near term.
Talk to us a little bit more about supply, because we talk about supply in the housing market all the time. The fact that there really doesn't seem to be any. When it comes to the rental market, when it comes to some of the apartments and the apartment REITs that you cover, what's the supply picture there?
Yeah, I'll tell you what the bifurcation really looks like. So a pure Sunbelt name like an MAA, we think over the next 12 months, supply is going to be up about 4.5%. You compare that to a bi-coastal name like an Equity Residential, we think it's going to be more like 1.5%. So it's a real dichotomy of what's happening. And again, it speaks to how much easier it is to build and add new product in the Sun Belt. The phenomenon you're talking about in the existing home market, that's a positive for apartments, right? So not a lot of existing home inventory to move into. Now, the REITs don't have a lot of move-outs to home ownership. It's a little bit older, more affluent renter in the institutional quality product. But that certainly is helpful that there's not a lot of options to move into a single-family home.
All right, Michael, really enjoyed it. Got to leave it there. That is Michael Lewis over at Truist. Now, coming up on the close, Stephen Meyer, New York City Retirement System CIO, joining us to discuss the backlash against ESG investing and the impact it has on his business as an investor. That's next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy in 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Time now for our Wall Street Week daily segment. David Weston, the host of Wall Street Week, joining us now.
Thank you so much, Katie. Well, ESG, environmental, social, and governance investing, may not be as popular as it once was, or at least not as popular to talk about, as we've seen from some of the most vocal proponents like BlackRock, backing off their support for shareholder ESG at companies that they invest in. Stephen Myers, CIO of the New York City Retirement System, oversees some $250 billion in assets, and took us through what the shift means and doesn't mean for his investments.
From our perspective, David, it really doesn't impact us that much. I mean, BlackRock is a world-class firm. They're a strategic partner of ours. They're an important part of our investment process. They are our largest single asset manager externally, so they're important to us. But we actually undertake, as a large institutional investor, we vote 100% of our proxies. The proxy voting process is actually part of the assets of the fund, and we have an affirmative obligation to vote those proxies. In terms of shareholder proposals, it's just another means for us to engage with the company. So a lot of our investing, particularly in the U.S., we've got about $70 billion in U.S. equities under management. I'd say almost 80% of those are passively managed. And there's a misconception in the marketplace that passive management means passive ownership. To the contrary, we think passive management really demands active ownership. Not activists, but active ownership, because we intend to be in these indices and these companies for years and decades. So we want to have the ability to impact the performance of those funds in terms of driving long-term value creation over time. So again, we vote 100% of our proxies in-house. I'd say where it's important for us, though, is that BlackRock, it's a big, important firm. A lot of people look at what they do. We'd like to see their support in our shareholder proposals. But we do understand that they've got a number of conflicts out there today. Unfortunately, the whole issue around ESG has become highly politicized. And that's, I think, has something to do with perhaps them, at least on the surface, looking as though they're pulling back from some of those commitments.
Steve, I'm curious about the shareholder initiatives when it comes to ESG, environmental, social governance, and maybe environmental is the one that we talk about the most. I know that's something you take into account in your investing, but can you do that just by looking at what the companies are doing rather than what they say they're doing or what shareholders want them to do? Do those shareholder proposals really factor in at all? Do you support them?
We actually really try to hold our investment portfolio companies accountable for what they've said in the press or what they've agreed to do in terms of pick on environmental, in terms of reducing their carbon footprint, look what their plan is around waste management, water management, efficiency of their processes. So we do hold them accountable. Part of that process and a lot of the shareholder proposals that are out there really focus more on disclosure and transparency around these various issues around the E, S, and G. And when we think about ESG, it's not a social agenda. It's really a matter of risk mitigation and taking advantage of the opportunities that are in the marketplace.
So when it comes to environmental, for example, are you getting the information that you need? As you know, regulators like the SEC have proposals right now about regularizing that information. Are you getting what you need to make informed decisions?
I would say we're well along the way, but we're not quite there yet. There's still a lot more disclosure that we'd like to see. There's a lot more consistency across the various portfolio companies that we invest in that we would like to see achieved. But it's a work in process. I think that, again, a means of engaging with companies, again, through proxies, but more importantly through the shareholder proposals and a dialogue associated with that, I think is very positive. I'll give you an example. So this past year, we had 34 shareholder proposals. More than half of them were, quote unquote, settled, or we reached an agreement with the companies beforehand, so it never even got to a vote. So it is an important way of engaging with our portfolio companies, and we think we're really getting some positive outcomes associated with those engagements.
Steve, I know you have 5 different pension plans that you represent. You've got a lot of workers and retirees that are really depending upon you. Do those 5 independently operated pension plans have a uniform view on the questions of things like ESG?
That's a wonderful question, David. They do not. So we have 5 different public pension plans we manage for police and teachers and firefighters and other government workers in the city of New York. They all have their own unique preferences, risk tolerances, their own views on, say, climate change and sustainability. So we actually have an open mind when we manage the portfolios for the various 5 plans. We really look to execute the will of the trustees, but they are different. So, for example, around proxy voting, each of the plans has within their investment policy statement their own proxy guidelines. We don't vote them in bulk. We vote them specific to each of the funds. So the underlying holdings for each of the 5 plans, they may differ in terms of their position on issues around ESG or any other matter for that case. And we vote them according to those specific preferences of those individual funds.
Steve, you said that from your point of view, this is a risk management issue more than it is a social issue or much less a political issue. On the risk management issue, as you look out, because you're informed about this now as an investor, what is the scenario going forward on the move toward zero carbon emissions? Because we're seeing some companies start to back off some of those early commitments.
Yeah, I think so. I think the issue, it's easy to say what you want to do, and then executing is a little more challenging. So I think that may be some of what's behind what we're seeing in the marketplace today. My belief is, however, that the underlying investment companies that have gone down this path believe that this is the right thing to do, that this is the right way for them to manage their business. They're risk aware. I think that any company that will look through the lens of ESG in terms of the decision making will ultimately have a better outcome. And I think probably a more robust risk management process in place associated with that view. So I don't think there's been necessarily a pullback on the commitments to environmental issues, reducing our carbon footprints, and being focused more on sustainable technologies. But I do think it's more challenging than people expect.
That was Stephen Meyer. He's New York City Retirement System CIO. Tomorrow on Wall Street Week, we're going to be joined by Larry Summers, former U.S. Treasury Secretary, our special contributor, to take us through the August jobs report that we're going to be getting tomorrow morning. And we'll also be joined by Chris Miller. He's the author of Chip War on Secretary Raimondo's visit to China. That's coming up at 6 p.m. Eastern Time tomorrow on Wall Street Week. Katie?
All right, David, we'll still head on the close. We're going to have more at the S&P 500 right now, flipping into negative territory. Big tech, meanwhile, the NASDAQ 100 still hanging on, up by about 0.4%. All of this is coming as you do see a little bit of a bid return to that bond market, similar to what we've seen over the past 2 days. 2-year Treasury yields down by 3 basis points. The 10-year down by 2 basis points as well. I remember when that yield was as high as 4.30. Feels like a while ago now. We'll see how that changes with tomorrow's jobs report.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Live from the U.S. Open in Flushing Meadows, New York. Tim's got his sunglasses on.
Oh, it's one of those days.
You could probably hear the balls on the courts. You know where we are.
We are at the U.S. Open, the 2023 U.S. Open. We're really happy to be here, Carol. I got to tell you.
What?
Without playing favorites, you know this is like my favorite event of the year.
Tim has been excited since like January.
Yeah. I planned the birth of my child around this event, so...
Well, we have a lot coming up. We're going to wrap up the month of August. We had some economic data. We're going to get to that because we are seeing markets kind of maybe take a little bit of a breather. We're waiting for the big one tomorrow, which is, of course, the monthly jobs report. So we're going to talk about that. Coming up, though, Kirsten Corio. She's sitting next to us, USTA Chief Commercial Officer. So we're going to talk about the partnerships, the growth in the USTA as a business and the U.S. Open specifically. It is quite an event. We talk about it every year. We are surrounded by people. And when we think about the economy, man, it looks like things are doing pretty well.
Yeah, at least for people here at the U.S. Open this year. And Carol, we're also going to see how the U.S. Open tests if Carlos Alcaraz is the next great tennis player. You know, the big three?
Yeah.
They're no longer the big three.
And I hear he has to work on his personality a little bit.
Maybe a little bit of John McEnroe, a little bit of Roger Federer. Yeah.
A little bit of each of them. All right, we're going to get into that. Also, former First Lady Michelle Obama, she was here on Monday, and she was really making some very significant comments when it comes to equality and women getting paid the same as men. So we're going to talk a little bit about that as well.
Yeah, equality and diversity, top topics too, with former tennis pro and former USTA CEO Katrina Adams. You might remember our interview with her last year. She's stopping by once again this year. Looking forward to that.
And I feel like we're going to get her comments too. We have the author, Ashley Brown, of a book. It's called Serving Herself, The Life and Times of Althea Gibson. There is a statue here at the U.S. Open and here at the tennis facility in honor of her. And you may not know her name, but you really should, because she was very significant in terms of really opening up the sport and really pushing forward when it comes to diversity.
To financial success later in life.
And we're going to talk a little bit politics because there's an interesting story in the city's issue at Bloomberg Business Week. So a lot to come, but first up, let's get a check on your top business stories, what the markets are doing on this. It's Thursday. Here is Charlie Bella.
Hi, thank you very much. And Carol Master, market's doing a whole lot of nothing ahead of the jobs report coming up tomorrow morning. Right now, the S&P 500 index calling it unchanged. The Dow lower by 131, down by 0.4%. NASDAQ up 43, higher by 0.3%. Do want to begin, though, with a headline of importance to listeners in the tri-state area. New Jersey Transit's locomotive engineers have voted to authorize a strike after years of contract negotiations stalled. However, any potential work stoppage or disruption to services is likely months away as mediation plays out. We've got the 10-year now yielding 4.08% on the 10-year. The 2-year, 4.84%. Spot gold down 90 cents the ounce. Little change there, $19.41. Virtually flat on the day, with West Texas Intermediate crude up 2.1%, $83.36 a barrel. Stocks, bonds, and the dollar posted small moves after mixed economic data as traders await tomorrow morning's jobs report for clues on the outlook for Federal Reserve policy. Our Michael McKee standing by with more on that story coming up right here on Bloomberg Business Week. Jay Pulaski, the Chief Investment Officer at TBW Investment Management in New York, says money will continue to flow into stocks. All right, we'll get to that a little later on. Dollar General shares plunging after slashing its profit forecast for the second straight quarter. Dollar General shares, they are lower now by 12.5%. Again, recapping stocks trading mixed. S&P up by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Thursday. Carol Master along with Tim Stenivek at the U.S. Open just outside the Arthur Ashe Stadium. Before we talk tennis, we do have to talk a little bit about the economic news today.
Yeah, we get into calling the odds when it comes to the U.S. economy following on the back of mixed U.S. economic data. Of course, we always go to our good friend Michael McKee. He's also our colleague. He guides us through it all. He's Bloomberg News International Economics and Policy Correspondent. He's back at headquarters and in our Bloomberg Interactive Brokers studio.
All right, so Mike, let's get to it. Based on what we're seeing here at the U.S. Open, and I know, we talk about it's a global crowd, It's a mixture of people, but you look around and you think, okay, the economy's just fine. We got a batch of economic news today, the weekly jobless claims. We also got some reads, the PCE deflation, deflator, if you will, the Fed's preferred inflation gauge. What did it tell us?
Well, I think you get 2 points there. One, it tells us that the people who go to the U.S. Open have more money than most Americans, I think. But Americans are doing okay at this point. We did see a very large increase in spending, 0.8 more than had been anticipated, and that's the second month in a row that that's happened. And this comes at a time when people thought that Americans would be running out of their stimulus money and cutting back on spending. And we did see the savings rate today decline from 4.1% to 3.5%. So it does tell you that there's something going on here. We'll have to wait for the credit card data to see if people are really borrowing to keep up with it. But people have been spending, and that helps the GDP outlook. Inflation is about the same as it was, 0.2 per month for the core and the headline PCE numbers, which is the same as it was in June, and tells you that there is at least some sequentially good news for the Fed. But base effects meant that the year-over-year numbers went up. Jobs claims, once again, they go down. There is no problem, it seems, with the labor market at the moment, not sending any signals. I did a chart earlier today on Bloomberg Surveillance that showed the continuing claims number, which rose a little bit, but is still very, very low and trending down. And normally we don't go into a recession unless continuing claims are rising significantly. So all in all, we're about where we were yesterday, but it is not bad news. People are doing okay, and the labor market is still strong, and it doesn't look like a recession ahead.
So, Mike, if you're a Fed official, you're basically saying, okay, things are actually moving in the right direction right now.
Essentially. Now, there are some who think that because we saw the year-over-year changes in the PCE and because energy prices have gone up and because there is perhaps still a tight labor market, that we will see inflation start to rise again, and they might need to do another rate increase. But a lot of them are now thinking, well, we'll pause in September because it doesn't look like we need to at the moment. And then if we don't need to in November, we won't then either. Raphael Bostic, the Atlanta Fed Bank president, he's in South Africa today at a conference for the South African National Bank, and he said he thinks that the lagged impact of the Fed's rate increases is just starting to hit the economy, and that should be enough. And he pointed out that if you took housing out of the services category, you'd have inflation very close to 2.5%, which is just about where they want it to be.
That's very interesting. All right, Mike, as always, appreciate all the coverage that you've been doing since Jackson Hole, through Jackson Hole, and as we count down to tomorrow's monthly jobs report. What?
Yeah, Mike, get some sleep tonight, okay?
But you could leave a ticket for me somewhere out there, and I could.
Sorry, can't hear you. Static on the line. Static on the line. Michael McKee, we adore. Mike is Bloomberg News international economics and policy correspondent back at Bloomberg headquarters in New York City. This is Bloomberg. As I look around us, we're so delighted to be back here at the U.S. Open, and delighted to have back with us Kirsten Corio. She is Chief Commercial Officer of USTA. And we were talking, you've actually been with the organization now
for 7 years. This is actually my 8th U.S. Open. And yes, we do count the 2020 pandemic U.S. Open because it did occur. We did work, but we just weren't here.
Well, and I will say, last year felt like, all right, everybody was back in a big way. You guys are having some record numbers again this year.
We are. We thought after 2022, the most spectacular U.S. Open ever, Serena evolving away from tennis and the mania around, gosh, we got to see her one last time. How do we top that in 2023? And then here we are. You mentioned it, Tim. No big three, no Serena. You know, we've wondered, us that are in the business, those of us that are fans, what will happen when they're no longer with us. And the truth is, we've been just astonished at the demand we've experienced.
Well, so why do you think that is?
You know, I think the new stars began to break through a bit more last year. The electric Carlos Alcaraz, Coco Gauff, there's so many others. And I think people have just rediscovered tennis is amazing. There are new stars all the time. And also, the U.S. Open is just a fantastic experience. And there's so much more to do than just watch tennis. The tennis, of course, is the anchor, but it's also just a great event for food and beverage, for experience, for being out on a beautiful day.
Carol mentioned record crowds here earlier this week. Yesterday, topped 73,000 people for the first time. What's capacity here? How much bigger could you get if you wanted to get bigger?
I honestly think this is it. We're kind of at the cap, right? We want everyone to ensure that they have a great experience, that they can get around and get to the different courts, and I'm not sure we can expand more than that.
I kind of agree with you just based on I was here Tuesday night, and it was super crowded that night too, and you get to the point where you want to get in court 17 and you can't actually get in court 17 because it's full, but there are so many other places to go. So I guess I do wonder is like how you balance the experience of making sure that people get their money's worth without maximizing, without putting at risk sort of being comfortable here.
Yeah, and so I think that's it. I think we'd love to be able to welcome everyone that wanted to come, but at the same time, we've got to protect the experience. And that's where the Fan Week experience becomes really important, too.
How do you, I was curious, actually thinking about early metrics. And did you guys quickly get an idea of what the event was going to be? Like, what was early demand like?
The earliest one we saw was when we went out with the full series subscriber renewal. That's kind of your season ticket holder, right?
Yeah.
If you're a team. And we renewed it better than 95%. And at that moment, that was in late January, we said, wow.
So literally almost right after.
Yeah, and at that point in time, you don't know who's playing. You know that certain players have retired and will not be back. But that was really just the first indicator of, wow, this is going to be big again.
Kirsten, talk to us, too, about the people who come and remind us of how diverse it is and people coming from all over the world.
Yeah, and the international travel, we've seen it in New York, just seems to be really back. In a typical pre-pandemic year, we'd be anywhere from 20 to 25% international attendees at the U.S. Open, and we're back to that number. We're back to around 20%, maybe more, but it's just so great to see.
So that's something that you actually can't even describe. You kind of have to be there to feel it. Like you're on one of these courts, and you're seeing two players play from not the U.S. They don't speak English as their first languages. And what you have is fans who are from those countries, or perhaps even from New York City, and they're cheering them on and in their native languages. And it's I'm like, this is New York. This is New York at its finest.
It is. Yeah, you really feel it. And I'm glad you experienced that on the outside courts.
It was pretty cool.
Yeah.
All right, so talk to us about sponsors, right? You have to think about who you're sponsoring, and I feel like you have people or companies and entities that have been with you from year to year, but how you continue to evolve that or grow that.
So we have 24 sponsors. We have few long-term, very loyal, very deep partnerships with these sponsors. Over half of them have been with us. Actually, 7 have been with us for more than 30 years. Very long-term partnerships. It's really been extraordinary for us to experience. And these partners are long-term. We renew it long-term. And we want to ensure that they can meet their objectives here, that they can activate their brands in ways that are fantastic. And I really hope that you can experience it when you get out there watching tennis. Stop in some of the sponsor booths as well.
I bought a shirt like a Ralph Lauren. Like I do think about, it's not just about somebody slapping a logo.
No, it's a really deep activation. They're really out here interacting with the fans and enhancing the experience for the fans in really diverse ways.
What did you hear from your sponsorship staff this year in terms of the ease of getting these renewals, of going and getting new sponsors? There are some new partners here this year. We like to talk to people like you because you have a good read on the entire economy. You get those updates each quarter from your staff. But what did they tell you throughout the years they were trying to secure these partnerships?
So in all of our partnerships, I'll say the intent to renew is incredibly strong. It's just a question of what are your objectives and how do you see them evolving over the next term, and how can we help you meet those objectives? So that hasn't really been a question. For new partners, we've seen more demand than we can satisfy. We do reach a point where we sell out of partnership positions, and we've reached that. And so we've got more inbound demand than we can satisfy on the partnership front, and that's really an indicator of how valuable the audience is to them.
Do you ever, though, you said 24, right? Is there ever, okay, let's make it 26. Or do you think about, let's not make it where we're slapping things, not, you know what I mean?
Yeah, it's very deliberate.
Yeah. And so you do have like kind of a top point that you just say that's enough.
We do. We want to protect the exposure for the few partners that we have at the level that they have, and ensure that they get the exposure that they've come to expect.
One thing I wanted to ask you, because we're going to talk a lot, we have a book about Althea Gibson. We're going to talk a lot more about equality and diversity. I'm thinking about Billie Jean King at the beginning of the week, former First Lady Michelle Obama. How, in terms of what you do, the importance of diversity and inclusion and thinking about that in our world, and then when you think about sponsors.
Wow, it's all incredibly important. So, okay, so we're celebrating 50 years of equal prize money. 50 years, it's incredible, and we're still seeing that fight for equal pay on many different stages and arenas, and especially in women's sports. So we're incredibly proud of that. But we also like to, and our sponsors love this, that men and women they play on the same stage. They play on the same stage, the best men in the world, the best women in the world. They're watched by men and women equally. They're watched in person, women buy tickets, men buy tickets. They both watch together. We're one of the most gender-neutral audiences that you can find in any sporting event, and so we're really proud of that. And our partners love that too. Of course they love reaching a very gender-neutral and very female-heavy, when you think about sports, audience that we offer.
So Kirsten, how do you take the momentum from this event, again, a record-setting event, and use that to parlay interest into the next 4 or 5-year-olds, the people who are going to be the next Francis Tiafos, the people who are going to be the next Coco Gauffs?
So that's why we play, right? That's why we're here. This event is here to inspire people to play tennis in the United States.
How do you make sure they get to experience it, though, that everybody gets to experience it?
So the qualifying tournament, which is played the week before the main draw, has been repurposed into Fan Week. Okay, so the qualifying tournament is the anchor of that Fan Week. We are free and open to the public that entire week. And all of the main draw players are here practicing on courts that are free and open to the public to come and sit up close and personal and watch them. And so we had a record audience that week. Over 155,000 people came through the gates that week, and really were able to experience some of the top pros in the world up close and personal, but also watch some incredibly competitive tennis in the qualifying side, and all fan activations with our partners and opportunities for kids to get on courts and really hold a racket. Wilson distributed tens of thousands of free rackets.
That's great.
Free rackets to those that had registered for the free fan access pass. And so we're literally getting rackets into kids' hands during that first Fan Week, and it's just so gratifying for us to see them then take those into their communities and play.
Just have about 25 seconds left here. What have you seen in terms of the interest among a younger population in general, either coming to it and also just playing in tennis?
Well, I think you may have some time with our CEO, Lou Scheer, and we love to talk about the growth over the past 3 years that we've enjoyed in tennis. We've got over 23 million active players in the United States, over 30% increase over the past 3 years, and much of that coming from diverse populations where we want tennis to look like America and feel like America, and that includes the youth population, of course, as well.
You're so fun.
I love being here with you guys. Thanks for having me.
We love talking to you.
We just wish we could do this more than 2 days a year.
Can we come work for you?
Maybe we'll do Cincinnati next year, so why not?
Absolutely.
Kirsten, thank you. Be well.
Thank you for having me.
Kirsten Corio, USTA Chief Commercial Officer right here at the U.S. Open. You are listening and watching Bloomberg.
employees from walking off the job at this point, and an actual work stoppage could be months away. Stocks trading mixed right now. The Dow very close to session lows. The Dow's down 111 points, a drop now of 0.3%. S&P 500 index a little changed, up 3 points, up by about 0.1%. NASDAQ up 57, a gain of 0.4%. Stocks little changed as traders await tomorrow morning's jobs report. They're looking for clues about the outlook for Federal Reserve policy. Amy Glazer is Senior Vice President at job placement firm Adecco, and on surveillance today she said it's not just a resilient jobs market, but it is a strong one.
We're still in a talent-driven market, and the job seeker is still in that driver's seat with 1.5 jobs available for every candidate out there looking. We're going to continue to see growth for the upcoming months.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. After earnings, Salesforce.com up 3.1% after earnings. CrowdStrike up by 8.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master, along with Tim Stanovic, live at the U.S. Open at the Arthur Ashe Stadium. We're literally right out. We're just in the midst of everything.
You can hear the officials.
Yes.
You can hear the crowd cheering.
Yes.
You can sometimes hear a passionate player, maybe grunt or scream. That's all part of the fun here at the U.S. Open.
It's so much fun. It's so alive. It's just a blast to be here. Having said that, we're sorry to our Bloomberg News team, in particular, who we know are fans of tennis.
That is so cruel. Okay, next year you guys are coming here with us, okay?
All right, we got two great stories. One is about former U.S. First Lady Michelle Obama. She spoke at Arthur Ashe earlier in the week advocating for equal pay for female athletes, and she's really the latest prominent figure to push for progress in women's sports. We talked about it a little bit with Kirsten about the importance of equality and diversity. And then writing about how the U.S. Open is a test for Carlos Alcaraz.
Yeah, is he the next great tennis player now that the big three is no longer the big three? We got Ira Boudouet joining us. He is Bloomberg News global business reporter on Zoom in New York City. Also with us is Bloomberg News senior reporter Jillian Tan, back right now in our Bloomberg Interactive Brokers studio.
I feel like, Jillian, we need to start with you because I feel like equality when it comes to sports remains an issue. And I know the USTA is working on it. But tell us about Michelle Obama, the former First Lady, earlier in the week, because she had some pretty strong words.
Yeah, so she kicked off sort of Monday night action after Coco Gauff won. On Monday night, she came out to honor Billie Jean King, who where exactly you are. You guys are in the Billie Jean King National Tennis Center. And so Billie Jean King, 50 years ago, went out, found sponsors, and it was actually Bristol Myers Squibb that came up with equal prize money for women's tennis. The year earlier, in 1972, she cashed a $10,000 check. Her male counterpart, Ilie Nastase, $25,000. So it was Billie Jean King 50 years ago pioneered, equal pay in sport. It took the other Grand Slams, decades to catch up. The Australian Open only did it in 2001, the French Open in 2006, and Wimbledon was the last in 2007 with Venus Williams sort of helping get that along. But what's crazy is it's 2023 and some of the lead-up tournaments to the US Open in Cincinnati, in DC, they're still, women are earning a fraction of what the men are earning.
Yeah, I'm so glad you mentioned Cincinnati. I mean, it was remarkable to see that the women's prize pot is less than half of what men get. I mean, but it's not just tennis, Jillian. This is think about the struggle of the U.S. national women's soccer team and female soccer players that we've experienced here in the U.S.
Yeah, exactly. So the World Cup recently has thrown a huge spotlight on it. Like our colleagues wrote about how in Spain, there's a lot of debate, especially because Spain won. But it's not just in soccer. It's in basketball. It's in pretty much every sport across the globe. Tennis is one rare sport where prize money is equal, but only in certain events like the one that's happening this fortnight at Flushing.
Ira, we want to bring you into the conversation. You've got a great story about Carlos Alcaraz. But before we get to it, you cover sports, you love sports. What do you think about, when it comes to still kind of this fight for equality between women and men when it comes to sports?
I think tennis is a really good, I don't think it's an accident that Billie Jean King has been a pioneer in this and that tennis is really part of what has led the way for equal pay because it is an individual sport primarily. and the women have been a huge draw. You look at Serena Williams, one of the biggest athletes of her generation, male or female. And so I think they have some of that leverage, and Billie Jean King really showed them how to use it, but the job is still not done. What is surprising to see at this stage in the game, that we still have competitions on the tour that are not with equal prize money.
So the tour...
Yeah, it's really surprising to... Oh, go ahead, Jillian.
Sorry, just to jump in, like the tour actually has been feeling the heat from the whole world, sort of saying, hey, what's going on, guys? And they've actually outlined a plan to have equal prize money, but not till 2027 at some of these big events.
Why so long? Why is everything so long? All you have to do is like say, do it.
Give me the money.
Do it. Just do
so
it.
I think
Why
it's
is it
about
always take
sponsorship,
so long?
Carol. So it's about, you know, the sponsors, you know, they don't believe the eyeballs, the viewership is there. But if, you know, if your numbers are to be believed, like the soccer down in Australia, like the ratings were off the charts.
Well, we just talked with Kirsten, Curio. She is here. She's Chief Commercial Officer. She's doing the sponsorships. We just talked to her about this issue. And even though you don't have, Serena here, that things are changing. The older, elite, if you will, from tennis is moving on slowly. That still, you're getting record numbers here. So it's just interesting about this idea that the eyeballs, I don't know. I feel like it's an old argument. Having said that, we do want to get to, Ira, your story. Talk to us about Carlos Alcaraz. He's part of the next generation, potentially.
Yeah, I mean, for sure. And this has been the question on the men's side for decades now. What happens when Federer, Nadal, and Djokovic are done? And now that Federer's retired, Nadal's about to retire, Djokovic looks like he has some, left in the tank, but is obviously in his twilight years or entering them. Who's next? And I think Wimbledon and last year's Open, we kind of got a glimpse anyway at the answer, and it's Carlos Alcaraz. And what I was writing about is the opportunity that presents him, because if he can sort of consolidate that and dominate on the men's side for the next decade or two, because he is only 20, he could very realistically be the next sort of billion-dollar athlete. You look at Roger Federer's lifetime earnings on the court, prize money, but also off it, where you get the majority. Tennis players, as in an individual sport, they can really cash in, and so Alcaraz stands to really profit from his brilliant play recently.
It's interesting, Ira. Tennis players can really cash in if they're the top of the top, right? 5 of the 50 highest earning athletes of all time, this is in your story, according to estimates by Sportico, are tennis players. The thing is you have to be the top of the top and actually make a living, because, there are so many players out there, many of whom qualified for the U.S. Open this year, that really, essentially live tournament to tournament and paycheck to paycheck.
Yeah, I mean, it is a ruthless, eat what you kill sport. And the pyramid, the difference between 1 and 10 is huge. And the difference between 10 and 100 in the rankings is even wider. It's just very difficult. But if you can get to the top of the mountain, the rewards are as rich as in any sport. And for Alcaraz, it's interesting because I'm talking to marketing people, talking to this guy, Bob Dorfman, who does sports marketing at Pinnacle Advertising. He's saying, the ceiling is the limit for him in terms of categories, endorsement deals. Besides the obvious stay healthy, keep winning, he needs to sort of start to show his personality. Obviously, U.S. is the biggest market. Everyone's always waiting for the next U.S. tennis star, but Alcaraz can really capture that too if he works on his English a little bit more and just kind of lets the world see who he is. I was at this event at Lotte Palace Hotel before the Open, where they had him and a few other players, and he really was the star of the show at this little cocktail hour. And he has a big, contagious smile. He clearly knew how to work a room, but I think we've yet to see that kind of leveraged in a big way in endorsement deals and in marketing.
Jillian, as we look at the next round for men's players in tennis, the next generation, I think about the next generation for women, and we're starting to see that. We certainly saw it last time around. But I do think about last time that I was here at the Open, I watched Serena and Venus play in a doubles match, and I watched Serena play what...
You saw her last match.
I saw her last match. When I do think about the next generation for women, how are you thinking about it? And we really, I think, all did think Serena and Venus would make it so that there was more parity, and they definitely have moved it along, but we still have a ways to go.
Yeah, I mean, I think there's a bunch of upcoming stars. Obviously, Coco's leading the way. Jessica Pegula, her dad owns the Buffalo Bills. She's the 3rd seed. Her and Coco actually play doubles together. Like, there's another American called Alicia Parks. Like the bench is deep, and to Ara's point about upcoming US players, there's a couple that are really already stamping their foot on the map. Francis Tiafoe and then Chris Eubanks being one that had deep runs in slams.
All right, well, great stuff.
Looking forward to seeing a handful of those players today and tomorrow, Carol.
Absolutely. Absolutely. There's a lot, right, to look out for. Wish you guys both were here, but really fun to read both of your stories. So thank you so much for joining us today. Jillian Tan, of course, senior reporter at Bloomberg News, back there in our Interactive Brokers studio at Bloomberg headquarters, and Ira Boudway, global business reporter and on Zoom from New York City. That story, a Business Week story. So check it out, too, at Bloomberg.com/businessweek. Carol Massar, Tim Stanovic, live here at the U.S. Open. Just loving it.
Well, let's get a check on the latest world and national news. For that, we go to Denise Pellegrini. She's in the Bloomberg 1130 newsroom in New York. Hey, Denise.
Hey there, Tim. We have a New Jersey union voting to strike. This is the Locomotive Engineers Union. Mediation, though, it still has to play out. And that does mean, guys, any walk-off risk is likely still months away. President Biden making an unannounced trip to FEMA headquarters in Washington today. He has a long-distance trip planned after Hurricane Idalia as well.
I'm going to Florida Saturday morning.
Going to Florida after all the damage from Idalia. The Southeast digging out from the aftermath. Florida, the hardest hit, several fatalities from the storm throughout the region. Island city of Cedar Key dealing with destroyed structures. Sue Colson, city commissioner, says there's another worry.
We produce 95% of all the clams and oysters in Florida. I'm more concerned that those clams and oysters are safe and they're not contaminated.
And it's things like that that has AccuWeather worried. They see as much as $20 billion in costs from insured and uninsured losses combined from this storm. And for the fourth time this year, former President Donald Trump has pled not guilty to criminal charges. Bloomberg's Nathan Hager has more.
The latest not guilty plea is to state charges in Georgia that Trump conspired to overturn his loss in the 2020 presidential election. The former president waived an in-person arraignment that had been set for this coming Wednesday in Atlanta. This spares him a hearing that could have been broadcast live by news cameras in the courtroom. Trump entered his plea today in a court filing a week to the day he surrendered for booking at the Fulton County Jail and submitted to a mugshot.
All right, thank you, Nathan. Bloomberg's Nathan Hager reporting. And one more story to tell you about rare meeting between U.S. and Chinese military officials. The two superpowers reps, according to sources, met face-to-face at a defense chiefs conference in Fiji this month. That's a rare meeting. There have been very few high-level meetings between U.S. and Chinese officials. Global news 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. We're looking at a decidedly mixed market. S&P little changed ahead of the jobs report. The Dow lower, NASDAQ higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks mixed in a choppy session. The Dow's down 122 points. Like you said, S&Ps are a little changed, and NASDAQ is still higher by 57. The U.S. 10-year yield at 4.09%. Gold is little changed, oil trading in the green, and Bitcoin is down by 4%. Among the main 11 S&P sectors, leaders were tech and consumer discretionary. Healthcare and utilities were under pressure. And leaders to the upside in the Dow, Salesforce and 3M, while UNH fell 2.8% and led to the downside. After earnings, Dollar General plunged 12%. And in the tech space, Intel said that Q3 is tracking above the guidance midpoint. In other news, Western Digital rose 7% as Morgan Stanley sees better pricing trends. And wrapping things up, some of the names pointing after the bell tonight include Broadcom, Dell, VMware, and Lululemon. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill Maloney. Lots going on after ours. We've got you covered, and to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left to go until we wrap up the Thursday trade. A nice breeze blowing through us here at the U.S. Open. And delighted to have with us to talk about the trade, Bill Stone, Chief Investment Officer at Glenview Trust Company. Nice to have you back with us.
Thanks for having me.
Nice to be there. Should we talk tennis or should we talk markets?
Let's talk tennis.
What can you actually predict? Who's going to win or where the markets are going to go?
I can do neither. I was always a Federer guy, so, now I have to find a new,
Who's it going to be?
I don't know. I
got some ideas.
He does.
I think since I'm old, I'm going to pull for the old guys and go, Djokovic for now while he's here. But it's really nice to watch Alcaraz. It's nice to see some new faces. I mean,
Andy
awesome.
Murray's still here.
I just watched him for a little while there. Yeah, that was good. Isner, unfortunately, knocked out, but enjoyed seeing him in his last hurrah.
Tiafoe?
He's good to watch. I love tennis, so I can watch pretty much anything if it's, good tennis.
You and me both.
Jay Powell?
He
goes to dead concerts. I'm not sure if he plays tennis. I don't know that, we kind of make a joke out of it. I know it's important in terms of what the Fed does, but on any given day, the thinking around monetary policy, where rates go, can change in a heartbeat. So for investors, what do you think is really constructive to focus on?
So I just try and figure out or think about how sticky this inflation is going to be. You can cut it a million different ways. Actually, maybe you asked me a question, what's constructive? I'm not sure that's constructive, but that's what I spend time thinking about because I just try and figure out, the market's pricing in no more hikes. To me, it seems hard. I actually think we have at least one more hike and maybe more in us.
Why do you think that?
Because I just think, and it all goes, we keep preluding the jobs report tomorrow, but I just think that it's hard for wages to come down enough to then help out on kind of core inflation.
What's sticky?
Yeah, that's the last piece, really, because he talked about it in his speech, Powell, that is, at Jackson Hole, where you're seeing some help a lot of other places, but wages yet still aren't there, and maybe housing is picking back up again. It is I thought about it this morning, and it seems as challenging as ever to figure out where we're at, because you're at a point where then you also have to keep in mind, lately we've gotten economic data that's just accelerating, right? You probably have to pencil in 3.5% real growth here for the third quarter. not that I don't think it's going to come off from there, but still.
You don't buy it what the Atlanta Fed is predicting. It's a little bit more aggressive. Just
yeah,
a
not
little
quite
bit.
that high, but because I think it'll come off. But still, 3.5. I mean, how do you think inflation should slow down a lot when you're growing that fast?
I was thinking about the conversation we had yesterday with Andy Brown, and this whole concept that who'd have thunk that the U.S. economy would be growing faster than the Chinese economy.
That's pretty remarkable.
Right?
Yeah.
In terms of the metrics and things that are going on.
Yeah, and I mean, it just shows you, again, why everyone keeps looking at the job market. Because as long as Americans have jobs, they like to spend, and as long as they spend, the economy keeps chugging along. For all of our challenges, that's kind of the simple calculus of it.
All right, well, let's talk a little more about just what August looked like. We thought for a while that it was going to be the doldrums of August, but looks like we're going to finish the month down on the S&P 500 by only 1.4%. Given that we were down last week by, negative 5.5%, that's pretty remarkable to see. In the short term, where do you see the markets going?
Well, I mean...
You laughed like you don't know the answer to that.
I don't know the answer, but I do think that the good news is...
Bill, I don't know if you know, but you're Chief Investment Officer at Glenview Trust. I hope your bosses aren't listening, because this is your job.
Quick, Bill, make something up.
I forgot my magic coin that I flipped. So,
but this is what you do. You have to figure out, right?
Yeah.
For your clients. So what is investable? What's actionable?
Well, I mean, I do think earnings have probably bottomed. So, I think that is a positive for the stock side of the equation. I'd probably lean a little bit more towards some of the less cyclical things, some of the more staple-ish kind of stuff hasn't done nearly as well, because you've got the AI stuff that's just been on fire.
Do you know how many times we're going to talk AI, I feel like, today, in terms of the conversation?
I mean, even the sponsors are getting into AI here.
Yeah.
The USTA is getting into AI.
I mean, it really has dominated the returns, obviously, that.
But is there there?
I think in the long run there is. I just sit there and worry that, just like we saw, because I've been around long enough to bend for the tech bubble, there was a there, right? Clearly, the internet was a big deal.
But it wasn't pets.com.
Yeah, you're right.
And
so you do have to separate them out. But also, things get overdone a lot of times. Or
so is
the stuff speed ahead.
NVIDIA overdone?
I will say we luckily owned it this year to start the year. We've owned it for quite a while, actually, so we were very happy. But we've trimmed it a bit because it's just tough.
But you haven't sold out of it.
No, we haven't. And I think part of the issue is you can make a good case if it continues to grow anywhere near that pace. Obviously, it's not expensive, but that's a hard call. I mean, I've listened to all the experts on it, and I think I like holding some.
Well, and they've actually been the numbers.
Oh.
They are showing up in terms of their growth numbers, right, and their outlooks.
Yeah, I mean, they're kind of the one firm, I think, that you can say has actually made money from AI so far. I mean, everyone else kind of talks about it, but there's not actually necessarily cash in the till from it yet. I think it'll come.
Tim and I often say you've got some new client comes to you, institutional or a wealthy client, and said, we've got some money we want to put to work. How do you do it in this environment, especially in an environment where you look at treasuries and I can put it there, make a decent yield, and with not much risk. But what would you suggest? And I realize long term, I get it. But what do you do?
Yeah, I mean, we own a lot of T-bills at the moment, and mixed with stocks. So we kind of
2, 3, 5 long term or shorter end.
The
bills.
Yeah, bills, a lot of bills. Because part of it is we think about it, we say, well, we generally have a good slug of stocks, so we think of those as long duration assets. We get paid, we're okay holding some short duration assets on the other side. Plus, you heard my kind of view that maybe inflation's a little stickier than they think it's going to be, so that's also tilted us towards staying toward the lower end of the duration, which has worked out really well. I mean, it in terms of relative.
What about cash right now? Are you guys have a good portion, and do clients have a good portion in money market funds? You can get over 5% there too.
Yeah, I mean, I'd say the same thing. T-bills, cash, that's interchangeable essentially. Yeah, I mean,
what percentage do you think is a typical account with you in terms of cash? I mean, is there? I guess my question is there still a lot on the sidelines?
Yeah.
I mean, I'd say at our firm there's generally a lot on the sidelines, but that's the normal for us because we're all ultra high net worth primarily. Okay. So we generally have a lot of cash.
Bill Stone, thank you so much.
Thank you. Thanks for having me.
Good to have you here.
Okay, go watch some more tennis.
Chief Investment Officer, just reminding you.
And great job with the weather, by the way.
Oh, thank you. We did that, yeah.
We did, Glenview Trust Company, of course. Folks, we just have about 10 minutes left in today's trading session. S&P 500 just call it unchanged. The Dow just down about 110, the NASDAQ a gain of about 60 points. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic, live at the U.S. Open. This is Bloomberg. You okay over there, buddy?
World headquarters, I'm Charlie Pellet with your look at your top company stories. Dollar General plunging after slashing its profit forecast for the second quarter. The discount retailer said rising labor costs and efforts to tame inventory growth will crimp profit in coming months. Darryl Cronk is Chief Investment Officer for Wealth and Investment at Wells Fargo Bank, and he says he is concerned by what he is seeing in retailers.
If you look at Dick's, if you look at Peloton, if you look at Dollar General this morning, they're all telling you the same story. The consumer's weakening and weakening at a quickening pace. What I thought was interesting out of the earnings season, too, is if you actually listen to the conference calls, you heard companies like Macy's and Nordstrom's also say that credit card delinquencies were rising, right? So not just the slower spending numbers and slower revenue and sales, but actually we're seeing deterioration in the credit conditions and the repayment side of it, which tend to be more at the high end of it. So I think you're seeing it broadly across the retail board. I would take that canary in the coal mine and listen to it. I wouldn't dismiss it.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcast. Dollar General shares, they're down 12.1%. He mentioned Dick's Sporting Goods up 1.3%. Peloton shares, they're advancing now by 3.3%. The Biden administration is making up to $12 billion available to automakers to retrofit their facilities to make electric vehicles and hybrids. And those are some of the top company stories that we're following for you at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. We are live at the U.S. Open, just outside Arthur Ashe Stadium. Always a fun event. We're going to talk more from some of the folks who are here and put it together, our sponsors, so looking forward to that. In the meantime, I can't wait till...
You know who else draws a crowd? The U.S. Open draws a crowd. Taylor Swift also draws a crowd.
I am obsessed with this story.
You know, one of my biggest regrets
What?
is not going to the Eras Tour. Did you?
No.
Did you go?
No.
Did anyone in your family go?
My daughter tried to get tickets and
couldn't do
couldn't,
it,
and then
yeah.
they were so expensive. And she's overseas, and she's going to see if she can maybe get something if something opens up there.
Well, there's some good news for people like us who did not get to go see Taylor Swift.
Buy her popcorn, get her soda, and go to the movie theater.
Can Taylor Swift save movie theaters? That's my question.
You know, she and Barbie together, they're going to solve
That is a power
everything.
couple.
Yeah, they're going to solve all of our problems.
All right, so the reason we're talking about this is because, in case you've been living under a rock today, you might not have seen the news that Taylor Swift has announced she's announced the Eras Tour film. So if you missed the live in concert experience, you can go to the movie theater later this year. And in fact, theaters are even upgrading their ticketing systems to handle high demand.
So
is this Ticketmaster? Remember what happened?
little issue. What's interesting is she did reveal the previously unannounced film in a post today on X, formerly Twitter. And apparently they're going to be showing the movie at least 4 times per day on Thursdays, Fridays, Saturdays, and Sundays at every one of its locations in the U.S. We did see AMC shares up in the pre-market, I think as much as 10%. I think it closed a little bit lower today.
Yeah, it finished lower by a little over 1 percentage point.
Yeah, here's what she wrote. The Eras Tour has been the most meaningful electric experience of my life so far, and I'm overjoyed to tell you that it'll be coming to the big screen soon, starting October 13th. You'll be able to experience the concert film in theaters in North America. Tickets are on sale now. Pre-sale for tickets started shortly after the announcement, and AMC apparently upgraded their website to handle it.
Yeah, they know what happened when people tried to get tickets to her live shows. Well, speaking of those live shows, the concert attracted more than 3 million fans in just the first of its 2 U.S. legs, I should say. Swift is set to take the tour to South America at the end of the year before she heads to Europe and Asia in February of 2024. The tour overall is expected to gross $1 billion.
It's either Elon's world or Tay-Tay's world, and we're just living in it.
What's your preference?
Need you ask. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Ahead of the closing bell, we have got the Dow, the S&P in the red right now. NASDAQ Composite Index, as we wrap up August, holding on to a gain right to the numbers, with the NASDAQ Composite Index up 24 points now, a gain of 0.2%. Dow Jones Industrial Average down 151 points. That is a drop of just about 0.4%. S&P 500 Index lower by 4, a decline there of 0.1%. As we close out the trading month, John Stoltzfus, Chief Investment Officer at Oppenheimer in New York, remains a stock market bull.
4,900 for the end of the year remains our target. We did lower our projection of what earnings will look like for this year from 230 down to 220. But overall, we're looking for support to the S&P 500
And you can hear more of that conversation on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. Year to date, we do have the S&P 500 index up 17% as we wrap up the trading month of August. To put that in context, NASDAQ up 34.2%. And the NASDAQ 100 index higher by 41.2% year-to-date. The Dow, by comparison, up now by just about 4.8% in the year-to-date column. S&P 500 index at the bell, closing lower, down 0.4%. 10-year yield, 4.09%. We've got the 2-year yielding 4.86% on the 2-year. And spot gold, lower today by 0.1%, 19.40 the ounce. West Texas Intermediate crude up 2.4%, 83.56 a barrel. So again, recapping a move lower as we wrap up the trading month of August. It is on to September. We'll see you in September with the S&P today down 7 points, a drop there of 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there, back at Bloomberg headquarters in Midtown Manhattan. I'm Carol Massar, along with my co-host Tim Stanovic. We're live at the U.S. Open in Flushing Meadows, New York, on YouTube and Bloomberg Originals. Hey, coming up in this hour, we're going to talk a little bit about artificial intelligence. You've heard of it, right?
I've heard of it, yeah. The question is it about to replace my job?
Listen, we're going to talk to Noah Sykin over at IBM. He's VP of Sports and Entertainment Partnerships at IBM, and yeah, they're using AI to do commentary on some of the matches, right? Working on it.
Can they do the John McEnroe stuff though? That's
Nobody
what I'm
could
wondering.
be, or maybe they could be. I don't know.
We'll
Remember the deep fake story?
Yeah, that's true.
All right. Also coming up, Bloomberg's Janet Lauren. She's always at the U.S. Open, always keeping us up to date too, and all things have to do with the world and big money of higher education finance. So we're going to talk endowment returns and the chaos looming in the $1.5 trillion student loan pause. But now we want to get to right now. The Bloomberg Business Week double special cities issue that is on newsstands, online, and on the Bloomberg terminal.
Yeah, the issue takes a broad look at what the world's urban centers are facing and explores ideas how to improve them, especially as the COVID pandemic fades from view. Our network of reporters traveled to some of the world's most famous cities and others you've probably never heard of, with dispatches on the impacts of political intrigue, environmental uncertainty, and shifts, Carol, in the global economy.
Going to learn a lot. One of the stories we touched on actually yesterday with Business Week editor Jill Weber and Business Week technology editor Joshua Brustein, who oversaw this special issue, is about how in Republican-led states across the South, legislatures are increasingly interfering in the governance of democratic cities by actually blocking liberal reforms and often dictating conservative policies in their place. And often it has to do with culturally what's going on. So writing about it and what's going on in the Music City is Bloomberg Business Week national correspondent Josh Green. He joins us on the phone from Washington, D.C. Josh also authored the New York Times bestseller, Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency. Josh, thank you. Nashville, take us there and what's going on and how that's kind of an extreme example of what's going on.
Well, Nashville is really representative of a certain kind of a culture.
Not sure if we lost Josh. Maybe
Happened is that as
there we go. Go ahead, Josh. Sorry, we lost you.
Sorry, I said, what's happened across the country is that as policy making has kind of gridlocked in Washington and nothing really happens, the real political battleground has shifted to the states, to cities like Nashville, where you have this clash of largely urban democratic cities that are within the borders of increasingly aggressive Republican red states. We see this across the South. And I think Nashville is the most famous recent example where a lot of the political battles that used to be fought in Washington are now being fought at an urban level as the two parties really fight to apply their policies. In the past, states had often deferred to city government and taken sort of a hands-off approach. And what we're seeing more and more, particularly in Nashville, is that Republicans are stepping in order to apply the policies they like, whether it's economic policies, gun control, racial policies, transgender issues, and basically forcing it on what in many cases are unwilling residents who have a different set of political views. And it's become a very contentious thing there and across the country.
Well, Josh, as you're right, Tennessee is an example you used, but as you're right, it's hardly alone. You talk about red states across the South. For example, in Texas, Republicans overrode measures in Austin, a very liberal place, in Dallas that guaranteed water breaks for construction workers. It also blocked cities' ability to mandate paid leave for workers. Then in Mississippi, Republicans created a separate police force and court system for a majority white part of the heavily black capital city of Jackson, even prompting the U.S. Department of Justice to file a complaint calling the move, quote, racially discriminatory. My question is, you use the term battle, but it doesn't seem like it's a battle that Democrats are winning. It seems like Republicans are crushing Democrats at every turn here.
Well, a lot of this is tied up in court, but I think what's happening is that these local politics are being influenced by national politics and then in turn influencing those politics. In what happened in Nashville, I'm sure most listeners will remember, there was a horrific shooting earlier this year at a Nashville Christian school, which led to a lot of gun violence protests in Nashville and a very contentious scene on the floor of the State House where two black legislators were kicked out of the legislature for protesting gun violence by the Republicans that control it. And it became, national news that this, heavily urban community, which wanted gun control and, measures to remedy these kind of awful shootings, were really being stifled and overrun by the Republican legislature. And the example that I use in the piece is there have been a series of police shootings of black men over the past few years, and Nashville had responded by creating a community oversight board of residents that worked with Nashville police to try and lessen these things, impose remediation measures, and where appropriate, help to single out and punish the officers that were breaking the law doing this. This is something that seemed to be working until earlier this year when Republicans came in and said, nope, we're not going to allow this anymore, and passed a law that simply abolished it, which upset a lot of people in Nashville who felt like this was working. And it's just one example of Republicans essentially stepping in and applying their values in places that oftentimes have a different set of political values. And so it leads to the kind of contention and culture wars that we see on everywhere from MSNBC to Fox News. And the fact that in a lot of these southern states in particular, Republicans have such a large majority goes right to your point that, yes, it really isn't a battle in a sense. That they're being forced to live, as one Democrat told me, under Republicans' alien culture.
Tell me about the national mayor, John Cooper in particular, because it sounds like politics is in his family. And he's not going to run for re-election. Talk to us about his frustrations
Yes, I spent a day with John Cooper, who is Nashville's Democratic mayor, not a bleeding heart liberal, a kind of a centrist, pro-business, practical Democrat with an MBA, who used to be a real estate developer and was elected in 2019 on a platform of fiscal discipline and economic growth that he had really hoped would appeal to Republicans and Democrats. And what's really happened is that we've hit the culture wars. I mean, there were COVID mask mandates and fights over that. There were fights between state Republicans in Nashville, which didn't want to host the 2024 Republican convention. And there's been a lot of fighting, even down to the level of fighting over street names in Nashville. Republican legislators tried to rename a street in Nashville that was named for the late Democratic civil rights icon, John Lewis, as President Donald Trump Boulevard. And, my sense being, with Cooper, I mean, on the one hand, his mayoralty has been a tremendous success. Nashville has recovered economically from COVID better than almost any city. The city is growing. It's lively. There are cranes everywhere. People are out and about. It's a great place to be. But on the other hand, it is in the crossfire of this culture war where Republicans are trying to do everything from take over the airport to the sports authority to cutting the city council to fighting over street names. And it's striking to me politically because throughout most of my lifetime, Tennessee actually had a reputation as being a very practical-minded, bipartisan state where it was sort of an example, like a positive example of what the political South could look like and how people of all backgrounds could work together. And now here we are, and that's been completely flipped on its head, not just in Nashville, but in cities across the country.
Well, talk to us a little bit more about what's going on in Nashville and why it's happening, and bring in John's brother Jim, right, who was representing, right, the Nashville area in Congress for 16 terms. You point this out in your you also talk about when a plumber comes.
Apportioned it among 3 other conservative districts, which essentially forced him into retirement. And it's a great example of just the win-at-all-costs mentality that is now like eclipsed what used to be the kind of practical-minded bipartisan cooperation that had marked Tennessee politics in the 80s and in the 90s. And, Cooper was the one that had said to me, we're in a situation here where we're almost like a colony in Republicans who don't live in Nashville, who have different views than people who live in Nashville, have come in and forced us to live under this alien culture. And it has caused a lot of grief and contention on everything from, as I said, gun control issues, police reform and oversight, to even the name of the streets, whether they should be named after Republicans or Democrats. And I think the distressing part about it for people in Nashville is that there's really no end in sight to this contention that anyone can see.
We've talked to mayors of cities, Josh, over the last couple of years in red states and blue cities. And one thing that they talk about is how during the pandemic, with the rise of remote work, you have people coming from California, people coming from New York, people coming from Boston, more expensive traditionally blue cities and blue states, and coming to these cities because the cost of living is lower and because the quality of life is higher based on what you get paid. I wonder, based on your reporting, and perhaps we can't even extrapolate this yet, but if we'll start to see demographic shifts as a result of the way politics is playing out in these places, will we see these cities become less attractive to people from outside of the city or from different backgrounds because of these things?
Well, that's the big worry that Mayor Cooper had. He has this incredibly attractive city, and it's not just because of Democratic policies. I mean, if you talk to people in Nashville, including Cooper, they'll say, look, there's this wonderful creative economy and there's a music scene. But Republicans have also pushed through policies like no state income tax, which make it, as you say, very appealing for people to live, even for reasons beyond culture. And so in a sense, it could be this wonderful balance of economics and culture. It could be very appealing and is very appealing based on the demographic and economic growth we've seen. The danger Cooper worries about, he said, if this culture war keeps intensifying, he said to me, does a software engineer from California still want to come to a Nashville that might seem hostile to diversity or creative expression or gun control? And I think that's an open question. As the two parties there battle it out, are they going to kind of kill the golden goose and take what is a wonderful city and what's long been known as the Athens of the South, and really kind of poison its reputation on the national stage as a place that's desirable for people of any politics to move to, for their families, for their jobs, whether they want to go to college there. Are they going to be able to kind of maintain the kind of appeal that they've had up until now?
Josh, just one last question, then we just kind of want to get you to weigh in on the recent debates, last week's debates. But you write about it, the policymaking power devolving back to the states. And we've seen, there's been cycles where it's really at the federal level where we see policy impact. And now it's back in, it feels like more increasingly in the hands of the states. Does it stay there, or who knows whether or not we see another shift?
Yeah, there's nothing in the Constitution of the United States that gives cities a lot of power. The founders didn't really, envision that. And from about the 1930s until fairly recently, state governments tended to defer to local governments when it came to policy making and that sort of thing. That's just changed over the last, 5 to 10 years. I think especially since the Trump era, as the partisan political wars have become nationalized, as things like local media have withered and disappeared, and people get all of their news through a partisan lens, whether it's MSNBC or Fox News. And what's happened is that the old idea that, you want your political leaders locally to govern in kind of the best interests of the city and its services and its businesses and its schools, and not necessarily, have it be the battleground for national culture wars, I think that started to vanish. And we're seeing the effect of that most clearly in places like Nashville.
Okay, so Carol came to me last week, Josh. I think it was Thursday morning, Thursday morning. She said, "Did you see Vivek Ramaswamy last night in the debate?" And I said, "Yes, I did. I stayed up very late and I watched the entire thing." Carol did too. Josh, what did you make? This is a hard turn here, but you follow politics. You wrote the book on Steve Bannon. What do you see playing out on stage? And what do you see playing out on stage later this month in September? Later next month, I should say, at the next debate.
Well, what I saw at the debate, it was interesting. I think it's sort of almost like a Trump 2.0 version of politics. I mean, the surprise wasn't that there was an outrageous provocateur attacking his opponent, steamrolling the moderators, and sort of preening for the cameras. The surprise is that it was Vivek Ramaswamy and not Donald Trump. So, he's the exciting new guy in politics. Like Trump, he's an extraordinarily polarizing figure. A lot of Republicans hate him. Some Republicans love him. But he has that Trumpian gift of making himself the center of attention. And so I think one of the questions going into the next debate in California is, will he be able to kind of maintain this attention, or is he kind of a flash in the pan, and maybe somebody else will stand out in the next debate? And for all we know, Trump could change his mind and be the guy that shows up and does just that. So we'll have to wait and see.
I kept thinking Trump was going to come in from the side of the stage. I just thought, oh my God, this would be the great, drama that everybody wanted. Having said that, Josh, who's running for president that was up on the stage? Who's running to be Donald Trump's running mate?
I think most of the people on there are running to get attention and raise their profile, but it's becoming increasingly difficult to see how any of these folks are going to challenge Trump because they aren't doing a lot to knock down his poll numbers. Ron DeSantis didn't really stand out as exceptional in the debate. I don't think he did anything to elevate his campaign. And a lot, most of the other candidates, including Vivek Ramaswamy, I think are also Rands. And if you're looking at this realistically, where polls are now and what they say about somebody who has a 40-point lead in the polls at this point in the cycle, the way Donald Trump does, is it's just very unlikely historically that the front runner is going to lose the nomination. And so if that's true, we're really talking about who might be his vice president. I thought Nikki Haley acquitted herself very well. Tim Scott seemed like a nice, likable guy. Vivek Ramaswamy, if Trump wants to, provoke and be even more controversial than he already is, maybe he could be a vice president. I don't think it will be Mike Pence for obvious reasons. I don't think it will be Chris Christie, who was on the stage and is one of his biggest critics. So in a sense, what we might be looking at is kind of the race for who will be Trump's VP. But at least notionally, they're all running for the top job. And so they'll just have to do a better job of cutting down Trump's poll numbers and lifting their own if they want to have a realistic chance at achieving that.
All right. We never have enough time with you, but we so appreciate all that you always give us. And looking forward to your reporting from the campaign trail on all of the individuals involved. Listen, Josh, thank you so much. So appreciate it. Of course, that was Josh Green, Bloomberg Business Week national correspondent, his story, the new special Double Cities issue. And you can check out more of all of his work. Just head to Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings after the close of trading. We begin with Lululemon Athletica. It has lifted its full-year outlook, citing advances in market share while underscoring how demand for the activewear brand is staying robust, even as consumer spending weakens in other categories. Lululemon after hours down now by 0.2%. Broadcom has forecast revenue for the fourth quarter. That guidance did meet the average analyst estimate, but after hours, Broadcom down by 2.2%. Dell Technologies up 6% after hours. Dell is reporting better than expected sales of PCs and data center hardware, fueling hopes of a recovery in the market for corporate technology. S&P 500 index ends the trading month of August at 4507 on to September, a move lower today by 7 points, down by about 0.2%. Dow Industrials down 168 today, a drop there of just about 0.5%. NASDAQ higher by 15, up by 0.1%. 10-year yield 4.10% with a 2-year 4.86%. Spot gold today down $2.50 the ounce to $19.40, and West Texas Intermediate crude up 2.4%, $83.56 a barrel on WTI. New Jersey Transit's locomotive engineers have voted unanimously to authorize a strike after years of contract negotiations stalled, but any potential work stoppage or disruption to services is likely months away as mediation plays out. I'm Charlie Pellet. That is a Bloomberg Business Flash.
On grass or clay and every day,
they're both okay,
but time is running short. Shall we say the ball is in your court?
Love it.
On grass or clay, they're playing it. It's not grass here, though.
Nope, not these days.
Nope.
Not these days.
One of the things, I don't know when it comes to, I don't know if grass could be better with AI. Do you think it could be better with AI?
Well, Wimbledon.
Yeah, I guess so.
Yeah.
Anyway, we're going to talk a little bit about AI, artificial intelligence. It permeates everything that we do, including what's going on here at the U.S. Open.
Yeah, the U.S. Open is actually harnessing AI through their partnership with IBM. So we've talked a little bit in the past, Carol, about player analysis and predictions that are powered by IBM. But here's something cool that the tournament is doing this year. AI-generated commentary for match highlights. So the USGA can quickly get the highlights out to fans around the world. You have hundreds of thousands of people come to this event every year.
Yeah.
But you have millions of people who actually follow the event at the USTA website and also through the app. And they need to get quick updates. And I guess my question is, are we going to be out of a job because they don't even need announcers anymore?
Noah's laughing. We're not laughing. Noah Seikin is with us. He's VP of Sports and Entertainment Partnerships at IBM. Once again, back with us on site at the U.S. Open. How are you?
I'm excellent. How are you guys?
Doing well. So tell us about this.
So AI commentary, there's a lot of tennis going on out here. There's 17 courts of action, but there's only commentators on 2 or 3 courts. We know Patrick McEnroe, John McEnroe, Chris Evert. Well, a lot of videos captured from those courts, and the USTA really asked us, how do we create a better experience for people who are seeing these highlight packages? How do we lay commentary on top of those packages? And so that was a great challenge. So when you go to the usopen.org this week or download the app and you see these highlight packages for every singles match, what you'll see is AI-generated commentary laid on top of them.
When you say commentary, do you mean just text on screen, or do you mean actual voice?
Yeah, voice commentary. So we'll provide a little texture about who those players are, maybe something about how they've played before, what countries they're from.
Does it sound like a human being, or does it sound like a robot?
Well, I don't know what a robot sounds like anymore, but your...
I am a robot.
That's what a robot sounds
Definitely not. Look, we all have our GPS or our little smart devices, and we have those voices, and it sounds pretty much like that. But what we're excited about, in addition to what we're doing today, we're doing English language. But if you think about the players that come out here, they're from countries around the world. They have fans around the world. So in next year, we'll be doing multi-language translation. So wherever you are in the world, you're going to get highlights in your language, which isn't available today.
How does it work? Like, what's the pool of information that it's using to do that, to make sure it's good? I'm sure you have people who are fact-checking and reviewing it. But how does it all work?
Yeah, so there's data feeds that come off the court, right?
Yeah.
And that captures all the statistical data from the court, from each competition. Then we use a large language model, which is the underpinning of our Watson X generative AI platform. That large language model knows language already. It's already been taught language. So what we teach it is tennis. What a passing shot is, what a winner is, what Arthur Ashe Stadium is versus Louis Armstrong Stadium. So it knows language. We bring in the data feed, we teach it what a winner is and all those different dimensions, and then we bring them together to generate the commentary. So it's the data coming off the court combined with large language model combined with teaching tennis to the AI.
I'm not being facetious with this question at all.
Tim is still worried, no.
But I'm wondering about personality. You mentioned, the McEnroe brothers, Chris Evert. Like, this is those people are great at what they do because they're great at what they do. I mean, their personalities come across. We know them by now. If you've been watching tennis, you know them. If you just watched the U.S. Open for 2 weeks, you get to know them. How do you give these bots personalities?
I don't know if personality is the right way to think about it, but reflecting on some of the commentators, if you were out here at 8, 9, 10 o'clock this morning, you'd probably see those commentators roaming around the practice courts. They know the players. They know the coaches, right? So there's texture that the commentators have. They probably have seen these players grow up, frankly. There's texture that the commentators have that the AI probably doesn't have. What we give is a little bit of inflection. So the AI knows what a break point is. So the commentary around a break point is going to have a little bit more substance, a little bit more flair, so to speak, than a different point. Or the end of the mat or end of the set. All of those different dimensions around tennis are what drives a little bit more inflection and texture in the voice.
How does generative AI change Watson?
Well, I don't know if generative AI changes Watson, but the Watson X platform is going to change how AI is able to be created.
Meaning what?
Speed and the availability of large language models. So, like I said, we use one of these large language models that was already taught speech and language. So it's already there, pre-baked. Right. Now, tune it to your task. Your task may be tennis. Your task may be creating a chatbot for a big bank to serve your customers better. So those underpinning development platforms have pre-baked models that allow for more rapid development, more varied use cases.
I keep thinking of the Jeopardy example, and I bring this up because you were very involved in all of this. And I'm just thinking, like, what did it take to make that work as well as it did? And now, how many years later, we're like, oh my God, generative AI. And I'm just curious how you guys are thinking about it and what it means, like the next level.
Well, look, yeah, I'm glad the world finally caught up to us. And the Jeopardy project.
I handed that to you. You're welcome.
I'm glad that the world
but I'm curious.
Caught up to that. But, it's really a whole different animal now from where we were, years ago. And people are concerned about, the challenging parts of AI. But the reality is, just like at the U.S. Open, AI is going to be assisting people. We're not replacing the commentators. We're adding new flavor. We're adding value into the white space, the courts that weren't covered. And I think that's how businesses are going to be thinking about it as well. How do I create new experiences that add value?
What's been the uptick in that, in terms of that you've done that, the coverage, right? You started it here.
Yeah. Oh, well, we started this actually at the Masters.
Okay.
We progressed it at Wimbledon. Now we bring it at the U.S. Open.
What kind of demand are you seeing it among?
So at Wimbledon, we saw over 2.5 million views of these videos, right? And we started with the commentary defaulted off. And immediately we saw people turning them on and wanting to hear this commentary, and so it went to default on. We try to take a little slow start to anything, make sure that the users are having a positive experience, and we saw that at Wimbledon.
Hey, Noah, the USTA and the U.S. Open, you've had this more than 30-year relationship with IBM, with them. How do you draw a line from the money you spend here to top-line growth at the company?
Yeah, well, one of my most exciting moments is when we're with a client or a customer and we share what we're doing. Well, how we created this engagement with fans or use large language models. And when the clients turn to us and say, we need that. We need to bring that into our business. That's a direct line between what we do here and a client saying, we need to work with you more deeply.
So what I'm hearing is upselling, not necessarily new customers.
I think it's probably a little bit of both. If you're experiencing this on a mobile application or a website, we get inbound demand. Like, I want to know more about that. Set up an appointment with one of our, experts. So it's a little bit of both, but certainly there's a big expansion that we see with existing clients.
When you think about kind of where it goes next, right? 30 years you guys have been working and developing different things to kind of have fun when the customer experience, your clients, the IBM customers. So how do you think about kind of where it goes? Like, what's next? What's after you're done? Your boss is like, hey.
I'm not a huge prognosticator, but I really just think about how productivity is going to be accelerated with these capabilities. Think about coding. Coding is going to be one of the first places. AI-generated code is going to, again, we talked about speed earlier.
Yeah.
If AI can help coders generate code to create new experiences more quickly, then businesses are going to be able to please their customers.
If Microsoft hadn't made that investment and announcement, would we be talking as much about AI, in your view? Would something else have done it, or would have? I'm just curious. Like, all of a sudden, it's not like it's new.
No, I don't know if it's a matter of the investment or not. I think it's a matter of when people touch these things, it just creates an extra level of interest. And I think some of the things we've seen with ChatGPT, where now people can literally get their hands on it.
Yeah.
If you have a college student trying to write a college essay, now they're having a very visceral experience with, how language can be used. But the reality is that trust is going to be really important in this era.
Agreed.
And using trusted data, and that's what we really pride ourselves.
We have a colleague, Matt Miller, man. He's on ChatGPT all the time.
I don't know what he's doing on that thing all the time. I don't know what he's doing.
Asking it everything.
All right.
Thank you so much.
Thanks for having me.
We always appreciate it. Noah Sykin, VP of Sports and Entertainment Partnerships. He's a busy guy here at IBM.
Well, let's get a check down on the latest world and national news. Denise Pellegrini in the Bloomberg 1130 newsroom in New York. Hey, Denise.
Thank you, Tim. Concern about the health of Senate Republican leader Mitch McConnell, who appeared to freeze up yesterday for the second time in public, continues. Bloomberg's Anne-Marie Hardern says this is all triggering some,
murmuring around Capitol Hill about who would take his position. Rick Scott, senator from Florida, who actually challenged Mitch McConnell for this leadership contest last year, was asked about this on CBS, and he said he sees that Mitch McConnell will lead them through the remainder of this session, and then potentially there'll be someone, he'll just have to wait. They'll all have to wait.
And Hardern there on Bloomberg Surveillance saying the 81-year-old McConnell is the longest Senate party leader ever. Capitol Hill doctor today saying McConnell has been cleared to return to work. Donald Trump pleading not guilty to Georgia state charges. He conspired to overturn the 2020 presidential election. Jeff Robbins, attorney and former chief minority counsel, U.S. Senate Permanent Subcommittee on Investigation, says be prepared for anything to happen from here.
Between decisions about venue, appeals of those decisions, motions to strike, all are part of the claims, appeals of those. The notion that this case is going to get tried when the DA wants to have it tried is very, very difficult to fathom. I think the way it will play out, there's going to be all sorts of twists and turns, and they will all be time-consuming.
Yeah, and proving what you just heard Robbins say about twists and turns, we have this breaking news coming in. The Atlanta Journal-Constitution now reporting a Fulton judge says, contrary to what some were saying, and what you might have heard, Trump court proceedings related to Trump and others, co-conspirators or co-accused conspirators, will be televised. Meantime, the Georgia case is one of 4 criminal prosecutions former Trump is facing. I'm Denise Pellegrini. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Big gains for Dell after the bell, up now by about 8%. Dell reporting better than expected sales of PCs and data center hardware, fueling hopes of a recovery in the market for corporate technology. Among consumer names out after the bell, Lululemon lifted its full-year outlook, citing advances in market share while underscoring how demand for the activewear brand is staying robust, even as consumer spending weakens in other categories. Turned out to be a mixed day, final trading day of August. Where has this year gone? It is on to September. S&P down 7 points today, a drop of 0.2%. The Dow lower by 168 points, down 0.5%. NASDAQ, the composite index, had a gain today, up by 15 points, up by just about 0.1%. 10-year yield 4.10%. The 2-year 4.86%. Spot gold today lower by just about $2.50 the ounce to $19.39. Drop there of 0.1%. West Texas Intermediate crude up 2.3% today. WTI now at 85.55 a barrel. So it is on to the jobs report tomorrow morning. Bill Stone is Chief Investment Officer at Glenview Trust. And right here on Bloomberg Business Week, he explained why the report is so closely watched.
As long as Americans have jobs, they like to spend, and as long as they spend, the economy keeps chugging along. You know, for all of our challenges, that's kind of the simple calculus of it.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download that wherever you get your podcasts. New Jersey Transit's locomotive engineers have voted unanimously to authorize a strike after years of contract negotiations stalled. Recapping, stocks little changed. S&P down 7, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovic live at the U.S. Open. We're just outside Arthur Ashe Stadium, having really a lot of fun. And when she's not here at the Open, although she is right now, she comes
every year
all the time with her family. She's usually pretty busy reporting on some really important stuff.
Yeah, she's got an educational angle, an economic one, and in the end, it's all about the big money in the form of college endowments, or the big moves that are happening when it comes to some of these colleges and universities.
A few moves today. Bloomberg News higher education finance reporter Janet Lauren here with us on site at the U.S. Open. Hello, hello.
Hello. Thanks for having me again.
We love having you here. We love seeing your family. They're on the sidelines. Some news today. Yale's president. What's going on?
Yeah, Peter Salovey announced that he is retiring after 11 years of leading Yale in New Haven, Connecticut, and he's going to go back to being a professor. You probably don't know this, but he was one of the people who developed the idea of emotional intelligence.
I did not know that. So why is he done?
Well, it's been a tough decade plus one in higher education. We had COVID. There's a lot of fundraising, and it's been a tough time. Finances are not so easy this year. We're going to talk about endowment returns. Last year was not a great year for endowments. So the Yale of the Ivy League schools was the only one that had a positive return.
So what is a typical tenure for a college professor? I mean, a university president, who oftentimes start out as college professors.
Yes, of course. They're always college professors. It used to be about 10 years, but lately we've been seeing a lot of retirements. Keep in mind, one of the biggest jobs is not teaching, which is the fun part for them, but it's raising money.
It's like, come on, that's all they do is raise money.
But right now, dealing with some big issues, affirmative action. Yale was not a litigant, but one of its rivals, Harvard, was. And that's what a lot of them are trying to figure out, how they're going to go about the next academic cycle where they're recruiting kids. You don't talk about race, but Harvard, their essay, they've changed their essay, and it's not going to be an easy time. Although, of course, they've been expecting this for the last year.
Yeah, it's funny that you say that. I was talking actually with Tom Keene, and he's got a daughter who's getting ready or starting to think about college and so on and so forth. But what's interesting is Chief Investment Officer. I don't know who we're hearing. Are we hearing somebody? You have to figure out, right?
Yeah.
We're hearing some Bill Stone earlier.
Oh, some Bill Stone earlier.
All right, they're going to get that fixed once we...
They're going to fix
We're going to keep talking to Janet.
We are.
Ignore the background
But
noise.
he was talking about that. All of a sudden, they're thinking about training for kids for SATs and PSATs again. I'm like, I thought they were done with that. And he's like, no, apparently colleges are finding that that's a good way of, a good metric to figure out if kids can do well at their schools.
Yes, well, MIT last year said we are bringing it back, and MIT is one of a few outliers. Many of the schools are still saying we're going to give it another couple of years. We want to evaluate how our kids are doing in their freshman year, but MIT is a place where you got to do the math and science in order to be successful. Purdue also announced that they are going back, and another school, Georgia Tech, only had the pause for 1 year of the requirement.
Is that going to be the trend, do you think? We'll start to see colleges bring it back?
It's unclear, especially with the affirmative action ruling. There's a question of access, and everybody knows that wealthier kids tend to do better because they have more resources for test prep. They perhaps have more time. And so we'll see. It's been very interesting. You know, Harvard announced about a year and a half ago that they were going to have a 4-year moratorium before anybody else did. And you kind of think, well, what do they know that everybody else doesn't know? And well, they were they were preparing for what was the inevitable affirmative action ruling a couple months ago.
It's getting harder and harder, right, to run a university system. Go back to, you were talking about endowments. So what are we seeing this year? Because they've had a tough year,
yeah,
right?
So this year we're hearing, 8.7%, which doesn't sound like a bad year, but then you throw in inflation and there's not really a lot left. And considering last year was, on average, was a minus 10% return, not such great times. So people say, but what are you talking about? Harvard has $50 billion. Yeah. How is that not enough money? Which is an excellent point. But they're used to spending a lot. It's constrained. If you get a gift for, the Yale hockey team, you can't spend it on a science building. So it'll be interesting to see. We know that most of these big endowments are in alternatives, in private equity, in hedge funds, and there's an influx, huge amounts of money chasing the same deals, and the returns aren't as great. And the smaller endowments this year actually did better. Look at the stock market; it was up 18% in that same period.
So when you have a college endowment that doesn't do as well as the benchmarks, how does it play out when it comes to admissions? How does it play out when it comes to investments that the college or university makes in terms of expanding the campus and access as well?
So, good question. They are going to say the same thing year after year. We don't look at the 1-year return. We're really more concerned at the 10-year return, but that's also constrained. If you look at some of the larger schools, like Princeton, for example, is a really good example. They've had stellar returns year after year, and they decided several years ago that they're going to show that they're spending their money, and they enlarged their class size. So I believe we're in the second year where they're enlarging. Each freshman class is bigger by several hundred students. They're building a brand new campus. If you walk in that school, around that campus, there's tons of construction. So they're saying to Congress, hey, we recognize we've got a lot of money, but look, we're spending it. Because don't forget, they were taxed, in the Trump tax era, 2017, endowments had the worst fear was being taxed, and they're still working on trying to repeal that.
Speaking of a tax, we do wonder kind of the impact. I don't know if this is apples to apples, but what's going to happen as we start to see students having to pay back their student loans, right? There's been a moratorium post-pandemic and during the pandemic, obviously, but that's going to change. And we talk about it a lot in terms of the economic impact. You've been writing about this as well.
Yes. So come September 1st, interest starts accruing, and come out in October 1st, former students will start to see their bills come. And it's a big change after 3.5 years. There has been no interest accruing, no debt collection, and it's you keep this in mind. If the U.S. government was a bank, it would be the 5th largest bank in America.
That's the stat that stuck out for us, I think.
So it's a lot of craziness within the education department trying to work with their loan servicers and try to let students know how much they're paying. And there's so many different repayment plans, and it's kind of confusing.
What's happened to the servicers over the last 3 years?
So a bunch of them have left. And Navient, the big one, is gone. Formerly Sallie Mae, and they've been consolidated among smaller. So it's kind of confusing when I believe it's at least 3/4 of students are getting a new loan servicer. The bottom line is you got to be in touch with your servicer and not wait and be proactive.
I feel like when we talk student loans, when we talk endowments, it's all just like
Janet,
tons of money.
They'll find you. That's what I know about these student loan servicers. They'll find you.
That's so true. Or they'll garnish your wages.
Back to that.
It happens. All right. Thank you so much. Enjoy the rest of the Open. Janet Lauren, of course, of Bloomberg News, higher education finance reporter, joining us here at the U.S. Open. Carol Masser, Tim Stenovic, and this is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet with a look at some of your top company stories. AMC Entertainment shares ended the day lower after initial gains on word that pop star Taylor Swift's recent Eras tour will screen in North American movie houses starting in October. Let's get more on the story now from Bloomberg's Erica Herskowitz.
Charlie, the pop star revealed the previously unannounced film
people would come up to me and they'd be like, "You're gonna just like do a show with like all the albums in it?" And I was like, "Yeah, it's gonna be called the Eras Tour. See you there."
Her tour is big business. It's expected to gross $1 billion. Charlie?
Bloomberg's Erica Herskowitz, be there indeed. Intercontinental Exchange can move forward with its takeover of Black Knight after the Federal Trade Commission accepted a binding settlement that will see key mortgage software products sold to rival Constellation Software. FTC commissioners voted today to accept the settlement. Dollar General shares plunged by about 12% today after slashing its profit forecast for the second straight quarter. The discount retailer said rising labor costs and efforts to tame inventory growth will crimp profit in coming months, and annual earnings will tumble by as much as 34%. So, turned out to be a mixed day on Wall Street as we wrap up the trading month of August. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We're live from Arthur Ashe Stadium at the U.S. Open, the 2023 U.S. Open. Let's get a check on the latest world and national news. For that, we go to Denise Pellegrini. She is standing by in the Bloomberg 1130 newsroom in New York. Hey, Denise.
Hey there, Tim. Donald Trump pleading not guilty, as we've been reporting, to Georgia state charges. He conspired to overturn the last presidential election, and the Atlanta Journal-Constitution is reporting that a judge says all court proceedings in this case against Trump and co-defendants will be live streamed and televised. President Biden, meantime, making an unannounced trip today to FEMA headquarters, and he has a long-distance trip planned, he says, after Hurricane Idalia's damage.
I'm going to Florida Saturday morning.
Florida, the hardest hit from the hurricane. Several fatalities from the storm throughout the region being reported. Bloomberg meteorologist Rob Carolyn says watch for Idalia to really fizzle out from here, though.
I think the storm is probably going to be drifting in the southwestern Atlantic off the coast of the United States for a couple of days. There's going to be strong upper-level wind shear affecting the system. That's probably going to prevent it from redeveloping. I don't think it's going to be a threat to the continental United States once it gets offshore. The only thing it may do is produce some swells, which will affect the beaches on the east sides of Florida up through South and North Carolina next week.
Meteorologist Rob Carolyn reporting there. The Biden administration has announced a $450 million effort, meantime, to fight opioid overdoses. Bloomberg's Nathan Hager has more on that.
White House Domestic Policy Advisor Neera Tanden says that money will go toward prevention, treatment, and recovery from opioid abuse, as well as a crackdown on drug trafficking. The Centers for Disease Control says more than 107,000